if you are going beyond that, then ITC hotels get dropped from the major indices, which is MSCI, Global and FTSE.
So they are likely to list within the next 20 days.
That will be the pressure on the management to do it, because if they want that, because once the stock gets dropped from MSCI, today ITC hotels is eligible to be retained in the MSCI and FTSE, but once it gets dropped from the MSCI, the inclusion takes at least 6 months.
No, and why would they want to do that? Because you have all the passive funds flowing
Exactly. So the passive funds will be selling of ITC hotels when the listing happens, because they will only retain the index stocks.
Yeah.
So that selling will happen once the listing happens of ITC hotels and they exit the indices.
So net. Price discovery has actually been a positive. You're seeing a 5% down compared to the Friday close, but if you look at the base price, it's actually a mild positive on the ITC stock. If you want to invest in ITC because of the hotels play, there's no chance of doing it anymore. That window has closed, and expect ITC hotels to list separately before the 26th of Jan because of the rules that dictated. So thank you so much for that, Sajid. But let's take stock of some of the companies which have given positive business updates. Well, there's some which are definitely nosediving today. Dabur is one notable one among them. But on the other side of the spectrum is Jubilant. The QSR giant is trading with strong gains in today's session on the back of strong Q3 business updates. Harsh is joining in for more. Harsh, people are chomping on those pizzas.
Well, yes, and overall QSR also buzzing because trends seem to be positive given the numbers that Jubilant has posted. 56% growth in terms of revenue, consolidated, standalone growing at 19% odd. But here's where the positive surprise came from. The like-for-like growth has come in at 13%. That's a key positive as per Daulat, who has released an initial view on it. Even in terms of store count, you're seeing good growth. 130 stores added this quarter. Now the store count standing at 3,260. Your Domino's additions in India alone account for 60 of the 130 stores added in this quarter. 2,139 is where that number stands at now. Turkey also saw some additions in terms of stock count, but essentially it's the top line growth of 56% on a console basis, as well as the like-for-like growth, which has surprised on the positive, because existing stores contributing to top line, and that is essentially where the growth is starting to be shown, which is what is really the positive surprise here.
Now, it's not just Jubilant. I think we must make a mention of Bajaj Finance as well, which has a positive view coming in from Nomura, but also the updates have been good. Top Nifty gainer, and one of the top Nifty gainers has been Bajaj Finance and of course Bajaj Finserv. What has worked for Bajaj Finance in the updates, Harsh?
Well, first off, the customer addition has been very, very robust. You know, they're guided for good customer additions of anything between 12 to 14 million, which is around 1.5 to around 1.4 odd crore customers to be added. They've done that over the last 12 months. So that has essentially driven growth, especially in the last year or so. In terms of customer count in this quarter, it's gone up by 5.5% on a sequential basis. So even the increase in customer count in this quarter is very, very strong on the higher base, mind you. The second one is the number of new loans which have been disbursed. Now, of course, seasonally, it's a strong quarter, Tamanna. Festive season always brings in a good cheer in terms of number of loans disbursed, but 25% sequentially off a low base, 22% YOY, very, very good. AUM growth also surprised on the positive, 6.5% on a sequential basis, around 28% YOY, again, very strong number overall, and it kind of sets Bajaj Finance up very well with regard to its guidance for the full year, which was 26 to 28%. They are nearly at the 28% mark on a full year basis. Q4, of course, will be the one which we'll have to watch out for whether it can meet that guidance or not. So overall, it's a very, very strong quarter. What Nomura on top of this is expecting is some amount of margin increase. That's what Citi Nomura are saying. Nomura has upgraded the stock, which is a key positive, at least for me, from 7,200 to 8,200. It's a 15% upside that Nomura sees even now on the counter. So extremely positive, an upgrade plus the numbers looking strong. So all of it playing in its favor.
Okay, thank you for that, Harsh. Focus on the BFSI space and some positives that are coming in as well. SBI Cards up more than 4%. Business updates have also been good. Nuvama has upgraded it to a buy rating from reduce earlier and seen a 17% upside. My colleague Mihika is joining in to tell us why Nuvama is bullish on SBI Cards.
Thank you for that. So Nuvama has upgraded its rating on SBI Cards from a reduce to a buy. It's also increased its target price to 850 rupees versus 620 rupees. So when you talk about, the implied potential when you compare to the previous closing price, the new target price implies a 17.5% potential upside versus a 14% downside that the earlier target indicated. Now, why has Nuvama updated SBI Cards? Well, it's based on the back of improving credit cost outlook. Just to note, credit cost is basically the amount spent to maintain credit quality, and this was a key driver of the company missing estimates in the past. But Nuvama states that the credit costs have likely peaked in Q2 FY25. They expect the credit costs for SBI Cards to be stable in Q3 of FY25 and start improving from the fourth quarter of the financial year. They also expect the credit cost trajectory to improve because their weak credit cost cycle came in much earlier when you compare it to peers. Lastly, Nuvama has also stated that the October 2022 RBI master direction regarding credit and debit cards did negatively impact the company's income. However, the full impact has been fully captured in FY25. And lastly, the key positive trigger that could be a boost for SBI Cards is any potential cut in RBI's policy rate.
Thank you so much for that. I think another stock that we should focus on that is buzzing this morning is EaseMyTrip. We spoke with Nishant Pitti, the chairman, a short while ago. That stock now about 7% up. The reason is a sort of a clarification and rejig in the top deck that EaseMyTrip has done. Nishant Pitti is now the chairman. His brother will step in as CEO on a day-to-day basis. And we also asked him about his claim that there will be no more promoter selling. He talked to us about why there was this extent of promoter selling in the first place. Listen in.
As I mentioned before also, we were still, if you compare, tell me one company in the e-commerce space, in the B2C segment particularly, who still have 50% promoter holding. You will not find it. All the companies which are into e-commerce space have to dilute their stakes just to raise money. And we are bootstrapped and a profitable since inception company. So it was certain things which are being required by the family. So these are the things which have been done. So there are no more further selling, and the expansion part is on the way. The companies focus on sending international presence and exploring new markets while also strategically acquiring this complementary businesses to accelerate our growth. This dual approach allows EaseMy to diversify its offering and expand its global footprints, positioning itself as more comprehensive travel solution provider across the globe.
All right. Vikas Khemani joins us now on Talking Point this morning. He's founder Carnelian Asset Management and Advisors. Vikas, very good morning to you, and great to speak with you here on NDTV Profit. Are you feeling the 2025 vibe yet, or is the 2025 vibe unfortunately not very positive at the get-go?
Morning, Tamanna. Wish you a happy new year. So I think, of course, we have to start the year, going forward. We have to look forward. So 2025 already started, and I'm sure, a lot to look forward to. Like every year, I am an optimist. I keep looking for things in a very optimist way. But just turn of the calendar doesn't change much. You have to do the same work, keep looking at the businesses, keep looking at the managements, and keep identifying companies. So work doesn't change, just, year changes.
No. So having said that, Vikas, curious to know what you've made of the business updates that have come in so far. And let me start with BFSI, HDFC Bank, and a whole list of financials which are coming in. I would say that the good thing is, perhaps, or what's working for them is that expectations are already low. But do you see this as a further negative, the initial updates that you've seen, especially in HDFC Bank, where you see a growth of 3% year on year?
I think, in SDFC's case, we know that they have to go through this transition. There is no alternative to that. And I think we've been saying this for 4 or 5 years. And, this will still go through for some more time. but it is not industry specific. It's a company specific thing, and what they are doing is right for the company. But in general, specific, I think last year banking and financials were not as great, especially the banks. I think this year would be probably much better than last year. Most of the pains is behind. A lot of like you rightly said, expectations are low. But our largest holding, in banking space is ICICI Bank, which has done well throughout last year. We own Federal Bank, which has done very well last year. So out of top three, performing banks, we own two. So I think again within the same sector, you got to find company which you like, and I'm sure there will be winners within this space as well. In 2025.
In terms of IT, and let me talk to you a bit about IT. TCS reports this week, Infosys next week. IT turned out to be one of the dark horses, I would say, in a sense, for 2024. If I look at it overall, you're looking at an interesting time next few weeks with Trump coming in, etc. Would you say that the turnaround that the street has been waiting for in IT is finally coming in, Vikas?
We've been quite positive on IT sector for many years, including last year. Like IT was one of the very well performing sector for us in our portfolios. It contributed to significant alpha. So I always believe that real money is made when you talk about beyond narratives. I think IT has a lot of legs to grow. I think people look at set of 3-4 companies and say IT is not doing well. But within IT spaces, there are many companies which are growing at 15-20%. Last year we owned Cyient, eClerx, Negen. So I think a lot of companies have been kind of, which has done very well for us. So, and I think IT as a sector has long legs to go. Very clearly, three things. IT in India will continue to do well. There are three drivers: constant technology disruption, aging population in the global parts of the year, and our market leadership. If you see this, they are not changing, and they will continue to provide significant growth. And in my opinion, IT is a very sticky, nice, safe sector to grow. And as US environment changes, as the growth prospects with the new administrations get better, I think it can only get better from here, according to me.
IT can only get better from here, according to Vikas Khemani. But then would you go for the top line IT names, the big three or the big four, or would you look at more mid-cap kind of names?
Like I said, I think you look at individual business models where you can get conviction around growth of 15 to 20%, which probably large companies might be finding it hard to sort of deliver. So again, you pick you don't have to necessarily go after the large companies. Within that, last year what did well for us was HCL Tech Mahindra. They are large companies. So not necessarily, each companies go through its own transition. We've been focused where there could be, significant higher growth than the industry. And they tend to be a lot more in the tier 2 or slightly smaller companies. But again, not to say that large companies cannot grow. We keep studying every company, and whenever we see the growth is accelerating, we will buy that.
I'm wondering, Vikas, how are you looking at the big ideas in the markets this year? For anyone managing funds, I think this is a tougher time because you have to, first of all, I suppose, manage expectations. What are you telling your clients? What is the conversation and the questions that you're being asked right now? And what are the kind of returns that you're seeing possibly in 2025?
Tamanna, you raise a very, very pertinent question. In my opinion, right now, the biggest risk in the market is the risk of high expectations. I think given the fact in last 3-4 years we have done very well, investors' expectations have gone up significantly high. Investors have started believing that 20% return is very easy to come by, which is not the case, which is not a normal case. You might get in a pocket, but you can't get sustainably for a very long period of time. So I would again say that biggest risk is risk of high expectation. And given the fact that we are on a backdrop of a very large run-up and slightly challenging macro global environment, probably this year could be slightly muted, or at least I would say keep the expectations low, invest with the low expectation, and keep the risk bar high. And at the end of it, it boils down back to identifying companies which can grow given the environment. Like I just said that, when whole street has been saying IT is not doing well in last 3-4 years, we have had many 5 to 7 baggers in our portfolio coming within the IT sector. So I think, the real money is made in looking beyond narratives, identifying companies, identifying management which can deliver better growth. And that is where I think, firms like us, people like us play a big role.
Managing growth and creating wealth beyond what you've seen in the last 3 years becomes very, very key, and that's important. Having said that, what in your view are 2 or 3 of the strongest segments that you're seeing in the market and 2 or 3 of the weakest? And let me be more specific. Do you think that consumption, FMCG is going to have another weak year? The Q3 updates are definitely not looking exciting, except for some exceptions in QSR, etc.
So first of all, I think I must say that this narrative of that consumption slowing down, we don't agree with that. We wrote a note last month on that. I think there is a change or disruption which is happening in the consumption patterns. People are no more consuming the way they were consuming. And so whenever this narrative is created by the large incumbent players, but if you see, again, example I like to give you have the real estate sales all-time high, wire and cable sales growing 20-25% plus, and tiles not growing. I mean, there's something not matching, right? And because there are new, smaller players, unorganized players coming and, taking away the market share. Same way, whether it is in paints where new players are coming. Same way, I think in biscuits, other players are coming. So I think there is a sort of change in the industry structure which might be happening, but that does not mean that consumption is slowing down. You got to look at the companies which are kind of taking away that market share or are doing well. And that is our approach on that. So in fact, this year, first time in last 5 years, we bought consumption stocks and they have done well so far, very well. So again, I would again repeat that the real money lies in looking at beyond narratives. This narrative is set by few people, not necessarily, true for the whole industry. The opportunity is always there. As far as the sectors are concerned, I feel in 2025, probably 2-3 sectors where we think real opportunities would be, especially one is banks, given the 24 backdrop. 25 may not be as bad, and you will see 15 to 20% return coming from the banking BFSI space. I think all the concerns will settle down probably in Q1 or Q2, but from a calendar year perspective, it might do well. Second, I think pharma and healthcare, in my opinion, will continue to remain very, very promising sector in 25. And manufacturing segment, which is though very wide, but within that there will be many opportunities, many ideas which one would be looking at, and I think that sector we've been bullish for some time, and I think 25 will continue to remain positive. Of course, you have to look at the right segment, right company again in that. So these are the 3-4 baskets where we think that a lot of opportunities will lie. Having said that, you keep looking at everything. It's not necessary that this is only place where the opportunities will be.
Do you see a big opportunity in the second term of Donald Trump? Do you think that this is going to be a big factor one way or the other? Vikas, how are you looking at it, and the India opportunity specifically?
India is a great opportunity from next 10-20 years perspective. We are in one of the best wealth creation cycle. There's no doubt on that. Amrit Kal, is a period where we will go towards $29-30 trillion of GDP. And in this period, many US elections will happen. US presidents will come and go. Good news is that Trump administrator, generally is positively disposed towards India. Trump is talking about growing, US economy, putting US economy on the growth trajectory, which is again good for India. So I think net, I don't see any negative coming from US towards India. If US economy grows, it will be good for, all the APO space or IT space. So generally speaking, US doing well is good for India. And of course, there will be periods of consolidation, there will be periods of correction. I'm not ruling that out, but I do believe that India is reasonably well placed even in a geopolitical perspective.
That's the big takeaway. But, Vikas, before I let you go, and I know you don't like this to mention any specific company, so I won't force you to, but your top idea, your big one top idea for 2025.
That's India.
Yeah, but that's too broad-based, a little more specific than that.
Within that, I gave you 3 sectors. What else you want? You know that I don't say names, so then...
Yeah. Okay.
But I think, still, I only say that the best idea which can help your viewers is, stay invested, keep expectations low, keep the risk bar high, India continues to remain very well, great opportunity. Stay invested. Don't change your equity allocation.
Yeah, don't change your equity allocation. I think that's an important point coming in from Vikas Khemani, founder of Carnelian Asset Management and Advisors. That's all the time we have on India Market Open. We'll take a very, very short break, but coming up next is Ask Profit. Stay tuned.
On my face.
How do you define a disruptor?
The idea was, why should we charge differently? We should probably charge the same.
Was the idea to change things down?
People would be scared to put 50,000 rupees with us, right? But we have customers who put 500 crores with us.
What was your biggest challenge?
Did not have enough money in the bank to even meet the payroll.
What are the lessons that you've learned from the mistakes that you saw being made?
Didn't want to dilute their stake and therefore, ran out of cash.
Think you know what success looks like? Think again. Meet the disruptors, those who dare, dream and defy.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first trade to buy
all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target. It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready. Hi, thanks so much for joining in. You're watching Ask Profit on NDTV Profit. My name is Alex Matthew and with me is Anushi Vakaria. We'll take you through the next 1 hour of trade. Let's very quickly take you through how the markets are faring this morning, and it's a bit of a wobbly start, and this is reflective of what you're seeing across the board in the global markets as well, as you see quite a bit of chop and churn on the equity benchmark here, the Nifty 50, of course shuttling between gains and losses, giving up those early gains to trade currently in the red by about 0.2% or thereabouts. The broader markets have languished a little bit in trade today and continue to do so at the low point of the day. Right now, you have the mid-cap index and the small-cap index down about 0.9% each. The market breadth tilted very firmly at this juncture, I would think, in favor of the declines. And if anything, that has only widened over the course of the day. Let's pull that up. There you go. It's very clear. You can talk about it as the widening mouth of a crocodile, if at all, and that seems to be the case, and maybe that will continue for the rest of the session. One thing stands out, and let's look at the contributors on the Nifty 50 just to give you a sense of how things are going, because there are few stocks, a handful of stocks that I saw, the likes of HDFC Life, a couple of the metal names that lost quite a bit of ground from the high point today, losing over 2% each. ITC I'll come to in just a bit. Of course, it's gone ex demerger today, so ex the hotel business today. And let's pull up the chart just to give you a sense of what exactly is happening. The price that was settled at was 455. So at this juncture, it is actually trading lower than the price that was settled. Don't, of course, look at that ticker at the bottom to say 6% because 26 odd is what the price reduction on account of the ex demerger is what took place and the price that was settled at, and from that point also it's trading a little lower. Short while back it was trading above that price. Let's see where it settles. But there are a few more stocks that stand out, and I'm going to ask you to restrict it to only a couple, even though we have so many to talk about.
So many business updates in focus today, but we'll just focus on a handful of these names. Before I go to the business updates, I just want to quickly address ITI Limited, an interesting one, seeing about 11 to 12% of gains in trade today. In fact, over the last 6 months, if we see, it's about 67% of gain in trade. So strong mover in terms of where this is. No fundamental views as of now, but it's been in focus on back of couple of order wins. Other than that, also we have Nykaa, stocks like Nykaa and Jubilant Foodworks in focus. Nykaa up over 5%. This is after it reported a revenue growth higher than the mid-20 numbers as well. And Jubilant, we saw about 50% plus growth in terms of where the top line is concerned. So interesting as far as that goes. Another quick one, Macrotech Developers saw about a 32% growth in its pre-sales numbers. It is one of the top performing ones in the Nifty Realty Index also. So this is as far as where the top stocks are in trade today. So a couple of interesting names that we're looking at, Alex.
No doubt. All right. So, and quite a few names in the banking space also standing out, not least of which HDFC Bank we were focusing on at the start, but quite a few of the public sector banks languishing in trade today, something like a Union Bank or Bank of Baroda, all doing a little bit or looking a little worse for the wear at this juncture. Bank of Baroda, of course, losing about 3.7% as we speak. Saurabh Jain, Equity Head Research at SMC Global Securities, and Nilesh Jain, Head AVP Technical and Derivatives Research at Centrum Broking, joining us. Thanks so much, gentlemen, for taking the time. And Saurabh, I think I've spoken to you after the start of the new year. I'm going to wish both of you anyway Happy New Year. Nilesh, it's the first time I'm speaking to you in the new year, so thanks so much for taking the time. I believe we've got our first caller for the day. We've got Shankar from Chennai who's called us. Good morning, Shankar, and Happy New Year to you. How can we help you today?
Good morning, sir. Very Happy New Year.
Thank you so much. Please go ahead.
Sir, I bought 600 shares of most cheap semiconductor.
Okay.
At the rate of 27 rupees.
Okay.
Last 15 years back.
15 years back.
Yes, 2007 or 8.
Wow. Okay. And you
I
bought
am
it
ready to hold for another 10 years.
Okay. All right. But
what is the outlook and target for that?
I got your question. Can you help me, Shankar, as to what you thought when you bought the price of when you bought the share at a price of 27? You must have studied the company at that time, and you've clearly had quite a lot of confidence in the company, considering that you've held for the better part of 15 years.
Yes.
What did you see in the company at that
the same time, I want to share one more. Past 1 year or 2 years, it will rise.
So, okay.
It's also one of the reasons I am to hold.
Okay, understood. All right. I kind of got your question. Thanks so much, Shankar, for asking. I will go to Saurabh on this one. Saurabh, MOSCHIP, and a lot of people trying to bet on the semiconductor story. Of course, when it comes to India's fabricators, we're still pretty low on the value chain, right? It's going to take quite a while for us to build up to the capability of what is displayed in, say, Taiwan. But the move has been made. Would you stay invested in MOSCHIP?
I think it is a very small company, Alex. I think the market cap is now 4,200 crore. But if you look at the valuation, I think it is trading 15 times to book value with negligible profits. I think a few months back, the company has won some order So in that sense, I think the company is doing pretty good job, but it is yet to convert into revenue and profitability. To my mind, the stock is priced to perfection, but he's holding for last 15 years, as he said. I think if he can hold for next 5-10 years, then it can be it makes sense to hold.
Okay, so a hold for Moship Semi is what we are looking at. The next question is for the capital goods sector. Now, the next question that we are looking at is pertaining to what can be for Thermax. This is from Kailash Nath from Trivindaram. He has about 50 shares of Thermax and wants to understand the 1 to 2 year perspective on this one. Saurav, I'll come back to you on Thermax. In the last 6 months, we've seen the stock underperforming the market. A lot of emphasis now on Q3 and Q4 in terms of how the capex is going to be from the government side. What is your outlook on something like Thermax for the longer term play?
I think lack of capex is the only thing which has resulted into some kind of underperformance by the capital goods sector. But I think now with the election gone by, the private and government capex will come to the fore. And normally second half of the year is actually good for all the industries. In that sense, I think the things will surely pick up. With regards to Thermax, it's very old and good company. I think numbers will surely improve in Q3 and going in Q4. So in my opinion, it is a hold.
Thermax, all right. And it's had a little bit of a torrid time over the last month, but nonetheless, on the long-term fundamentals, it looks strong according to Saurabh. Tejas Network is the name of the counter we're talking about next. And this is a question from Ekambaraya, who's writing in from Hyderabad. He's bought at an average price of 1,278 and he's got 100 shares. He's incurring a bit of a loss, Nilesh, and he's wondering whether he can buy at the current price. The stock is currently trading at 1,168 or thereabouts. Would you buy right now?
Well, Agam, the overall structure, sorry, Alex, so the overall structure is not looking that promising. Today, it has broken down below its 200-day moving average, and in the previous month, it has been one of the underperformers as well. So overall, the structure is indicating that there will be another leg on the lower side towards 1140 or maybe 1120 might be tested. So better to, avoid taking any contrabet as of now and let the counter stabilize. I think somewhere around 1050 it may find some amount of support, so better wait for some confirmation of a trend reversal. As of now, the trend looks weak.
Interestingly, okay, so that's the view. The trend looks weak on Tejas, just to round up that question, and hopefully that answers your question. But we've got a few people asking about ITC, so let's address that. And this is a question coming in from Gul. He's writing in from Kerala, and he's asking, is it okay to buy ITC shares today, or will the share price drop further? Saurabh, we've seen the special pre-open session to identify the price X hotels business for ITC today. It settled 26 rupees lower and it has dropped from that price. So indeed, Gul's question is a pertinent one right now, because people were talking about the fact that ITC will have a holdco discount, at least when it comes to that hotels business. But then of course it has its primary business in the form of its cigarettes business. So is there a possibility of further downside from here, and what would you do? Would you be a buy in ITC?
I think you cannot ignore the short-term selling when such events unfold. Normally, what happens, you may see some more selling coming in. Normally, what was earlier perceived like there will be a cut of approximately 15 to 20 rupees, because that business was valued for 150 to 200, anywhere in the range, but the stock got opened 26 rupees down. I think it's short-term selling in what comes to my mind. I think one can buy ITC, but one thing is for sure. I think if one can wait till budget, because there is some news that maybe government is inclined to inch up the excise duty on cigarette. If that happens to be the case, then we may see more selling. Otherwise, the business is good. In my opinion, one should wait till budget before getting into ITC.
Okay, I believe we've got the next caller. We've got Jayesh calling us from Pune. Good morning, Jayesh, and you've got a stock that you've bought, Zenith Steel. Can you tell me about this company? I'm pulling it up as we speak.
Yeah, hi sir. Good morning.
Good morning.
Actually, I want to know about this stock. I have the quantity of 1960 at 9 rupees 14 paise. I have bought it.
Yeah.
Actually, I want to know, is it a long-term investment or it's a swing trade kind of thing?
Okay, can you help me as to where you came to know about this company and why you invested in it? I'm pulling up the company as we speak, and I'm just trying to figure out what it does, because it is a penny stock at the end of the day. So what do you to it?
Actually, I came across one screener, so that's the reason I thought I just checked the fundamentals, but it was very weak. So
it was weak.
For a swing trade, I would like to prefer your advice, sir.
Understood. So, okay. So therefore, is it right to assume that your hope with this is that it will turn a profit in a short period of time, Jayesh, and that's why you bought it?
Yes, sir.
Okay. So you plan to hold for less than a year, right?
Yes, sir. Yes.
Okay. Nilesh, what would you say about this company? I must confess, I'm not very familiar with it. Is this strategy appropriate? And thankfully, the stock is not deteriorated too much from the buy price. So if he needs to exit, he can do so without too much of a dent.
Well, Alex, as you mentioned, there are no fundamentals, and I would say there are no technicals as well. The stock has been trading on upper and lower circuits in the past, and I don't see any swing trade kind of a situation in this particular counter. There are better options available in quality names. Within Nifty 500, you will find a good stocks. But as of now, Gen still it's an avoid. And if you see any pullback towards 9.10, 9.15 near your buy price, I think that's a good exit point. Better to focus on quality names and do not chase such penny stocks. Not advisable at all.
Okay, so definitely a sell call coming in for this penny stock that we are looking at, which is Zenith Steel Tubes. Next question is from Natasha from Goa. She holds about 58 shares of Northern Arc Capital, and this is at a price of 341. Now, if we pull up the stock performance of this, since the listing in September 24, we've seen about a downtick of 27% in this stock price. So currently the viewer is sitting at a loss of around 6,700. Saurabh, I want to come to you on this one. What is your view on something like Northern Arc Capital, if you can give us more perspective on this, whether she should continue to hold or sell in this?
Won't be able to comment on this.
Okay. Then can you comment about the MSME lending space, where there seems to have been a little bit of trouble, and Northern Arc is primarily in that space. It is also diversified into the commercial lending space. So all of those areas, there were a few question marks about delinquency. So from that perspective, is there something that you can tell her that will give her a little bit of advice, even if you can't give her specific comments on Northern Arc?
Generally speaking, MSME segment is facing pressure in terms of rise in delinquency. There is a steep rise in the delinquency and the NPAs, and the profitability has also gone down. And these companies are now facing real pressure to grow their business because the recovery rates are also going down. So generally speaking, all the MSME companies, if you look at in the last few months, have been underperformer. So if that in this context only, Northern Arc Capital is also coming down, cooling off 20-30%. I think it is better to get away if you see any kind of bounce.
Well, Natasha, I hope that answers your query on the overall industry perspective. But next we have a caller joining us, Jay Shanti from Chennai. Hi Shanti, how can we help you? Yeah, you're audible. Can you talk to us about your query?
Okay. No, I think we're having a little bit of an issue with Mr. Shanti's line. Hopefully we can get him back in just a bit. I believe the question was on AppTech. But let's move to the next one. Yash has got a question.
Yeah, absolutely. So the next question is from Yash. He's writing from Gurgaon. He's holding two mine company shares since last 3 years. One is Alkyl. This is at 85 shares at a price of 2,975. And Balaji Mines, 37 shares at price of 3,147. Requesting a fundamental view on both these shares. When will the sector revive and some meaningful returns if that could be expected? Saurabh, coming to you on this, an industry perspective is what he's looking for, and his fundamental take on two of these companies, which is Alkyl Amines and Bajaj Amines. If you can share a perspective on that.
I think these chemical businesses are really some tricky business, and there is a lot of volatility in terms of seasonality. So in the last few quarters, we have seen that the profitability and the pricing of the chemicals in which these companies deals is cooling off, and the demand is also was also worry factor. Now, I think there is an expectation that the cycle will surely bottom out and things will improve in terms of operational performance. So, in that context, I think one should wait because the valuations have already subsided. Now, these companies are trading close to 6-7 times or to book value. And from the peak, they have the correction. The correction is quite huge. So, in my opinion, I think one should wait for the December quarterly earnings and the management guidance for the ensuing quarters, and then take a call.
Okay. Just wait for some more updates is the view from Saurabh on the fundamentals. I believe we've got a caller. Sanjay is calling us from Karnataka. Sanjay, good morning and thanks so much for calling us. What would you want to know about today?
Hi sir, good morning sir. I'm from Mandya, Karnataka. Namaskara sir.
Namaskara. How can we help you today?
Sir, Waaree Renewable Technology, under stock.
Okay.
Average price of 1290.
Okay.
Stellar hold, sir.
Okay, and what is the time period that you have, Sanjay? You want to hold
6 months.
6 months.
Sir, 6
okay.
months.
6 months. So you're in the profit right now, and you bought at levels of 1290. Stock price is currently at 1333. Do you want to buy more, or do you want to hold only this much?
Sir?
You want to buy more, or you want to hold only this much?
Sir, 6 month old period, sir.
Got it. Okay. All right. Nilesh, I'll come to you on the technicals. 100 shares bought at 1290. Would you hold or sell at this point?
Well, at this point, it looks like more sort of a consolidation with slightly negative bias. So I would rather wait for a pullback towards 3200 to 3400. That can be a good exit point. But as of now, it's a hold, and one can keep a stop loss below 2600 because that's the immediate support for this particular counter. I don't have much of data because it was a recent listing, and whatever data I have, I think the stock is likely
we're
to...
talking about Waaree Renewables, right? Waaree Renewables, 1333 is the current market price? Yeah,
sorry.
so the buy price is
engineering.
Yeah. So the buy price is 1290. The current market price is 1333. He's in the green. He's asking, should he hold for another 6 months?
Right, so Waaree Renewable, I think, yes, I've got the chart as well. So stock is in a downtrend since a long time. After hitting highs near about 3,000 in the month of May 24, the stock has been in a continuous declining trend, making a low top and low bottom formation. The overall trend is still looking weak, and we may see further downtick towards 1200 to 1150 as well. So better whatever pullback you get, try to exit from the long position. I don't see any immediate trend reversal on this particular counter. If somebody wants to hold it for a little positional perspective, then one can keep a stop loss below 1250. That's the immediate support for this particular counter. And I would, I would take an exit call if at all it reaches 1600 to 1650.
Okay, so a sell call is what we are looking for Waaree Renewable Technologies. But now the next question is from Abhishek from Mumbai. He wants to understand the view for Zomato. Now it's been in correction mode since this last 1 month or so. In fact, we are looking at about 10% of a downtick he holds. If you look at his portfolio, he holds about 5,000 rupees profit in this one. Wants to understand whether it's a right time to book profits. Nilesh, I'll come back to you on this one. What is your view on Zomato? Do you think the recent correction is a good entry price, or he should rather book profits now?
Absolutely, Anshi. So recent correction, I think, is a good opportunity to accumulate this particular counter because the stock has given a good run up near about 305 to 307. And since after that, we are witnessing some profit taking. Although there could be possibility of a further profit taking to continue towards 260 level. But ideally, one should buy in the range of 250 to 265. That could be a good entry point. One can keep a stop loss below 240 because 240 is a double bottom support for this particular counter. So as long as it holds above 240, the overall structure is kind of a buy on decline, and a position target for particular counter comes around 300 to 350.
Okay, 300 and 350 is something, the levels that we should be watching out for Zomato. Now next we have a caller joining us. This is A.N. Sharma from Hyderabad. Hi Mr. Sharma, I hope I'm audible to you. Can you please state your query?
Yes, I'm A.N. Sharma here. I'm calling from Hyderabad. I'm holding 10,000 shares of Jaycrop Limited. So I'm holding it at 360 rupees. Recently on the 1st of January, there was disclosure of selling of land stake in Navi Mumbai, which the company was holding 2,200 crores, and there was no further update. So I just want to know whether I should hold or add, or what do I do with Jaycrop stock?
Yeah, that's a pertinent question, Mr. Sharma, and indeed a lot of investors are asking this question at this juncture, and I see that you are making substantial losses. What was the intention, and when did you buy this stock? You bought this stock when everyone was talking about the prospects of the SEZ, right?
Yes, last year I bought it when the Atal Setu was been inaugurated by the Prime Minister Narendra Modi for Navi Mumbai SEZ.
Yes.
So based on that information and the news and the Navi Mumbai airport coming up,
yes.
So I bought this stock at 360 rupees last year.
Okay.
In 2023 December, in fact, I could say.
Got it. Just a clarification, Mr. Sharma, so that my expert can give you the best possible advice. Is this part of a larger portfolio of stocks? Is this perhaps less than 10% of the value of your portfolio?
No, it's a larger part of my portfolio. I kept on adding this as there was a information which was being floating from the government about the Navi Mumbai SEZ, which was to be, and the airport to be inaugurated shortly.
Okay.
So based on all, I kept on adding it, looking at the prospect of the particular stock and the appreciation which I could get. And I kept on adding it. So hence my average is about 360 rupees for 10,000 shares which I'm holding.
Understood. And you are incurring quite a bit of a loss. Let me try and get you the best possible advice. Saurabh, a loss of as much as 15 lakhs at this juncture in this one particular stock. And you heard based on the prospects that he thought would emerge eventually, he has continued to add. But we know what the latest is. There was a deal that was struck. Reliance Industries set to buy 74% stake from that consortium at about 1,600 odd crore rupees, valuing the entire land, 5,200 acres, at about 2,200 crore. There are some that have questioned this already. And since that point, the stock price has been taking a battering. Would you sell at this point, or would you hold with the hope that there will be a recovery?
See, I think the market perception was that the land will be pricing close to 5,000 odd crore rupees. And after this, when the SEZ will be built and the airport operations will be done, these companies will be able to make a good amount of money by doing infrastructure activity on this piece of land. And now with this news coming in, the pricing of the land is actually halved, and that is the reason why the shareholders are selling this company. And now one thing is a possibility that some money is getting into the Jaycrop also, which may it is only a expectation that maybe Jaycrop will come out with some kind of a special dividend, which will enthusiast some of the investors and may cheer up the stock price. So in that sense, I think one should wait for a while, because the damage has already been done. I think maximum damage has already been done. So in my opinion, I think wait for some time, look for some kind of more news coming from the management.
Okay, so wait and watch is the approach for Jay Corporation over here. Next query is from Neena from Kerala. She is holding about 200 shares of Kolte Patil Developers, and this is at a rate of 350, currently sitting on a loss of 460. Now, she understands that the quarterly results last time were negative, so whether she should switch to some other stock or wait for a rebound on this stock. Her time frame for the same is for 1 year. Saurav, I'll come to you on this one. Kolte Patil Developers, if we look at the Q3, before this quarter also, the launches are expected to be on the weaker side, but Q4 we expect a strong bounce back. What's your view on something like this?
I think whenever the quarterly updates comes, people usually look into what kind of sales activity is happening and what are the new launches. In that sense, I think Kulte Patil failed to cheer up the investor, and that is why the selling is coming up. So, in my opinion, I think wait for one more quarter. Usually, things go up in the quarter three and quarter four, and then take a call.
Just want to point out on the point of the acquisition of Jacob. Of course, the advice was to hold based on the fundamentals, but remember that you should not have too much of a concentration in any one stock. This is standard practice. Even fund managers have a restriction of about 10%. This is, of course, regulatorily enforced and I'm talking about mutual fund schemes. But there's a reason for that. Of course, the prospects for outsized returns in any one stock is tremendous, but also the prospects for tremendous losses. And you could see a large amount of wealth erosion in a very quick period of time, as has been the case. Look at that, 45% over the course of just about a week and a half to 2 weeks or thereabouts. And it's quite sudden and quite sharp. Very little that you can do in that scenario. It's time for a very quick break. We've got more on the other side, so do stay tuned.
On my face. How do you define a disruptor?
The idea was, why should we charge differently? We should probably charge the same.
What's the idea to change things around?
People would be scared to put 50,000 rupees with us, right? But we have customers who put 500 crores with us.
What was your biggest challenge?
Did not have enough money in the bank to even meet the payroll.
What are the lessons that you've learned from the mistakes that you saw being made?
Didn't want to dilute their stake and therefore, ran out of cash.
Think you know what success looks like? Think again. Meet the disruptors. Those who dare, dream and defy.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first trade to buy all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target. It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Welcome back. You're watching Ask Profit on NDTV Profit. This show gets you answers to all of your stock-related questions, and to that end, you can send them to us on the WhatsApp number that you see on your screen, or in fact on a call. You can call us on the landline that you will shortly see on your screen, and we will try and take as many questions as we can over the course of the next half an hour. Now, the first question we're taking on this side is from Sudha, who's writing to us from Hyderabad. She's bought 22 shares of HCL Tech at price of 1,511.6. Let's pull up the chart and see where it's currently trading. She is in the green, and very much so. In fact, 29% gains at this juncture at the very least. Stock is currently trading just about 1,950, and of course IT is in focus all of this week on account of the start of the earnings season. She's asking, should she book profits or accumulate more? She's in for the long term. Nilesh, I'll come to you on the charts. What should she do?
Tech within IT Pack has been one of the outperformer, and we have seen a new record high on Friday. So major undertone still looks strong. I think one should ride this particular momentum. One can keep a trailing stop loss in order to protect the gain that she's already holding. So ideally the trailing stop loss should be placed at 1920, and on the upside 2000, 2040 can be seen from a short-term point of view. So better to stay put with a strict trailing stop loss.
Got it. All right. Thanks so much, Nilesh. And indeed, thanks so much for joining us today. I understand that you have to leave us a little early today. Next time, I hope that we can speak for a full hour. But pleasure as always having you. We've got Ajit Mishra, SVP Research at Religare Broking, joining us. Ajit, as always, thanks so much for taking the time. I will come to you for the first question on this side of the half, actually the second one, which is Ganesha Ecosphere. And this is a question from Shweta. She's writing in from Hyderabad, and she's bought at levels of 2,056. She's wondering whether to hold or exit with a 6-month time horizon. What would you say?
So can you please help me with the symbol, Alex, because I'm not tracking this stock.
Yeah, so I'm going to try and pull that up. It's Ganesha Ecosphere, which is currently trading at 1865. If we can pull up the symbol, I'm trying to pull that up as well. It's GANECOS.
All right. Yeah. So it's quoting at 1865 now, and so long-term trend is still positive. It's just that we are seeing correction after the phenomenal surge from 900 to 2400 mark, and the recent correction is largely, with not much of the volume. So it's okay, but the challenging part is that since we are inching towards the long-term averages around 1750 mark, so that is going to be critical. In case if it fails to hold, then this correction may deepen further. So as of now, one can continue to stay put with 1750 as a stop loss, and in case of recovery, 2025 to 2100 mark, that will be the area of first resistance.
Okay, so hold is what we are looking for, Ganesha Ecosphere. Now, next question is from Raj Gopalan from Chennai. Wants to understand the long-term prospects of BSF Limited. Whether is it good to buy for a long term for say more than 2 to 3 years now. Saurabh, I'll come to you on this one. In the last 6 months or so, we have seen a kind of correction in this stock, about 4-5%. Before that, it's had a stellar year. What is your view on something like this stock?
I think it is one of the great company in the chemical space. With the promoter is, it is the driven by the promoter is international, so it's an MNC driven company. So in my opinion, I think the chemical space is now looking good, and the recent correction provides a good opportunity. So it can be a good hold.
A hold is what we are looking for BSF Limited. Now, next we have a caller joining us. It's Kushal from Bengaluru. Hi Kushal, how can we help you on the show today?
Yeah, ma'am. Very good morning. Actually, I'm looking for accumulation of Seagull India. So it's like an infrastructure company. So I can see they have a very good order book. So around 12,000 crore. So my perspective is can I accumulate the shares right now? And I'm looking for a long-term view on the revenue growth and profitability, everything.
So Kushal, is it on the basis of order book and the fundamental outlook? Can you share more on why do you wish to accumulate this? Do you have an existing position already?
Yeah, because actually it is an infrastructure company.
Right.
So as of now, we can see the Modi government is very keen on developing the infrastructure in the period of 5 to 10 years. So even I had read that the Union Ministry has allocated around 1,20,000 crores for the upcoming bidding. So from this, I can see there is a very good opportunity in this, especially in the Seagull India. So my main motive is for the long-term view.
Okay, got it. Saurabh, I'll take this one with you. Seagull is something, this is a recent listing on the street that we are seeing at. In fact, we have some of the brokerages also which are bullish on this stock. Just IFL came out with a note today. They are seeing about 20% of an upside. Even if you talk about the order book, it has a strong order book positioning. And as Kushal was saying, a lot of now attention falls on the capex cycle and the government play over here. What is your view on something like a Seagull India?
See, while the space is looking quite interesting, normally second half we see things getting speed up and order booking also takes a leap. So the space is quite interesting. But since it's a new listing only, we have seen only 1 or 2 quarter history, and I believe the listed ones provide also provide good opportunity. The companies like HG Infra, KNR Construction, or maybe GR Infra. I think these companies are more stable with the history backing the business performance. So in my opinion, he can look at these companies also.
I do want to pull up the Nifty 50 chart. We are currently trading at cuts of about 0.8% for the Nifty 50. We've seen a considerable breakdown over the last 15 to 20 minutes or so, and we're trading at very close to the low point of the day, which today is 23,806. It is at 23,815 as we speak. I just want to come to you very quickly, Ajit, on what you're seeing that is causing this kind of pressure on the downside, and what are the key levels now that we're very close to that 23,800 mark?
Yeah, that's true, Alex. In fact, almost on the verge of negating the surge that we had on Thursday, which somehow gave some hopes to the bulls that there could be further recovery. The underperformance of banking is basically have started hurting because banking index today we have slipped below the long-term averages. And last week, Alex, the top 2 performer, ICICI and SDFC, they were among the top 5 losers in the Nifty 50 basket on the weekly basis. So this is something which is hurting the market sentiments because financials and banking put together have 40% of the weight. And now 23,700, the long-term moving average. So currently the bulls are trying to hold this area somehow on the intraday basis. Yes, we have slipped below this mark for a couple of occasions, but somehow we are trying to hold this level. So a decisive close below 23,700 would again push the bulls on the back foot, and the November month low 23,250 is something that market may test.
Yeah, we were looking at some of the data over the last several years, and you can never tell which way January is going to go. There have been months in the past several years where there have been absolute frenetic returns, and there have been months where there have been significant drops. So there's no real trend that you can see. And at this juncture, it's hard to tell where we're heading right now. Let's take the next question. We've got Jitendra, who's got a question on Sona BLW, and this is in the automotive ancillary space. He wants to invest 2 lakh rupees in this company for a period of 3 to 6 years. So it's not a short time frame that he's got. Saurabh, is this the best company in the auto anc space or auto ancillary space to deploy 2 lakh rupees in?
I think EV is the buzzword in the automobile industry, and the company does a good amount of business in the EV segment and gradually expanding it. So I think the recent numbers were good, but overall this year was not good for the automobile OEM players, and that is why we saw a good amount of selling in the auto ancillary also. But as he says, he wants to invest for the long-term period. I think it makes sense to deploy money in Sona BLW.
Got it. All right. Sudhakar is calling us for a question on BSE, I believe. Sudhakar, you're calling us from Hyderabad. Thanks so much for calling. How can we help you today?
I'm calling from Hyderabad, sir.
Yes, please go ahead.
Sir, I got BSE.
Okay.
14 shares of BSE at 3758, sir.
Okay.
So I would like to know, I would like to add further more to this.
Okay.
What should be my stop loss?
What should be okay.
Addition?
So
Because I have bought it 2,200. I sold a lot of shares.
Okay.
6,000.
Okay, can you
Now
give me a
I'm
sense?
still retaining 14 shares actually.
Okay, you only have 14 shares. So can you give me a sense of what you were thinking? When did you buy these shares? When did you sell them? It's all over the course of 1.5 years?
No, sir, it's only hardly 6 to 7 months.
6 to 7 months. So you made quite a bit of money over the course of 6 to 7 months already, and you're wondering whether to sell all of this, or should you buy more at this point?
I don't want to sell, sir. I want to add more.
You want to add more, okay. And what is the time frame that you have in mind, Sudhakar?
I'm a long-term investor, sir, usually.
Okay. So then, can you help me as to why you decided to sell midway through? Of course, the lure of booking some profits must have been there, but what were you thinking when you booked profit?
I did require some money actually.
Okay.
So I sold some of them. I made a good profit, and then again I have bought also at 3,900 against you.
Okay. Okay. Right. I got it. So good. You've had a positive experience with BSE. The question is, does that continue, and should you add more at this point? I got your question. So on the technicals, Ajit, would you buy more at this point? BSE is making a considerable profit right now.
Yeah, Alex, so it's been a phenomenal run for almost all the platform players, and BSE after this recent surge, now we have started seeing a bit of a profit taking or slowdown, in the price action. And probably once we break this 5,000 mark, this profit taking may extend. The stock might retrace towards 4,500 mark. So if you wish to add more, definitely around 4,500, you can start accumulating, but not at the current levels.
That is the view on BSE. Next question is from Sarath, and he wants to, he's bought about 100 shares of Roto Pumps, and this is at a price of 305. If you pull up the stock price of this one, it's currently trading in the range of 315 or so. Wants to understand the outlook on this in terms of long-term picture. Saurabh, I'll come back to you on this one. What is your view on something like Roto Pumps?
Not able to comment on this.
Okay, if you can give us an industry perspective on how the water industry is. There's a lot of emphasis on players like Enviro, Infra and others in this space.
See, the space is quite interesting and a lot of activity is being done. So in that sense, I think from the long-term perspective, it makes sense to hold.
Okay.
Okay. Any chance you have a view, Ajit, on the charts for Roto Pumps? It's got a time. I mean, it's got a pretty. I think it was listed in 2022, so fair amount of data should be available.
Yeah, Alex. So after the initial subdued performance, stock witnessed sharp gains. During the last calendar year, and after making a new high, it's almost like 4 or 5 months of consolidation wherein the stock retraced to its long-term averages again. And again, we are seeing some buying interest emerging at the lower end. So overall, it looks interesting, means the price action volume indicates there's a possibility of further surge, and the stock might retrace its record highs in the near future. So definitely one should stay put with the 280 being the closing stop for this position, and 370, 380 the record high zone as a target zone.
Okay. We've got Abhirami who's calling us from Chennai. Abhirami, if I remember correctly, you've called us before. Thanks so much for calling again. How can we help you today?
Good morning, sir.
Good morning. Please go ahead.
Sir, I buy CG Power for 763 my LTP.
Okay.
For 20 shares. Now I hold for long term or bus sold this time. Kindly give me the suggestion, sir, please.
Okay, got it. Abhirami, what is your definition of long term?
Sir?
How long is long term in your opinion?
Sir, because the CG Power sector is going to next year we will go the peak for any ideas. That's only I take this, sir.
I got it. I understood. But when you say long term, will you hold for 2 years, 3 years, 5 years? Is that what you're thinking?
Sir, 2 years, sir, 2 years.
2 years,
yeah.
Understood. Saurabh, on the fundamentals then, a perspective for 2 years, bought at levels of 753, losing a little bit of ground. Would you hold on?
I think on the valuation perspective, it looks quite expensive to me, quoting at 9 times to book value and about 50-60 times PE. If you look at the operational numbers also, there was a degrowth in the profitability and the revenue in the September quarter. So in my opinion, I think because the valuations, the stock is too pricey, it may correct more, and acquisition price is on the higher side. So in my sense, I think it is better to get rid of.
Okay, so that's the view for CG Power. Next, we have a query. This is from Ray from Bangalore. He's bought about 40 shares of Persistent System, and this he bought 4 weeks back at a price of 6,110. Currently sitting at a profit of around 9,000 rupees. He wants to understand whether he should continue to buy this or sell at this point. Want to get a 6-month perspective. Ajit, I'll come to you on this one. A lot of IT names in focus. What is your view on Persistent System in focus? Yeah.
So within the mid-cap IT names, Persistent has been among the top performing name, and the stock in fact recently beat a new high as well. But now we start to seeing a bit of a profit taking in the high end. Since its time horizon is 6 months and the earnings season is also about to kickstart with TCS numbers, so there could be a bit of a volatility. So the ideal approach is to at least book partial profit around the current levels and maintain a trading stop loss at 6,100 mark for this remaining position.
Got it. All right. Vinod is calling us from Bengaluru. Vinod, good morning to you. And I believe you've got a question on IRFC.
Yeah.
Yeah, please go ahead.
So I'm holding 1,800 shares in IRFC.
Okay.
And I would want to know, my goal is to keep this share for almost like, it's a long-term goal in terms of like 5 to 6 years.
Okay.
I just want to know if I can buy a couple more shares or not is what my question, because my buying rate was 191 and currently it is trading at around 149 or 150 somewhere.
Yeah.
So I just want to get some guidance on that one.
Okay. Vinod, help me understand this. So you bought obviously for the long-term prospects, and you've read about, I'm guessing you've read about the lending space in the renewable energy space. But did you acquire all of these 1,800 shares at once, or did you buy it over a period of time?
No, at once.
At once.
So back in some 4 to 5 months, I'm not sure with the time frame. Yeah, probably around 4 months.
4 months. And also help me understand, this is part of an overarching portfolio, a bigger portfolio?
Can you repeat that?
Vinod, is this one stock that you hold in 10, 15, 20 stocks, or is this most of your holdings are in IRFC?
Yeah, most of my this one is in IRFC only. Yeah.
Okay, fine. All right. Saurabh, on the fundamentals, couple of questions go to you then. Should he buy more at this point? He's mentioned, he's got 5-year time horizon, so he's not in a hurry to sell the stock. What are the prospects? And would you advise that when you have a large number of shares that you have to acquire, that it's a better idea to stagger your purchase?
Surely it is always better to stagger your purchase, and should you, as you always say, that you should not have more than 10% exposure in single stock of your total investment in the equities, especially in the direct market. So coming down to the IRFC, while the space is quite good, I think the lending activity was lower if you look at the data statistics coming from the banking sector per se also, largely because of lower expenditure by the government and lower capex by the private sector. But I think going next year, things will surely improve, and so the things will also improve for the IRFC, because now they are getting into the newer domains also. Looking at the valuation, I think valuations have subsided now. It trades close to 3 times to book value. Earlier, it was quoting at 5 times or to 6 times book value. Now, it is at the point where it is not advisable to sell, nor it is now advisable to add more even. So I think it makes only sense to hold for the long term. Surely, expectation is that the next year things will improve, and so the stock price, So it makes sense to hold.
Okay, so a hold is what we are looking in terms of IRFC. But moving on to the next query, this is from Priyanshu from Delhi. He wants to understand what is the ideal price of entry for Adani Ports, and this is for the next 1 to 2 years perspective. Ajit, I'll come to you on this one. Adani Ports, last 1 year, we've seen a flattish sort of a stock performance. What is your view? Is this the current time? Is the correct time to enter into the stock?
Since your view is for 1 year or more, I would rather recommend you to start accumulating from the current area and add more around 1020. So, roughly around 1170 is something that we are currently trading in. So, you can add, let's say, 25-30% in the current area, and then in a staggered manner, 25% on every like 3-4% kind of a cut till 1000 levels. So that's the ideal zone basically where we have multiple supports, 960,000 area, where last time also we saw that the stock witnessed a sharp recovery. So accordingly, one should plan their investments.
Got it. All right. I do want to point out the standard disclaimer, of course. This is NDTV Profit, part of the NDTV Group, which is owned by the Adani Group, and we just spoke about Adani Ports. We got Anuj on the phone line calling us from New Delhi, and he's asking about Infosys. Anuj, good morning. What do you want to know about Infosys?
Hi, morning. I'm holding 28 of Infosys with the average price of 1600.
Got it.
So, two things. Basically, is it planning to reach 2000 or not? It's been stuck up at that level for quite some time. And secondly, I plan to add more.
Okay.
Around 25 more. So, is it a right time or is there any chances of it going down?
Okay. Anuj, help me with the time frame that you have in mind. Would you like to hold long term? 5 years.
Long term, 5 years.
So I think almost anyone will tell you that within that time frame, it will hit the mark that you have in mind. But let me go across to my fundamental expert to give you some better perspective on how he sees the earnings in the third quarter. I think quite a few IT companies have, reacted positively towards the second half of the calendar year. What are the prospects for Infosys going forward, though, Saurabh?
I think the management, quite a few large companies' guidance was on the positive side in the September quarter earnings. Now everybody is looking at what kind of discretionary spending will come up from the mother market, that is US. And after the recent cut, there is a expectation that the things will surely improve in terms of business from the banking and the companies in the US who are expected to boost up expenditure on the IT side of the business, because of which the Indian companies will benefit surely. Now, I think from the 5-year perspective, I think it is a good hold, and 2000 will not be a worry. I think surely the company will surpass even 3000 in 5 years time frame.
Right, all right. And that's not taking into account any corporate action that might come up in that time frame. Do want to point out it's earnings season this week, and we've got the IT companies that kickstart things. You've got TCS this week, and you've got Infosys on the 16th of January. And of course, we'll bring you the numbers hot and straight from the press. So you can tune in for all of the latest numbers and of course the analysis. You'll find all of that right here on NDTV Profit. Let's go to the next one.
Right. With that, let's move to the next query. This is from Vipul Sheth from Ahmedabad. He's holding 150 shares of KSB Limited at a price of 640. So he wants currently sitting at a profit of around 19,000. Wants to understand whether he should continue to hold for more than 1 year or buy more for average. Saurabh, quickly coming to you on this one. What's your view on KSB Limited?
I think it is a very old and good company, and the space is good. So in my opinion, it is a hold.
Okay, it is time, gentlemen, to hit the rapid fire segment, and you know what this means. I will throw as many questions as I possibly can over the course of the next 2 minutes at you. Do keep your answers as short as you possibly can so that we can accommodate more questions. The first one we have is on Ahluwalia contracts, and this is 1,222 is a buy price. Jaya wants to know, can more be added at the current price? Ajit, on the charts, would you say yes?
Sorry, Alex, you have to help me with the symbol.
Okay, no. Any view, Saurabh, on Ahluwalia contracts?
I think it's a hold, not advisable to add.
Okay. Quest Corp is the name of the counter, and this is a 1 year time frame, border levels of 760. Chandrasekharan wants to know, should it be held? Ajit?
So Quest Corp, yes, he can hold with 630 as a stop loss and 750 as a target.
Okay, coming back to you, Yes Bank is the name of the counter. We've got Ram, who's bordered levels of 24.07, can hold for another 6 months. Should he do so? Ajit?
I would recommend to exit and switch to ICICI or HDFC.
Okay, Sir Ravi is calling us from Chennai, asking about Godrej Consumer Products, bought at levels of 1,115, I believe. Would you continue to hold? Saurabh?
That guidance from management, exit.
Okay, PNC Infra, would you suggest a hold on this one? If you bought at levels of 371.9, it's currently trading at 321.9 from a 2-year time frame. Jose wants to know. Saurabh?
Corporate governance issues, sell.
Okay, Oil India, bought at levels of 580. Ravi Chandran wants to know, would you hold or would you sell? Ajit, on the technicals?
He should hold and utilize recovery towards 540 to exit his position.
Okay, another question on Oil India for the long term. Sandeepan wants to know, is it a buy for you, Saurabh, at the current market price?
Not really. It can be a hold.
Okay, Sarath wants to know about Wellspun Living at a rate of 176 bought. Would you hold at this juncture or sell? Ajit, on the technicals?
Definitely a hold. 150 strong base, 180 something that he can maintain as a target.
Okay, gentlemen, thank you so much for joining in, for answering all the questions that you did. Absolute pleasure having you on the show. And we're completely out of time on this edition of Ask Profit. It's been an absolute pleasure bringing it to you from Anushi and myself and the team that put the show together. Thank you so much for watching. Do stay tuned. Lots more coming up over the course of the day. And this is NDTV Profit.
On my face. How do you define a disruptor?
The idea was, why should we charge differently? We should probably charge the same.
What's the idea to change things around?
People would be scared to put 50,000 rupees with us, right? But today, we have customers who put 500 crores with us.
What was your biggest challenge?
We did not have enough money in the bank to even meet the payroll.
What are the lessons that you've learned from the mistakes that you saw being made?
Didn't want to dilute their stake and therefore, ran out of cash.
Think you know what success looks like? Think again. Meet the disruptors, those who dare, dream and defy.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first trade to buy all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target. It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Hello and welcome to KYC, Know Your Company as the abbreviation suggests. It's a new show on NDTV Profit, and what we focus on is to try and cut the clutter in this fast-paced world of stock markets. Investors generally are bombarded with information, but what they lack often is deep comprehensive understanding of companies that they invest in. Know Your Company is a show designed to give the regular investor powerful, actionable insights into the fundamentals of single NSE listed companies daily. Now, quickly moving on to the company that we're going to look at today. We're going to look at Popular Vehicles. It's a distributor in the auto segment, and it's an auto retailer which was established in 1984 with Maruti. Headquartered in Kerala, it operates now a dealership with Maruti, Honda, JLR, Tata Motors, commercial vehicles, Ather Energy and Piaggio. Those are all the brands that they currently distribute. They employ over 10,000 people across 430 touch points across India. Now, key segments, let's pull those up as well, try and break that down. First off, new vehicles, 74% of their sales comes from there, 5% from spare parts. Services is the other larger chunk, 15%, and then pre-owned vehicles is 6%. What I would also want to try and break down and understand, and we'll have Puneet joining in just a minute, is how quickly is pre-owned vehicles growing, and can that growth rate kind of sustain? But that's the larger breakup in terms of the current revenue. I'm also going to try and break down, as we always do on each show, the fundamentals, and we at the end of all of that we give you a rating. So let's start off with what our rating parameters are. First off, we look at the income statement before we look at the balance sheet, the cash flow and the return ratios on all the capital that the company continues investing. Shareholding, how that has evolved, along with street cred, what's the kind of return the stock has given. Along with street coverage, are analysts actually looking at the stock in a deep fashion? Is it a well-tracked, well-covered counter? And what do analysts believe is the upside or downside potential? That's street coverage. And last off, on the valuation picture, how does valuation stack up versus peers as well as other players in the similar kind of cohort? And we'll talk about all of that on this show. Let me first start off with income statement. Well, revenue currently sitting just shy of 6,000 crore. It's got a very strong revenue growth that it has clocked over the last few years. And I'll pull out not only the last year, but I'll also try and cull out from the last, say, 2021, when the top line was maybe just about 3,000 crore. Currently, top line sitting at roughly 5,600 crores, which is just shy of the 6,000 crore mark. So it's been a very healthy revenue growth that we've seen the company clock. EBITDA too has grown at a healthy pace, but what we've seen is it's not grown as quickly. So EBITDA has shrunk from 5%, EBITDA has shrunk to around 4% odd. And we'll try and add color to that, because is it just growth that they're focusing on currently, and which is why it shrunk? We'll try and get some more understanding on that. But profit after tax up 32%. So strong growth where PAT is concerned. PAT has gone in FY22 to a sub 50 crore to now nearly 100 crore, nearly in FY24 on a consol basis. So that's how it's lining up in terms of numbers. But Puneet, let me first off welcome. Always good having you. Trying to understand from you, Puneet, how do the balance sheet metrics line up?
Well, definitely, there are a couple of data points when you look at the net debt to equity, especially
It's trading at around the 0.6 times for net debt to equity specifically. And what's important is that, while the cash reserves have been maintained around 40 to 45 crores, the aspect that the gross debt is over 500 crores for a company like Popular. Now, the size of the balance sheet as well as, that's not too much, but this is not a key concern specifically because, it's an auto dealership. So it has to maintain roughly 30 to 50 days of inventory of cars in its warehouses. For that, of course, it needs this kind of working capital, which is generally, financed with the kind of debt that they've taken on a gross basis. But they do also maintain a decent cash balance of about 46 odd crores, which is roughly about 40 to 50% of their annual profit as well. So they have been maintaining that and increasing that steadily over the last 3 years as well. That's something that's something very positive for this company as well. But one of the other aspects, Harsh, is of course to also look at the cash flow of a business like this, because heavy cash investment needed to maintain that kind of inventory also has certain strains on the cash flow as well.
Yeah, and that's reflective, Puneet, of the balance sheet that we'll pull up very, very quickly. The cash flow per se, 80 crore is the cash flow from operations. But let's also break this down, because you have receivables which have doubled over the last year or so. From sub 40 crore, it's gone to 71 crore. And you have inventory, which has gone up 5x from around 35 odd crore to 150 plus crore. Those are the two metrics, in my view, which is impacting overall cash flow. In terms of the compounding, therefore, you're seeing a negative 6% on cash flow from operations. And that's where the likely negativity is starting to creep through. Can that change in a big fashion? Well, you would hope so. And if that does happen, of course, you may start seeing a tweak with regard to how one views cash flows as well within the company. But for now, you're seeing a negative 6% over the last 3 years in terms of cash flow from operations, largely led by these two, which are dragging numbers. Net cash flow has, though, been quite healthy in that sense. So somewhere there's been a balance, Puneet. And therefore, overall, we'll want that cash flow from operations to start to pick up, and therefore that thumbs down view at the moment with regard to cash flow.
And another, I think one of the key metrics is, of course, the return ratios as well, which we do look at as well.
Yeah.
Now, the ROE is, of course, 11.6%, and the reason why it's actually fallen by 7 percentage points compared to last year, but that's largely because of the IPO proceeds that they got in 2024. So that's one of the key things, because they had increased that ROE to roughly about the 18% in FY23. The company has also spoken about this in the previous conference call, that it is expected to rise again in the next year once this excess cash is deployed. The other aspect is the ROCE, or the return on capital employed as well. That's very healthy at around 17.7 to 18 percentage points. And over the last 3 to 4 years, the company has been steadily increasing this and maintaining at least the 17% levels continuously over the last 4 years, despite the pandemic as well. So that's one of the key things, that they've been able to deploy cash very effectively, Harsh, and that's reflected in these numbers as well.
Well, yes, so cash deployment in that sense is effective, and return ratios therefore looking positive. We'd like to look at a turnaround both in inventory as well as with regard to receivables. So those are two metrics we'll track. But moving quickly on, you have shareholding, which is a key metric here, because what's happened over the last year or so, they've listed themselves, they've gone through an IPO process, they've listed themselves on exchanges, and 61% promoter ownership is what the shareholding stood at the start of immediately post listing on exchanges, and that's carried on over the last 2 to 3 quarters, which is obviously a positive of some sort, and it's definitely a thumbs up on that metric, because what you would expect is some amount of dilution post listing, but that's clearly not happened at all. So management remains very well invested in the company. 61% is a good shareholding as well. It's a healthy shareholding, more than 50%. Not only do they maintain control, it also signifies that they have confidence in the company. So both of those metrics, definitely a thumbs up on that count. One was return ratios, which Puneet covered, and one is the shareholding, which I covered. But let's talk about street cred, because returns not as healthy, right, Puneet?
Yeah, and it's been dragged because of the market conditions as well, because this year we have seen a very slow movement of cars specifically, which is majority of the revenues for a company like Popular, and that's one of the key things, that they have reported lower growth in Q2 as well as Q1 as well. Apart from that, what's interesting is that, which Harsh pointed out, the promoters, it's split equally between the three promoters, with Naveen Philip, who's the current MD as well, holding roughly about 20.39%, along with Mr. Francis Paul as well as John Paul, who hold the same stake. So it's been consistent. And the key aspect about the share price performance is, of course, reflected in its peer Landmark as well, which we'll get to eventually. The aspect that, the company is expecting better performance in the next year, both in terms of cars as well as commercial vehicles, because infrastructure spending has increased in this half, starting somewhere in the previous month of November as well as December. That was also absent in the first 6 months, largely because of elections as well as the monsoon. So both the companies, the passenger car segment was dragged down because of the very stupendous growth over the last 2 to 3 years. But the truck segment also wasn't working specifically because, the industry as a whole had come to a standstill in the first 6 months as well. So that's largely down the, dragged down the share price performance in this particular year. But of course, when we eventually get to valuation, that will be one of the positives to talk about as well, because it's now somewhere trading at a very interesting point, to say the least.
Yeah, and interesting you bring that up, because whenever you have a company trading at a decent valuation, you'll always have good street coverage coming through. But at the moment, we don't have any street coverage on this one, and therefore we give it a neutral. No street coverage whatsoever. Two drawbacks of that. One is you don't understand perspective. You don't get a perspective of an active analyst tracking a stock all the time. And second is typically when an active analyst tracks it, you will have certain ESG or rather more governance parameters looked at in a more deeper fashion, which also we don't get, and therefore we'll hold on to the neutral rating on this one. But Puneet, let me quickly come across to you with regard to valuations. How do those stack up?
Well, it's very interesting for both the companies, because we're also comparing it with the listed peer, which is Landmark Cars as well. So for Popular, of course, it's trading at 13 times current price to earnings, since it does not have any kind of analyst coverage. We haven't taken forward PE of FY26 or 27. What's interesting with Landmark is the share price correction hasn't been as steep as something like a Popular vehicle. So when you look at price to earnings specifically, while the earnings have deteriorated for something like a Landmark, the price has stayed stagnant, and that's why we see the big disparity between both these price to earnings ratio for these companies. In terms of Popular vehicles, the numerator, the price has corrected while the earnings have corrected as well, and that's why you can see that the 13 times current price to earnings looks decent, and the disparity is there. But over the next year, when performance increases for both these companies in terms of better market conditions, as well as the passenger car segment also showing some growth compared to the previous year, because of course FY25 will be a low base in FY26, so that's also going to correct slightly. It is expected that something like a Popular vehicles, where the earnings might increase in the next year, will also have some kind of positive price movement. But currently, Ash, it's very interesting what's happening in both these players, because there's not too much competition, or at least in the listed space, while on the private side there's a lot of competition with razor thin margins, of course. But for something like a Popular vehicles, the price has corrected to a point with respect to its fall in earnings in this particular year, and that's why we see it being, cannot call it undervalued per se, because the earnings have fallen, but definitely when compared to something like a Landmark Cars, it's at that adjacent point as well.
Fair point. Lower growth, but at a cheaper valuation, as is generally the case. You pay more for growth. But let's quickly break down on all that we've discussed in terms of performance parameters. Income statement we spoke about, positive. Balance sheet check was positive. Cash flow was negative because of a couple of one-offs that we spoke about. Return ratios was positive as well. Shareholding positive. Street cred negative because of the returns given post IPO. Street coverage is neutral, and valuation picture is positive, giving us a rating of 5.5. But let's go across to the management, shift focus. Puneet, of course, spoke with the company's MD and promoter, Naveen Philip, and he chatted about the company's growth plans ahead, as well as what can we expect in terms of guidance. Listen into a slice of that conversation.
So we are spread across the entire automobile sector. So we have two-wheeler, three-wheeler, we have passenger cars and commercial vehicles. And then we also have distribution of spare parts and the used vehicles per se. In terms of brands, we are associated with very limited brands per se. So in passenger vehicles, we are associated with Maruti, we are associated with Jaguar Land Rover and Honda. In commercial vehicles with Tata Motors and Bharat Benz. Two-wheelers, EV two-wheelers with Ather and EV three-wheelers with Piaggio. In terms of distribution of spare parts, we have far more brands because it's a much larger in terms of we have both Tata Passenger, Tata Commercial, Maruti, JCB, Ashok Leyland. We are agnostic over there. In terms of a strategy going into the future, and this has been a philosophy from day one, and we have repeated it even during the IPO and post, is in terms of building up our service infrastructure in the passenger car business and in terms of having an overall coverage of all categories of the automobile sector. Here, Maruti being the largest brand for the last 40 years plus, the base for service, that is the number of vehicles at the car park that is already present in the country, is the largest for Maruti. So our expansion in service and the expansion to other states and all that would predominantly be Maruti-led in terms of the passenger vehicles. In terms of luxury vehicles, we are present with Jaguar Land Rover. Here again, we would like to keep growing with Jaguar Land Rover and maybe add one more brand in the luxury vehicle portfolio. We are very concentrated in terms of our brand addition. So we are in terms of very focused with the players that we are already there with in terms of OEM and we believe that is our strength in terms of long-standing relationship with the OEMs and having a much larger area coverage and in terms of depth. In commercial vehicles, we have been with Tata Motors for the last 27, 28 years. We are already present in 2 states. We would like to keep expanding with them. Similarly with Bharat Benz since its inception. So overall strategy is that in terms of continuing to be with the brands that we have and growing with them per se, instead of just adding brands on that. In terms of two-wheelers, we have added, we've got into that space only about 2 years ago with Ather. Continue to be happy with the Ather, and Ather is also going for an IPO. And again here, would like to expand with Ather into other states also. And that's our philosophy per se. Three-wheeler as a market, we've seen some troubles in terms of because of the FAME subsidy and all that. So we are still evaluating whether we want to be in that space.
The second question, Mr. Philip, I just wanted to continue the point because the reason I asked for brand addition is because, according to your RHP also, there are either auto dealerships with a single brand across states or, multi-brands as your, only listed player has roughly 10 brands currently operating. You're somewhere, positioned in the middle. So I just wanted to ask, because this year has seen slowdown across the passenger cars as well as the truck segment as well. And it's visible because of market conditions. So, and while you mentioned that your two-wheeler business is only 2 years old, so in terms of revenue, it might have lower contribution. But if we get kind of like a slowdown, what would be the company's strategy in case of a similar issue in terms of, brand additions as well?
Yeah, so our strategy doesn't change because 1 year is a slowdown. And as I said, our focus is in terms of building up our service facilities and service partnership per se. And last year we serviced about 1 million vehicles. And we continue to focus on that and build that as our strength area. And for that, we don't need to have multiple brands as a strategy. With the same brands that we have, there's enough scope to grow. And that's the focus that we have, both in terms of across geographies and within that brand in the states that we are.
Now, Mr. Philip, I just wanted to take forward this point because, working capital is one of the mainstay of any auto dealerships because, you have to maintain the car stocks in the inventory as well. I wanted to understand what kind of contribution that you're targeting from the non-new vehicle sales portfolio as well, mainly the pre-owned vehicles, spares, as well as the service business. Because this will help you offset some of the high interest costs of maintaining working capital and inventory. While I know you're on silent period for Q3, what would be the FY26 and 27 targets coming from these three businesses firstly?
If you look at our last year's numbers or the year before last, in terms of last year, we delivered a PAT of about 76 crores. So approximately 15% of our turnover comes from our service business. So last year we had a turnover of approximately 5,000 crores, about 750 crores came from our service business. But close to about 56% service and spares business. But close to about 56% of our EBITDA came from our service and spares business. And if you look at what goes down to the PAT level, it would be closer to about 70-75% from the service and spares business. And which is why we keep stressing that we would like to build that service portfolio up, because that's a more consistent business. And I mean, there's no inventory stock involved in that except for a very 30 days of spare stock that is involved. So that is where our focus is in terms of. As you rightly said, the turnover per se, out of the 5,000 crores, 80% of our turnover comes from new vehicles. But that contribution of the new vehicles into EBITDA levels and into PAT levels is much lower in terms of percentage contribution per se. So that's where we want to focus on building our service franchising, and that's been our philosophy through all these years that we have. And going back to the statement that I made initially, and for that we don't need to have multiple brand additions, because if you look at the car park, the car park consists mainly of 3 or 4 players. That is Maruti, Hyundai, Tata and Mahindra. If you look at these 4 players, probably approximately about 85% of the car park lies there. Coming to this year specific, and in terms of H1, it's been muted because the interest costs that have piled up has taken the sheen out of our bottom line numbers. We were carrying in the initial months, starting from April till about August, September, we were carrying in terms of passenger vehicles closer to a 75 to 90 days of stock. That has slowly started coming down, and I think that would start showing in the results going forward. So, since we are in the silent period, I'm not getting into numbers of Q3 specifically, but I think an overall trend. So over the last 5 years, we've been clocking a CAGR in our spares and service business of approximately 20%. And the contribution, which was, as I said, it was 15% last year. That contribution 3-4 years back was about 11%. Okay. So that's the growth that we would like to maintain, and we're confident of maintaining going forward over the next 2-3 years. So 1 year might be a blip here and there, but over a trend of 3-4 years, we would still like to grow at about 20 to 25%. And we are quite confident of delivering those. And as we grow in that number, the contribution, as I said, from 11% to 15% of turnover, that would further go up, and in terms of our EBITDA margins, and in terms of our PAT.
Now, Mr. Philip, electric vehicles has been an up-and-coming segment post the pandemic, especially, since the focus on personal mobility. Now, while in 2024, we saw roughly about 1 lakh electric vehicles sold in the country in terms of four-wheeler cars, still a small share of the overall 40 lakh vehicles sold in 2024. I want to understand your strategy in terms of electric vehicles, because the brand that you operate in, mainly Maruti, is looking to launch an electric vehicle in this particular quarter. And it's mainly dominated by brands such as Tata Motors, Kia and MG, who have taken a steadfast approach to electric vehicles. How does an EV brand addition for you work? And in terms of the service business as well of electric vehicles, how would it be different from a traditional diesel or petrol service business in terms of revenue as well as margins as well?
So if you look at in terms of, Maruti is launching their EV Vitara in terms of, it'll be there at the Bharat Mobility Auto Show. If you look at EVs across the world, they're actually very disparate in terms of, so if you look at China's EV penetration and population or sales per year has gone up drastically. But whereas if you look at the other extreme of US, it has gone down consistently. And in Europe also, earlier the target was that by 2030, everything should be alternate fuels or EV specifically. They have moved that timeline from 2030 to 2040 in terms of adaptation. Large companies like Mercedes, all of them have stepped back on the EV portfolio and EV business per se. So we don't know how it will play out in India, whether it's just EVs or hybrids that will do well, biofuel, CNG. You also have hydrogen cells, everything coming in. So it's a mix that will go over the next 3-4 years. How does it impact us as a dealer is the question. In terms of service business, if it is only an EV portfolio, definitely services come down by about 10%, the regular service, because moving parts are lower. But if you look at, even as I said earlier, in terms of our revenues, the EBITDA contribution, 55% of our EBITDA came from service and spares business. So if you look at 4 million vehicles that will probably get sold this year, will probably go to about 8 million vehicles by 2030. We are looking at This year, the penetration of EVs, as you said, is only 1 lakh on 40 vehicles. 40 lakh vehicles, about 2.5%, 3%. It will probably move up to the most optimistic of estimates is that will go to 30%. But we would look at, if you look at what the trend is, it will probably be around 17, 18%. Which means even in 2030, that out of the 8 million vehicles that is estimated to be sold, 6 million would be ICE or hybrid or a combination of those. And about 2 million vehicles would be probably EV. Which means that from now to 2030, we are going to see at least about 25 million ICE and hybrid vehicles going to be added. Okay, and that will sustain service for the next 10 years to come. Because usually the service period is at least over 5 to 7 years. So that's one point. Out of the 55% EBITDA that we generated last year, close to about 70% came from our accident repair business or body shop business. Now that, whether it's an EV or an ICE engine or any other powertrain, the accident repair business doesn't get affected because the more number of vehicles on road, the number of two-wheelers penetration, three-wheeler penetration, everything, accident rates have not come down. It only has gone up. And even in highly regulated markets where you have ADS and all that, even in US, China, everything, accident rates have never come down. So that's where our concentration is. So our accident repair is concentrated mainly on our passenger vehicle thing. Because if you look at commercial vehicle, though accidents are there, the repair, so you should look at accidents as not just major accidents. I'm talking of small scratches on the vehicles, a small dent on the vehicle. A commercial vehicle operator would not repair it immediately unless the vehicle stops running because he or she has to generate money out of the commercial vehicle. In terms of passenger vehicle, the thought process is very different. The owner wants the vehicle to look spick and span. So even a small scratch dent is repaired on, and that is where there is a flow of revenue also.
Now, Mr. Philip, we did speak about brand addition, and another aspect is, of course, geographic expansion. Now, as of your Q2 presentation, you have roughly about 60% of your total revenues coming from Kerala, about 25% from Tamil Nadu, and roughly 10% from Karnataka. But, the first two states are, of course, the mainstay. You have been operational for the last 40 years. I wanted to understand your strategy for geographic expansion since you've added Maharashtra as well over the last 3 to 4 years. What's the company's strategy going forward with this in terms of increasing your current presence in major states going forward?
So, as we said, the reason I'm saying a lot of people ask why we've stuck on in Kerala, it's been 40 years, all that. The fact of the matter is that Kerala is one of the highest penetrated passenger car markets in the country. The number of cars per thousand in Kerala is double that of the national average. And hence penetration, car park, service availability was all very high.
Well, out of time on this edition of KYC. Thanks, Puneet, for joining us and giving us all that perspective. But for now, from me, everyone who puts the show together, including Puneet, thanks so much for watching. Stay tuned to NDTV Profit. More action on the other side.
From my face. Chalo, chalo, chalo. How do you define a disruptor?
The idea was, why should we charge differently? We should probably charge the same.
What's the idea to change things around?
People would be scared to put 50,000 rupees with us, right? But today, we have customers who put 500 crores with us.
What was your biggest challenge?
We did not have enough money in the bank to even meet the payroll.
What are the lessons that you've learned from the mistakes that you saw being made?
Didn't want to dilute their stake and therefore, ran out of cash.
Think you know what success looks like? Think again. Meet the disruptors, those who dare, dream and defy.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first trade to buy all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target. It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
From my face.
How do you define a disruptor?
The idea was, why should we charge differently? We should probably charge the same.
What's the idea to change things around?
People would be scared to put 50,000 rupees with us, right? But today, we have customers who put 500 crores with us.
What was your biggest challenge?
Did not have enough money.
Well, hello and welcome to NDTV Profit. My name is Rucha Somaya and you're watching Markets at 12, a brand new show here at NDTV Profit. Let's begin with a quick look at the markets. Well, definitely a bad day for the markets. Nifty 50 down about 1.5%. Sensex down about the same 1.5% or so. IT largely flat. Bank is the one which is losing the most, 1.7, almost 2% down in trade. A quick updates, a few updates with respect to some of the banking and the NBFC names is what we had over the weekend. But let's pull up the sectoral heat maps. Nifty PSU Bank is losing the most, followed by Nifty Realty, Metals. Yeah, there we go. All the sectors in the red. IT slight bit off on a recovery mode, but still most of the names, even in IT, down in the red. Let's look at the advance and decline ratio over there. Definitely advances is actually not doing really well, as you can see. Advances at 200, declines almost 2,000. So this is a bad picture for the markets. Let's have a quick look at the constituents of the Nifty 50 index. Well, down in the red, we have ITC as the demerged entity lists today, down about 7%, followed by Tata Steel as well. HDFC Bank is also something which is weighing heavily on the stock. Again, this one as well came out with its numbers, quarterly numbers over the weekend. On the positive side, we have ICICI, Apollo, Titan and Infosys, but still trying to maintain their stance in the green, but definitely the positivity is not we could see over here. Followed, let's take a quick look at Nifty IT. All the constituents except LTIMindtree and Mphasis as well. Remember, brokerage house came out with a note wherein it initiated on Mphasis with a buy rating. That is why this might be doing flat in trade. LTIMindtree, it upgraded LTIMindtree to a buy rating, but losing sectors, the losing constituents actually here we can see is Persistent, LTTS, most of the mid-cap names. Again, let's have a quick look at Nifty Banking Index and let's take a quick look on which constituents are weighing the most on the index. Bank of Baroda, bad Q3 updates is what we could see over. We will definitely talk about that during the show, down about 5%. PNB, Canara Bank, banking is actually bleeding except ICICI Bank, but still 0.2% is not great to call out for. A quick look at the broader markets as well.
Bad day for mid-cap 150 index as well, as we can see, down about 2%. Small-cap 100 as well, down about 2.5%. A few stocks that are buzzing on the back of news. Number one is Azad Energy, which is issuing equity shares and raising about 1,000 crores. But this one is down about 5%. IEX, positive news over here. Good trading volumes in the month of December. But still, it is down about 1%. I have a guest joining on the show, Mr. Pankaj Murarka, the CEO of Renaissance Investment Management, and I also have Harsh, who's joining us on the conversation. Harsh, please take it over.
Hi, thank you so much for that, Rucha. Good afternoon, Pankaj. Even though market's not doing as well, what's your take? 1.5% lower. You had some updates coming through, consumer companies, lenders. What's your initial sense, this kind of reaction, 1.5% lower?
Well, Harsh, it's a classical profit booking that we are seeing in Indian markets. Indian markets have done pretty well. And probably it's some degree of profit booking that we are seeing at the start of the year and probably before the earnings season. Also, it's to some extent driven by the fact that the fact is India is the most expensive equity market in the world. And more importantly, the economy is experiencing a cyclical slowdown. We saw that the second quarter GDP number was 5.4%. Probably third quarter will see some recovery. But yet on a full year basis this year, there is I don't think, meaning the consensus estimate is that the economy will do a 6.5% kind of a growth. So there is, and probably aggregate level index earnings will grow at now mid-single digit for this year. So combination of slowing earnings growth because of the slowdown in the economy and markets having done well and expensive valuations is what driving profit taking in the market at this point of time, I would believe.
Fair point. Let me touch upon earnings because that's something you spoke about. Do you expect the bottom to be Q3, Q4? Do you expect a bit of a pickup in H2? What's the sense like? We're, of course, right at the cusp of the Q3 numbers.
Well, second quarter numbers were pretty poor. I think we'll see some revival or some recovery in earnings in the third quarter numbers as we get into this earnings season. But yet, that earnings recovery will be a fairly modest recovery. We are not expecting a very sharp recovery or sharp bounce in earnings in that sense. I think the economy has hit a slow patch and probably earnings will remain tepid or moderate for the next few quarters, and which is what I think is leading to this round of profit taking, especially from international investors.
Thank you so much for that. Let's ask you something about IT as TCS kicks off the earnings season by reporting on the 9th. What's your take on IT? Most of them are bullish on the street, but what's your perspective?
Well, the outlook on the sector remains positive, but we need to keep in mind that this quarter, as it is October-December quarter, is a seasonally weak quarter for IT companies because we have the highest number of furloughs in this quarter. So from a reported earnings perspective, probably numbers on a Y&Y basis will still be okay, but on a sequential basis, because of the seasonally weak quarter, they'll be modest. But I think what is more important in case of IT companies is outlook going forward now, because the election uncertainty is out in is over. There is an expectation of recovery of discretionary spends in US, and probably we are seeing early signs of that from commentary from US companies in their earnings. So I think everyone will be looking to what outlook Indian companies give in terms of whether in terms of the pipeline going forward. But I still think IT as a sector is a buy and dip sector. So probably take a medium-term view. We think we'll see a recovery in the IT spends, and it's a sector where one should buy on to every dip.
Pankaj, what do you make of the FIIs now? What's the sense? We are 3-4 days now into the new year, but it's been just a couple of working days as of date for FIIs to work with. What's the sense like for January? What's your outlook rolling towards the budget?
Well, it's difficult to take a view on a weekly or a monthly basis on FII flows, but it's fairly possible that it's the start of the year, given the fact that India is, as I said, the most expensive equity market in the world, and we have a economic and earnings slowdown. It makes logical sense for a lot of these investors who've been overweight India for the last few years and where they've made handsome money to probably take that money away from India and reallocate to some of the other markets which are much more cheaper in terms of valuations. and probably, at least in the short term, probably they might show a better growth for the next 1 or 2 quarters. But it makes sense or probably logical this thing for these guys to take some money off the table. But yet I still believe that on a full year basis, probably towards starting from the second quarter onwards, we should start seeing positive flows from FIs, because India still remains the best secular growth story out there.
And what's your sense with regard to commodities? Gold, silver, they've really outperformed. Gold more in the longer term as well has outperformed equities. But silver in the shorter term has done ever so well. What's the sense now? If at all you have an allocation, would you allocate at this point?
Well, we don't invest in commodities, and I'm neither an expert on precious metals, but from my understanding, probably silver is also an industrial metals, so which is what is driving the demand for silver, apart from being a store of value which holds true for gold and silver. And probably from the data that I have seen, we have seen that central banks, including the Chinese central banks, have been buying into have been increasing their stock of gold, and which is where the correlation between a stronger dollar and a weaker gold prices has actually broken this time, because despite dollar being strong, gold prices have held through, and that's because of demand from global central banks, including the Chinese central banks, which has been one of the major buyers.
And so, Pankaj, given all of this context, given slightly weakened rupee as well, and likely to continue to weaken, what's the sense like? What is the pocket you would like to invest in? Of course, either today or if you see a deeper gash in markets going forward as well. Sense.
So I think investors should take a slightly more medium-term view. This is a great time for investors to invest into Indian equities, because India still remains, while, as I said, the economy is into a cyclical slowdown, but India still remains the most compelling secular growth story. And I certainly think second half of this year, the economy should revive or recover. And probably this would be a good time to build one's long-term portfolio, or probably if one is sitting on cash, to allocate more money into equities. We clearly like IT because we think we'll see a recovery in earnings growth for the IT as a sector going into the next year, that is FY26. And apart from that, we also like banks because we think valuations there are fairly reasonable, and the larger banks are doing reasonably well. And also it's a sector which is coming out of 2 years of underperformance. So we like banks as a sector, and apart from that, we like healthcare as a sector as well.
What's the theme on banks, Pankaj? It's interesting that you say banks, because nearly every bank is facing one or more set of challenges which they are finding very difficult to overcome in a very short period of time. They're taking multiple quarters to come out of either an RBI embargo or either for example, a special situation. You have the heavyweight in that situation. How should one, or how do you look at banks, and how quickly do you expect them to bounce back and give decent returns?
So, well, Harsh, your point is well taken, but I think all of that is well into the price of stocks in that sense. What we really expect is probably India, we should get our first rate cut sometime, if not February, certainly in March. And probably deposit growth in the system should improve. Also this year, the loan growth has slowed down, but I still think that the loan growth can get back to about 14% kind of a number, 13 to 15% kind of a number going into the next year. The good thing is good banks are sitting on pretty healthy balance sheets with very low NPAs in that sense. We have seen some NPA emerging, but that's largely in the MF segment, and that's more concentrated with microfinance lenders. But apart from that, the asset quality in the banking sector is pretty healthy in that sense. So we think going into the next year, we should see a recovery in earnings growth for banks. And valuations in the sector are pretty reasonable. It's one of those sectors which is trading at almost about 30% discount to the index, Nifty index valuations, and the discount to the index is at this point of time over 2 standard deviations than what normally the sector is experienced. So we think a combination of reasonably attractive valuations and a pickup in earnings growth going into the next year should drive performance in the sector in the
Pankaj, last couple of questions. I know I'm holding you back. One is with regard to consumption. You see a bounce back. We had 3-4 companies declare numbers, a Jubilant, a Titan, a Nykaa, good solid numbers. You expect consumption to bounce back. What are those factors you look out for to expect a recovery, maybe second half of this calendar year?
So, second half of the year, certainly we expect a revival in consumption because it's now almost 6 quarters that we've seen a slowdown in the consumption. It started slowing down in the rural consumption and then it spread over to urban consumption. It's pretty heartening to see some very strong numbers from companies like Giant Titan and Nykaa as well that you mentioned. But I think this quarter will probably be a quarter, and some of these stellar numbers from some of these companies are more about these companies' own excellent execution than a broader reflection on the revival in the consumption. So we still think that while the worst, probably the low point in consumption is behind us, but the recovery from here would be slightly more gradual. And I think a meaningful recovery in the consumption will probably happen in the second half of this calendar, probably after we get a good monsoon this year.
Last question, the fears of the new virus, is that at all bothering you? Is it on your mind?
Not really. I think the world is well prepared to deal with any such eventuality. Bear in mind, I know all of us as human beings have the recency bias, but the last time we had a pandemic before the COVID was in 1904. So as long as the world is prepared, I think probably we can contain it much better, unlike COVID where the world was clearly not prepared for it because we did not have a precedent. But I think, one, I'm not sure how potent it is.
Fair, Pankaj.
Prepared to deal with this kind of a contingency.
Fair. Okay, thank you so much, Pankaj, for all of that perspective. It's great having you on a day like this. Always calms the nerves to a certain extent, and that was obviously the hope. Thanks for coming in and speaking with us.
Thank you.
Right, with that, Rucha, it's back to you.
Thanks, Harsh, for joining the conversation, and it was very lovely having a perspective of Pankaj on the market. But let's move on to stock-specific action again. Well, amid the market seeing a nosedive, one stock which has bucked the trend is EaseMyTrip, that is EasyTrip. Well, the latest news flows was about the resignation of the CEO, Nishant Pitti. The stock has fallen over 20% in the last 6 months. Promoters as well have been exiting the travel services provider. However, no more promoter stake sale is what the chairman says. Well, Hiral is standing by us to bring us more details and a deep dive onto the stock. Hiral, please take it over.
Absolutely. If you see in terms of the stock price, a 26% kind of a downtick is what we've already seen in the last 6 months as well. So good amount of wealth erosion that's happened for the investors. Now, what's happening from a promoter's, FIs and DII's perspective? All the three of them have been reducing stakes. So it's not really the FIs and the DIIs who are losing confidence, it's the promoters as well. That's what it comes across, because if you see the FIs, their stake has gone down from 4.15 in FY21 to a 2.98. DIIs from 11% to a 2.49. And if you talk about promoters, from a 74.9%, it's now come down to 48.97. So selling across the board, that's what we've been seeing. Moving from there on, let's look at the promoter action. Now, Nishant Pitti has reduced his stake from 37.13% since listing to a 25.88 in December 2024. Apart from that, Nishant Pitti has sold 1.4% stake in December 2024. That's the recent one. And the reports were that he was planning to sell little over 14%. Now, whether there have been no buyers for the remainder or what's the concern, we don't know. But that's the amount that he's gone and sold. Prashant Pitti, though, has increased his stake marginally to 0.5%, to 10.29% in December 2024. So a marginal increase by Prashant, but the other two co-founders have gone ahead and reduced as well. Moving from there on, let's just look at Nishant Pitti's stake since the IPO. From 37.26, it's now gone down to 12.8. It was 14.21. That's when the reports were coming in as to that he's going to sell entirely, but now he's sold around 1.4 and stands at 12.8% with regards to Nishant Pitti. Moving from there on the back of the stake sale, he did come out with a clarification, probably, a tweet, he put out a line on X, clearly saying that he's recently sold a small portion, and it does not mean that he does not have any confidence in the company's future. In fact, he said that the team is talented, there is a strong growth path, and he does not have any intention of selling further stake. Now, whether this is damage control or not is what we need to hear out from the management and get a clarification from them on that front. But moving from there on, if you see in terms of who's buying, it's the retail investors who are getting stuck here, because from FY21, the retail participation was around 9.92%. It's gone up to 44.14%. So retail investors should hold or sell out is the key question over here, because FIs, DIIs, promoters, all three selling, retailers are getting stuck. Moving from there on, you've seen the leadership change that has happened now. Nishant Pitti has resigned. Rikant Pitti has taken over. Rikant was the CEO and he was a co-founder. He was the CFO and a co-founder. He's got elevated as a CEO from CFO position. Moving from there on, now when the promoters are selling out, what's happening? It's having a negative impact with regards to investors go. Secondly, reduced confidence in the company's prospects. That's what it is signaling from here on. Long-term stability is becoming an issue, and there could be a change in terms of where business strategy goes, taking into consideration that a new CEO has taken over. And from here on, what is deteriorating? Let's understand the fundamentals. Firstly, if you see in terms of the revenue, that has been the lowest in the last 5 quarters at 145 odd crores. So a downtick coming in terms of the top line as well. If you talk about the marketing and the employee cost, that is on an increase for the company. If you see in terms of the employee cost, highest since listing at 17.32% of the revenues. And if you see in terms of the marketing cost as well, that's also highest since the listing at a 0.48% of the revenues. Apart from that, if you talk at the operating level, the OPM margins, that's the lowest in last 13 quarters at 26%. So margins are also taking a beating. And if you talk about the debtor days, that stands at 144 days, which is the highest in the last 4 years. Very lastly, if you see in terms of unrelated businesses, that is what they've been looking at. Will that be a threat? That is what we need to understand from here on, because they've entered into electric vehicles. Second is they're looking at medical tourism. So these two are absolutely unrelated businesses for them. Medical tourism, what's the scope is going to be something that we need to understand. And very lastly, key questions that the promoters need to talk about is whether the promoters are en route and exit. What is the strategy from that front? Secondly, DIIs and FIs do not have the confidence, and that's the reason why they've gone ahead and reduced their stake. Thirdly, the board has actually given an approval for a fundraise of 1,000 odd crores. Will markets support it, and what is, what are they going to use these funds for? Because they have entered unrelated businesses. And why is the company looking at unrelated businesses? These are key questions that the company needs to respond to retail investors for them to make an informed decision. But clearly, wealth erosion is what is on the cards right now.
Well, very interesting, Hiral. Thanks for that. But we also spoke to Nishant Pitti, the chairman of EaseMyTrip, where he talks about how there will be no more promoters selling. Listen into the slice of the conversation.
As I mentioned before also, we were still, if you compare, tell me one company in the e-commerce space, in the B2C segment particularly, who still have 50% promoter holding. You will not find it. All the companies which are into e-commerce space have to dilute their stakes just to raise money. And we are bootstrapped and a profitable since inception company. So it was certain things which are being required by the family. So these are the things which have been done. So there are no more further selling, and the expansion part is on the way. Like the companies focus on standing international presence and exploring new markets, while also strategically acquiring this complementary businesses to accelerate our growth. This dual approach allows EaseMy to diversify its offering and expand its global footprints, positioning itself as more comprehensive travel solution provider across the globe.
Well, let's shift focus to the realty space. This one is not doing well in trade, down about 3%. Nifty Realty, the second most losing sector. Antique and Morgan Stanley have come out with their top picks for the sector and overview for second half of the financial year 25. Anushi, who tracks this sector closely, brings us more details on that one.
Hey, thanks for that, Rucha. So firstly, Morgan Stanley on what they're talking about the India property first. They expect DLF and Oberoi to show very strong sales momentum in the quarter. That's the third quarter. Key launches will result in about 35% of sequential growth in the last trailing month basis in terms of sales. And if they maintain this ratio that they have, this could mean that FY25 sales growth of 60% YOY could be achieved, which will outpace the peer growth which is there. Lodha and Godrej should report sales of 4,100 crore and 5,300 crore in line with what expectations is. In fact, if we see what Macrotech came out with their numbers today, they reported about 4,320 crore of pre-sales, so they've exceeded the expectations that Morgan Stanley had cited. Now coming to what Antique Broking is talking about the real estate sector, firstly they expect sales booking in Q3 25 to be muted for companies like Aditya Birla Real Estate, Prestige Estate, Sobha, Kolte Patil developers. This is on the back of lack of new launches that have taken place in the quarter. However, a lot of good expectations for a couple of names that one should be watching out for, which would result to that kind of a strong pre-sales growth number. We have companies like Godrej Properties, Macrotech, DLF, Oberoi Realty, Suntech and Brigade Enterprises in focus on the back of this. If you look at the Q4 expectations, they do expect reversal in some of the names wherein we are seeing some bit of a muted growth. This is expected from counters like Aditya Birla Real Estate, Prestige Estate, Sobha, Godrej Property, DLF, Brigade Enterprises, Suntech and Kolte Patil. The top picks in the sector, however, are Aditya Birla Real Estate, Oberoi Realty and Prestige Estate. So this is the overall view on real estate. Yeah.
Okay, thanks for that, Nushi. But let's shift focus on the big theme, which is clean energy space, and that's green hydrogen. Well, India ignited its green hydrogen revolution in 2022 with a dedicated policy, sparkling a flurry of initiatives. Currently, India has set a production target of 5 million metric tons of green hydro energy by 2030. So what does India need to do to reach this target? Whether it will be able to meet this and how? Mihika, which has tracked this sector closely, joins us with more details. Mihika, take it over.
So India has set many and specific green hydrogen goals. Green hydrogen is basically hydrogen produced by renewable electricity and makes less greenhouse emissions. Now, what are 2030 targets? Well, a production target of 5 million metric tons per annum and 15 gigawatts of electrolysis capacity, and the green hydrogen production target will be supported by renewable capacity. Now, there are certain current incentives in place. One is the Strategic Intervention for Green Hydrogen Transition Program, which is also called SITE. The total outlay stands at 17,500 crores. 4,444 crore is for electrolysis manufacturing and 13,050 crore outlay for green ammonia production. And there are certain listed companies as well that have become winners in terms of capacity. We have a Reliance Industry subsidiary, which is Reliance New Energy, Wellspin, Torrent Power, CSC, UPL, as well as JSW Energy. Other incentives also include green hydrogen plants, which are exempted from environmental clearances, as well as the interstate transmission charges are waived off for green hydrogen for 25 years. But there are still some challenges despite the incentives. One of the biggest is cost. Now, the current green hydrogen production costs are 2 times the hydrogen produced from coals and 4 times the hydrogen produced from natural gas. So now, current cost per kg in terms of production stands at $4.5 to $5.5. The 2030 target ranges to 2.5 to 3. But as per KPMG reports, the best case scenario to boost viability and to make it competitive would be $1.6. There are also other challenges like logistical difficulties with storage, infrastructure, and mismatch in producer offtake agreements. So what is needed? One is more incentives to make the costs more viable and competitive to other themes. One is a reduction in electrolyzer GST from 18% to an expected 5% as per SBI Capital. The waiver of power banking charges, as well as green debt provision to fund the capex. Higher impetus to develop renewable energy dedicated for green hydrogen is also necessary, and a standard medium-term off-taker agreement of 10 years, which meets the producers as well as the off-takers ask. And lastly, who could the incentives benefits? There are a number of companies in the space, in the electrolysis tech and manufacturing. We have an RIL, Cummins, L&T, and the Worry Group. And EPC players, we have players like L&T and Tata Projects. And the ones building the hydrogen plants, we have an Adani group companies, RIL, JSW Energy, Torrent Power, Renew Power, as well as the Acme Group.
Okay, thank you so much for that, Mika. But that's all that we have on the edition of Markets at 12 from myself and the team who has put this show together. Thank you very much for watching. Stay tuned to NDTV Profit for more news and updates.
This is on my face. Chalo. How do you define a disruptor?
The idea was, why should we charge differently? We should probably charge the same.
Was the idea to change things around?
People would be scared to put 50,000 rupees with us, right? But today, we have customers who put 500 crores with us.
What was your biggest challenge?
Did not have enough money in the bank to even meet the payroll.
What are the lessons that you've learned from the mistakes that you saw being made?
Didn't want to dilute their stake and therefore, ran out of cash.
Think you know what success looks like? Think again. Meet the disruptors, those who dare, dream and defy.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first trade to buy all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target. It has given a very good momentum with good volume.
Don't miss the chance to make the right
Hello and welcome to Profit Buzzers. You're watching NDTV Profit. I'm Hiral Dadia and with me is Mahima Vajrajani. Mahima, good afternoon. Clearly, if you see markets, they are taking a beating as we speak. If you see Nifty and Sensex, all initial early day gains have been erased. Almost 1,000 points cut coming in terms of the Sensex and 1,500 points from the day's highest levels. Let's just quickly pull up Nifty as well as Bank Nifty as well. There you go, nearly at the day's lowest levels, but a slight recovery from there has come in. 300 points cut is what we are seeing. The key over here is the markets are taking a beating ahead of the third quarter numbers as well as the HMPV China virus scare. Now, is that what is impacting the markets is a key question that we're looking at. And secondly, are investors actually doing a profit booking in the markets ahead of the result season that is trickling in? Two major themes that we will be watching out for in terms of where markets are concerned.
Consumption in focus, ITC trades ex-hotel business. Consumption in focus again because HUL in talks to acquire Minimalist, and mixed business updates coming in from consumption companies overall. BFSI is another space to watch out for. Q3 business updates coming in the BFI space as well. The fourth theme is order wins, where NTPC Green deep dive into HG Infra and KNR Construction will also be one of the things to watch out for. What's pushing ITI higher is the fifth theme to watch out for in today's show. Under pressure on acquisitions, JSW Infra, Brigade Enterprises, Hindustan Foods and Nazara Tech will be in focus. Seventh theme for the day will be profit deep dive of EaseMyTrip planners. And the eighth and the last theme is how and why Nuvama is bullish on SBI cards.
So clearly, Mahima, a lot of things that we should be watching out for in today's day of trade. But the key over here is in terms of what's happening in the markets, the kind of downtick that we are seeing. Let's just quickly pull up the Nifty, the Sensex, and see which are the stocks that are taking a beating. And if you have the Bank Nifty as well, there you go, 283 points, a mild recovery from the day's lowest levels that's trickling in now as we speak. Let's pull up Bank Nifty and see a sectoral heat map to understand where is the pressure building in. You have nearly 900 points is the kind of cuts, 1.8% lower in terms of Bank Nifty. All the Bank Nifty components, in fact, are trading under pressure, and majority of them have come up with their quarterly updates as well. So it's not only the banks, but the NBFCs also have seen an update in today's day of trade. In fact, if you see in terms of the advance decline ratio on Nifty 50, initially we had one advance, that was Apollo Hospitals versus all the other stocks that were declining. But you have Titan, Bajaj Finance, Tata Consumers, as well as Hero Moto. That has also joined the bandwagon to see some bit of a recovery from the day's lowest levels as we speak. But you have Tata Steel, which is the top loser, followed by a BPCL, Kotak Mahindra Bank, Coal India, as well as a Trent. Apart from that, let's just pull up the sectoral heat map and see where is the pressure building in as we speak. In fact, all the sectors are trading in the negative. PSU Bank Index is the top loser, followed by BSE Metals. Nifty Metal is also taking a beating. Energy is down and about in trade. Oil and gas and media. Real estate is down nearly 2% as we speak. So clearly, if you go to see a sea of green right now, but a mild recovery that's come in, at least in terms of the benchmarks, Mahima. What are you looking at in terms of the broader markets?
Right. Let's pull up the mid-cap 150 and the small-cap 250 and see at what levels are they trading at. We are seeing some pressure in terms of the broader markets. There you go. And it's not it's quite significant. The mid-cap 150 is down 1.8%, almost 2%, nearing to the 2% mark. But the small-cap 250 has already crossed that 2% mark. Let's also pull up the NSE 500 and see what are these counters that are seeing significant pressure because of the broader markets being down. There you go. There's ITC, there's Lloyds Metals, there's UBI, there's Team Lease. All of these counters under pressure. But something that's doing well is ITI. There's KOCL that's doing well. Aegis Logistics, Devyani International on the back of updates. All of these counters doing well in trade today. But Hiral, another trigger in the markets may be the reaction to the outbreak of the HMPV virus in China earlier, and today reports suggest that a case has now been found in Bengaluru. We spoke to Dr. Rakesh Verma, Principal Consultant at the Directorate General of Health Services, about the severity of the virus and what we know so far. Listen in.
The question, I suppose, on everyone's mind right now is, are we in for another global pandemic? And the question might seem blown out of proportion on day one, but the fact is that concerns are already rising over the HMPV. That's the human metapneumovirus. Now, the first case in India has been detected in Bengaluru in an 8-month-old baby who has not traveled out of the country. At this time, it is very important to get clear information which is based in fact. And to help us do that today on the show is Dr. Rakesh Verma. He's Principal Consultant at the Directorate General of Health Services, Government of India. Dr. Verma, thank you so much for speaking with us.
Good morning to you and your listeners and viewers. Very good morning to you. As you have pointed out, this is quite a scary information that we are, as medical doctors, we are perceiving it. And undoubtedly, the memories of COVID are very, very warm in our heads even now, in our minds, and we really want to avoid any such situation across the country. And the cooperation of general public, medical fraternity, nurses, health administrators, and media persons is very important. I must remember that during the first COVID and second COVID phase, NDTV did an onerous job in circulating and perpetuating the information, guidelines, prevention, and precautions to the general public, which did benefit a lot, and government was always thankful for that effort by the NDTV channel. And I wish that we should not be scared, but we must take all the precautions possible. Since again, this is a virus with the information available is one which transmits to the respiratory thing. So, by sneezing, by coughing, by having dirty hands.
Let me put to you, sir, some questions which are FAQs.
Always welcome.
That people would want to understand about this. First of all, is this as easily spreadable? Is it as infectious as COVID-19? Is it as dangerous as COVID-19? And I'll just add one more. What we're reading is that this HMPV virus is not new, it's been around. So why are we talking about it right now?
See, there are two kinds of virus. This is an RNA virus, which mutates, which shape changes its, like a cricket, like a spider. It keeps on changing its fabric and profile. So this is which mutates very fast. It changes itself very fast. It's like movie films, heroes, heroines, stars. They keep on changing their dresses very fast. You can't recognize them. There are certain movies, one hero plays 7 roles, 11 roles, 12 roles. So this is a virus which is A shape today, could be A plus shape tomorrow, could be C shape tomorrow, and could have the changing properties. So that is the most dangerous thing. Yes, you are correct. It also spreads with the oral cavity, with the respiration. So with every cough, with every sneezing, if an infected person can inflict the same disease to several people within a spectrum of 6 meters. That's why they say that we have to follow the same precaution. Now, considering whether it is the same prevalent or same dangerous, the news from China is still very much restricted and is very much censored. But whatever we presume, yes, this could be as lethal as COVID virus was, because both belong to the same family. Third, your query was whether this virus was available or prevalent. Yes, it was prevalent, but not in that, it did not have that many pangs. Just like we have so many snakes around us, but all snakes are not dangerous. There could be natural snakes. Only certain type of snakes could be more dangerous. So while the virus was present in the atmosphere, but the current mutation is seemingly very dangerous, could be causing lethal.
Okay, let me come to that part because you're explaining this very well. You're saying that the current mutation of this virus, which has been around, is giving a bit of concern. The concern, once again, like it was last time, I'm sorry to say, is because not enough information coming in from China, and the information that's coming in, honestly, we don't know if we can trust. So that is the concern.
Information from the origin country was kept secret for months and years together. Until today, we do not know what was the actual beginning of it, how it spread. And whether it came from a laboratory or from a fox market or from meat market, we do not know exactly. Whatever tailored information that we get, we were trying to work on that information. So even now, there is an epidemic in that country, and the information is very well restricted. As a doctors also, we got limited channels to know, but whatever we come to know, it's not encouraging knowledge. We are getting scared, and possibly government must be taking all steps to keep its hospitals, its medical facilities ready for any such exigencies.
Okay, so what is the treatment, and is there a vaccine?
See, as of now, the treatment is the treatment of the symptoms. There is no direct medicine for killing that virus. We are treating only as and when the patient will come. We will treat the patient's fever, patient's symptoms, sneezing, cold and things. But there is no vaccine as of now available, because we do not know which virus is there. We do not know what is affecting, what mutant is affecting. But as and when our laboratories are ready, they are geared up already, they are already making preparations. As and when we get the samples, possibly the vaccine development process will immediately initiate and do something good for the country.
And what is the testing mechanism we have right now? Can you tell quickly enough?
We were testing the throat swab, nasal swabs, and there's something known as PCR, or multiplex PCR test, which will be required. Those tests are available in our country, but making them more specific for this virus is time will tell. We have to modify our test according to those viruses.
Okay, so just last point, Dr. Verma, is now what do people do? We all know the basic precautions of staying away from someone who has a cold, etc.
Remember all the same thing, irrespective of virus, irrespective of this virus or any other virus, we must maintain a social distance. Do not go to a crowded place. Avoid markets. If somebody is coughing and sneezing, request him to be alone, go away, use mask or use big towel while sneezing or coughing. One should not hesitate. And when you're going in public, especially train travel, bus travel or aeroplane travel, please use a mask. Do not hesitate in using a mask, and keep a mask as close as you're keeping a handkerchief in the pocket, and never hesitate. And avoid going into public where it is avoidable. And when you're going to public, do not hesitate if the hands are dirty or shake a hand with somebody, or use your door handle which other people are also using. Do not hesitate in cleaning your hands with a good soap. Do not require a sanitizer always. A good quality soap will always be enough for sanitizing you and keeping you free from all these viruses.
Okay. So what we can hope is that as a people, as a nation, as a medical system, we have learnt our lessons, and definitely we'll be better prepared.
I can only assure you that we are fully geared up. The government is fully geared up, and government at the highest level always looking 4 steps forward. And last time also our Honorable Prime Minister was monitoring the COVID situation, and this time would not be any different. But we don't want an epidemic. We certainly don't want an epidemic. We want to nip in the bud.
Yeah.
And maybe that this is the only isolated case and doesn't convert into a pandemic.
All right. So we have to hope, and we have to hope for the best. Thank you so much, Dr. Verma, for speaking with us today.
So that's the conversation Tamanna is having with Rakesh Verma, and clearly is indicating that you have to be safe. Mutation from the country of origin was kept restricted, and you have to avoid public places like markets and try and wear masks wherever possible, because even doctors do have very little knowledge as of now, and there is no vaccine that is available. They will need more samples, with regards to the virus to understand and start looking towards manufacturing or making a virus that could come in as well. But so far, one case that has been reported in Bangalore. Let's see what the extent is, and let's hope for the best that it ends here. But moving on, the second theme is consumption. You have FMCG ITC that is trading ex-hotel business today. And today is the record date for the demerger of the business as well. In fact, it held a 1-hour pre-open session for price discovery of ITC hotels. Let's go across to Sajid to know all about ITC's demerger. Sajid, over to you.
That's right. ITC's pre-open, which happened between 9 and 10, discovered a value of nearly 26 rupees on the NSE and 27 rupees on the BSE. And ITC price has corrected to that extent after the special pre-open session. Now it trades at a normal ITC excluding the hotel business. From here on, ITC hotels, the dominant value of 26 and 27 will be there on the indices, which is on the Nifty and the Sensex, and it will continue to be there till the company gets listed, which is the hotel company gets listed. By guidelines, it has to be done within 60 days from the date of NCLT order, which was December 16th. But ITC would be doing it a little earlier, my understanding is, because given the fact that ITC is a heavyweight with nearly 4.2% weightage on the Nifty 50 alone, and a lot of global funds have ITC in their passive and active portfolios, and which are linked to MSCI indices or FTSE global indices. And the FTSE global guideline very clearly says that in case of demerger, the company has to announce the listing within 20 days. If within 20 days listing date is not announced, then FTSE can go ahead and drop ITC hotels from the indices, and that would mean that a lot of funds which ideally would want to carry ITC hotels as part of the portfolio, because ITC by weight and by market value would be eligible to be part of these indices, will have to start selling those stocks, so selling the shares basically. So it is expected by Jan 31st. ITC would announce the listing date of ITC hotels, and till then it will remain dormant on the key indices. Roughly around 50 indices are involved in this in domestic market, which includes 29 from NSE and roughly 21 from the BSE, which is there. Once the listing happens, it will continue on the indices till the time there's a certain guidelines which have been put in place that it will trade for 3 days, and if the stock hits a circuit either upper or lower on the first 2 days, then on the third day the exchange will extend it by another 3 days, and it will continue till the time the stock comes off the stock circuit. The entire trading would be on a trade-to-trade platform, which basically means that it will be delivery-based trade that will happen in ITC when it starts trading. Hiral.
Right. Thanks, Ajit, for getting us the details. In fact, let me welcome in Raghvendra Kedia, founder at Prosperity Advisors as well. Raghvendra, good afternoon and welcome to the show. Before I even head across to you with regards to where ITC goes, one quick question in terms of markets, because clearly we've seen a downtick that's come in right now. Though we are off flows, Two reasons that people are picking up is profit booking ahead of the earnings season, and secondly, the China virus that has made its entry into India. What is your read and what are you picking up from the markets right now? Is it the virus or is it profit booking ahead of the earnings season? What are the markets reacting to?
Good afternoon, Hiral. Broadly, we think that the overall correction and the sell-off in the market is driven by many factors. Prime most important is this scare of the China virus getting into a bigger epidemic or a pandemic. It's like burnt once, cautious forever. So the market participants, especially the longs, would prefer to sit on the sidelines and see how this development of the spread of the virus unfolds. There has been some concerns in terms of back of a moderate earnings season on the back, and upcoming earnings season we expect to be at best on a moderate level. So there is some profit booking ahead of the result season. There is also a concern that a US-China trade war or some sanctions, once Donald Trump takes into effect this January, there could be some kind of pressure on the exports from India also. So that also is a negative rub-off. Plus the US interest rates going up have seen the FPI flows slowly slowing down into India. So broadly, it's a global macro which is actually denting the Indian story. Broadly, the virus, the interest rates going up in the US president coming in, Donald Trump. So, and on the very lighter note, the earnings season is on the bottom of the list. But yes, we believe that the sell-off would continue to levels of another 2 to 3% in the index, and banking and auto would be among also the sectors which would see some selling pressure going ahead as well.
Another 2 to 3% kind of selling that could continue in terms of markets. And coming to you with regards to ITC, what's interesting over here, Raghvendra, is the discovery price for the hotel business at 26, where the street had an estimate of almost 130 to 300 rupees per share. How are you, reading the discovery price with regards to the hotel business, and what is your view for the two entities now?
Let me start with the big ITC. Every company which has a very complex business structure trades at a discount, and ITC was no exception. So now with this demerger and spin-off of the hotel business, ITC broadly becomes a FMCG major, and that could see some fresh buying from FMCG funds into the company. Even in the hotel business, we could see some pension funds or insurance companies which earlier would not buy ITC might be willing to buy just the hotel business. So we believe that once the ITC hotels is listed, that could be a great buying opportunity for anybody to pick it up and hold it for a long-term perspective, as the overall hotel industry stocks are going very good in terms of occupancy rate, average room rentals in India. So ITC hotel continues to be a buy once it gets listed. Moving to ITC, we still believe that it is cheaply valued versus its peers. If you compare it with the Hindustan Lever, a Dabur or a Britannia, it is on a P multiple of 27, it is half the valuation of Hindustan Unilever, which is at a 50 plus P multiple. So still there is a headroom for ITC to outperform, and considering it's a safe bet, FMCG defensive play, we believe that ITC in a 1 year horizon can see levels of around 520, 530. So that's another 17 to 20% upside in ITC from current levels of 450.
All right, so that's the view coming in on ITC. I think it will be interesting to watch out for once the business update also comes in on ITC, now that it becomes an FMCG major. Now moving on to one FMCG major to another FMCG major, that is Hindustan Unilever. It's nearing a deal to acquire Minimalist in India, and a Jaipur-based, which is actually a Jaipur-based skincare startup, in a 3,000 crore rupee deal. Now Sesa brings in more details as to how the merger and takeover will take place. Sesa, over to you.
Right, so yes, Hindustan Unilever Limited is in advanced talks to acquire Minimalist, in a deal that could value the startup at 3,000 crore, which is nearly 4 times its current valuation. Now, what we are given to understand is that HUL is in discussions to acquire a majority stake. However, ultimately HUL intends to buy the 100% stake over a period of 2 to 3 years. We are also given to understand that HUL is likely to close the deal within the current financial year. Now, interestingly, the deal comes nearly 4 years after Unilever Ventures, which is the investment arm of HUL's parent Unilever, has participated in a funding round led by Peak 15 partners. Now, as far as the financials are concerned, Minimalist generated a revenue of 350 crore in FY24, which is an 86% jump over the previous year, and it has also remained consistently profitable since FY21. That makes it quite an outlier in the startup space. As for HUL, the latest deal reflects its focus on high margin and low penetrated categories. Also, the beauty and well-being category currently comprises 21% of HUL's overall sales, while HUL currently controls more than half of the country's BPC space. Its portfolio is currently dominated by mass brands such as Lakme. However, HUL has time and again said that premium beauty offers exciting opportunity, and the company is expected to see this segment grow faster than rest of the portfolio. So in that sense, the deal is a strategic fit, but what remains to be seen is the contours of the deal as and when it is finalized. Back to you.
Right. Well, Cesar, thank you so much for breaking that down for us. Raghvendra, though beauty and personal care forms almost 21% of the total income for HUL, the growth so far in the BPC segment has not been very significant for HUL. We've seen that in 2024 also it was roughly around 2%. Do you think addition of Minimalist will make any difference? Because, on the face of it, the brand looks very promising.
Well, good afternoon, Mahika. Broadly, Hindustan Unilever have a very good history in terms of acquisitions. Whenever they have turned around the company, or in terms of revenue and PAT, the synchronization has went very well, be it Brooke Bond or Lakme in the past. So we believe this prospect acquisition might also fare very well in the days ahead. Yes, the overall revenue in the beauty and personal care is pretty less 25%, somewhere around early 20s. But we believe with this acquisition that revenue would grow up. And though the overall pie in the revenue is less, this is a high margin business. So HUL with this acquisition, Hindustan Unilever with this acquisition would have a very broad, wide, deep product offering in terms of offering a shampoo which is worth 3 rupees sachet or a 600 rupee cream on the personal healthcare side. So that would be a very good in terms of premiumization, in terms of economic offerings, in terms of urban target audience, in terms of rural consumption story. So it will be a fairly good acquisition if it goes ahead. In terms of how the valuation metrics unfolds, we would need further details. But going by the history and going by the current numbers of around 3,000 crores in deal value and high margin business, we believe that this acquisition of Hindustan Unilever of Minimalist would be very positive, and Street would take it up with a positive cheer.
All right. Well, with that, it's a time for a quick break. On the other side, we bring to you an extensive analysis on the remaining themes. So stay tuned.
On my face. Chalo.
How do you define a disruptor?
The idea was, why should we charge differently? We should probably charge the same.
What's the idea to change things around?
People would be scared to put 50,000 rupees with us, right? But today, we have customers who put 500 crores with us.
What was your biggest challenge?
We did not have enough money in the bank to even meet the payroll.
What are the lessons that you've learned from the mistakes that you saw being made?
Didn't want to dilute their stake and therefore, ran out of cash.
Think you know what success looks like? Think again. Meet the disruptors, those who dare, dream and defy.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first trade to buy all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target. It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings. Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
This is not my face. Chalo, chalo, chalo.
How do you define a disruptor?
The idea was, why should we charge differently? We should probably charge the same.
What's the idea to change things around?
People would
Welcome back, you're watching Profit Buzzers. Now staying with the consumption theme, a whole host of FMCG companies have come out with the business updates. Let's first take a look at Dabur, Marico as well as Adani Wilmar and Jubilant FoodWorks. Dabur, we're seeing that the rural consumption is resilient, but in terms of the business updates, it seems like a weak Q3. The consolidated revenue is expected to grow in low single digits and the company is expecting operating profit to grow in Q3. International business is expected to again grow in double-digit terms in terms of the constant currency terms. Now, in terms of the outlook, the company expects sequential improvement in demand. Citi has maintained a sell and cuts the target price to 510 for Dabur. They're saying that the Q3 update suggests a low single-digit consolidated revenue growth and expect 2.5% annual revenue growth in Q3 FY24. The brokerage has also trimmed the FY25 to 27 earning estimates by 1 to 3%. Moving on to Marico. Marico has seen a modest operating profit growth in Q3. That is what the business update suggests. The consolidated revenue estimated to grow in mid-teens. Company is expecting international business to grow at mid-teens in constant currency terms. In terms of the big highlights, the domestic business saw a sequential uptick in terms of volume growth, which is important for these FMCG majors. And in terms of the inflation, input inflation, it's higher than what was expected, and that has led to contraction in gross margins is what the business update suggests. In terms of outlook, watchful of margins in the near term. They eye profitable volume-led growth over medium term, and they are on track to meet double-digit revenue growth for a full year basis. Moving on to Adani Wilmar, they've achieved a healthy volume growth of 6% YOY. Revenue grew by 33% YOY. Edible oil volume saw 4% growth in terms of volume and a 39% growth in terms of value. Food and FMCG saw a 24% growth in volume and 22% growth in revenue. In terms of the fair share capture in southern markets, it's something that is driving value growth of around 15% for the company, and the key packed products recorded a double-digit growth as well. Moving on to Jubilant FoodWorks Q3 business update. Well, the provisional quarterly updates suggest that revenue is up 56%. So I think QSRs are back with a bang in Q3, and the net additions of 130 stores took place in Q3, and a group store count suggests a 3,260 total odd stores, and Domino's in India opened around 60 stores with a count of 2139. Basically, all of these QSRs are expanding on the back of store expansion, and this is something that is probably auguring growth for all of these companies. Raghavendra, I will come to you on all of these business updates. How do you read them? First of all, the FMCG majors and plus Jubilant in QSR space. We're also seeing Sapphire going up, Devyani going up, I believe, on the back of this.
Mahima, I can't hear you, so I have missed the question actually. I don't know if you can hear me.
Sure, I'll repeat the question for you. Can you hear me now? I don't think he can hear us, Hiral. Let's take the other set of pack from the consumption space and see.
You're overburdened with the entire sector today, but let me chip in on that one. Bazaar Style Retail, Titan, as well as Nykaa. If you see Bazaar Style Retail as well, clearly 24% is the kind of growth that we've seen on a year-on-year basis. Good additions in terms of number of stores as well. What they're saying is they're absolutely optimistic with regards to the fourth quarter of FY25, and this is on the back of the wedding season as well as Eid. These are the two triggers that is going to aid the fourth quarter. Let's just pull up that stock on the screens and see what a Bazaar Style Retail is doing in trade. Then you have a Nykaa also. If you see in terms of Nykaa, the company reported revenue growth higher than mid-20s in the third quarter. The B2B continues to witness rapid expansion. The margins for Nykaa have been range bound over the last 8 quarters, and the fashion vertical is expected to deliver a revenue growth of almost around 20%. The stock is seeing gains of almost 4.5%. And very lastly, Titan is an interesting one as well, because clearly if you see in terms of their growth, I think almost 40% is the kind of growth that we've seen with regards to where Titan goes. Their store additions is also pretty strong during the quarter. This is across segments. Currently in sales, around 25% is the kind of growth. Standalone sales is up around 24%. Emerging businesses have done well. Eye care has seen a growth of around 18%, jewelry 26% as well. The stock is seeing gains of almost 1.3%. In fact, it was one of the top 3 gainers as we started off the trading session today, in terms of Nifty 50, but slight cooling off has happened on this one as well. Do we have Raghavendra back now? So I think we are missing on the guest to give his view, but So that's with regards to where the consumption pack is concerned. Raghavendra, overall, all the names that Mahima and I have taken you through as well, how are you looking at it and what's your view? Any top picks from the segment? Raghavendra, are you able to hear me?
Yeah, now I patched in. Can you please repeat the question here?
Sure. So Raghavendra, 2 questions for you. The first one that Mahima was talking to you about was with regards to Dabur, Marico, Adani Wilmar, as well as Jubilant Food. These are the 4 from the food side of the consumption story which have reported their business updates. What do you make of them? And with regards to valuations as well, what would you recommend?
Well, let us break the question in 2 parts in terms of the business update. So we have seen broadly there has been a volume uptick for across the board in terms of Dabur, Britannia, Marico, or even Jubilant Foods. So that's a positive sign. But what I won't say concerning, but on the neutral part of our outlook remains that the margins have remained stable, where there has not been any incremental increase in the margins, which could have been very profit positive, but that has been steady broadly. So if the company continues to be on the volume trajectory growth, Marico at 650 looks good. And in terms of there's a lot of populist measures from the government coming on in terms of free subsidies like a Ladli Beti, Ladli Behan, in terms of a very good monsoon on the back of it. We believe that the overall consumption story could play an uptick. And when the overall markets are correcting, FMCG comes out as a very good defensive play, as a safe bet. When money gets shifted from high beta names, riskier sectors, to FMCG sector. So that could also see some positivity inflows in terms of a sectoral shift in FMCG. So we still believe that there is an upside in Marico broadly in FMCG names, and at 650 levels, Marico, and at 450 levels, ITC. These two stocks remains our top pick. And what was the second question, please?
Raghvendra, the second set was Bazaar Style Retail, Nykaa and Titan. These three have also reported their numbers. A quick view.
Yeah, so Bazaar Style is an asset-heavy model. Valuations are very expensive, so we would avoid. We prefer in this space asset-light models. So Nykaa remains our top pick in terms of there is a valuation to the Falguni Nayar being at the board. So we believe that even at 175 levels, Nykaa at any dip should be taken as a buying opportunity. We believe asset-light models should be the way to play the platform-based businesses.
Right, so that's with regards to FMCG names, but also let's welcome in Sarvendra Srivastav, market strategist. Sarvendra, firstly, good afternoon and welcome to the show, and a pleasure to speak to you. I don't know after how many years. Clearly, in terms of FMCG names, the kind of moves that you're seeing, what are charts indicating and any top picks that you would have?
Very good afternoon, and it's a pleasure connecting with you. We've been meeting on air after a long time. So yes, lots of water has flown in between. Coming to your questions on the FMCG space, I think yes, I would agree to the extent to the other speaker that these are defensive names, and if the market is slightly correcting, you could possibly see some outperformance here. But those are areas when you're looking in slightly normal times. But this overbought reading on the Nifty FMCG itself or the BSE FMCG, if you see that, I think the index is quite overbought, and the kind of readings that I'm getting right now, I think along with the market, these stocks will also be punished. I think outperformance will now get punished is what I feel. So because you've already seen a broad set of stocks which have already corrected. So these names, yes, defensive in nature usually, but this time around, I think everything goes down with the index. So if we have to look at levels now, I think 23,400, 23,500, these are very important levels for the index. If we have to take a support and get a meaningful pre-budget rally or its kind, I think 23,500, 23,400 is very critical on the Nifty spot. So as long as we are holding those levels, I think we could still have chances for a bounce. But largely, I think medium to long term, the trend has inverted, and you could see larger corrections on the FMCG space. So I would, as I said, avoid giving recommendation to the buy side at the moment and want to wait and watch. And in fact, a few large names where risk rewards are better, I think you could actually initiate some sells as well, or profit taking is also advisable. Right. Those were profits, yeah.
All right. So profit taking is also advisable. Is the kind of view that he has, Hiral. What do you have to say about
Just
that?
one quick one. Breaking right now is with regards to where the rupee goes. It's actually hit a fresh low of 85.846 against the US dollar. In fact, Vishy was just about to join us with regards to an update in terms of the banks, but let me just go to him to get a quick view in terms of the currency. Vishy, overall, a fresh low of 85.846. I'm sure you've not got the time to speak to any of the traders or anything, but what are you picking up so far during the day?
Right, Hiral. So, this weakness has been continuing all through December, and now again in January, we are seeing the rupee hit an all-time low. Just understandably, so the dollar has been strengthening, and you're seeing a lot of Asian currencies show that kind of weakness. So, rupee showing that is not surprising to anybody who's watching the currency. Having said that, there was some amount of short covering that was happening towards the end of December. Importers who were not exactly covered on the currency risk front were out there in the market buying dollars. What is happening currently, we'll still come back on that. But things look like more of what we've already seen in the last 4 to 6 weeks as far as the rupee is concerned.
Thank you for that quick one right now. But just stay with us before we come to you with regards to further updates on the banking space. We just have our colleague Varun who's joining us with regards to where the Meta goes. Meta has actually moved NCLAT to challenge the 213 crore rupee CCI penalty over WhatsApp's 2021 privacy policy. Varun joins in. Varun, what are you picking up?
That's right, thanks. So yeah, a little background for our viewers. So in November last year, the CCI had imposed a penalty of rupees 213 crores on Meta, which is the parent company of WhatsApp. Now CCI had imposed this penalty because it found Meta guilty of abusing its dominant position and in the implementation of WhatsApp's 2021 privacy policy. And through its investigation, CCI had found that the 2021 policy was on a take it or leave it basis and that constituted an abuse of dominant position. Now as per this update, the 2021 update, the user data was collected and shared with other Meta Group companies, which created an entry barrier for its rivals. Now, senior counsels Kapil Sibal and Mukul Rohatgi appeared for Meta today and informed the NCLAT that the CCI order has huge implications, and since it would have industry-wide ramifications, the case must be heard on 16 January, that is 10 days from now, and the NCLAT principal bench agreed to their request, and the case has now been posted for a hearing on 16th of January.
All right, so that's the update coming in on the Meta case. Moving on to the third theme of the day, that is the banking space. We have had several names coming out with the business updates from the banking and financial services space. First up is HDFC Bank, and Vishy is joining us to give us more on that. Vishy, I believe Q3 loan to deposit ratio have shrunk.
Yeah, lucky we were there for the rupee, but as far as your HDFC Bank numbers are concerned, advances showing a bit of a not very happening trend, 3% year-on-year growth as far as loans are concerned. But that is understandable because this is also a quarter where HDFC Bank has been selling loans off of its portfolio while adding fresh loans. So the cumulative growth is lower. Deposit growth, now that's looking pretty strong for HDFC Bank at about 16%. And interestingly, this is the first quarter in many quarters since actually July of 2023, the first time that the outstanding deposits are more than the outstanding loans for HDFC Bank. So the loan deposit ratio has come down to around 99.1% from 100.7%. Doesn't look like a lot, but that 1% drop in the LDR ratio is very important for HDFC Bank, which has been looking for ways to control the outstanding advances on its portfolio. Remember that because of the merger with HDFC Limited, the amount of loans had exceeded the amount of deposits on HDFC Bank's balance sheet, and that was creating some amount of problems because headroom for growth was becoming limited. And of course, the Reserve Bank of India was also of the opinion that banks should bring down their LDR ratio. So as far as HDFC Bank is concerned, that's something that has turned out to be a positive. CASA deposits, about a 4.5% growth year-on-year. As far as CASA deposits are concerned, not that great, but understandable simply because of the high interest rate scenario in the economy right now. Borrowers typically or depositors typically move their current account and savings account deposits to fixed deposits. So overall deposits have grown 16%, CASA about 4.5%. CASA ratio has dipped 371 basis points on a year-on-year basis to about 34%. So that is still something that HDFC Bank needs to worry about. Start building that low-cost deposit base. All in all, a mixed bag sort of numbers for HDFC Bank.
Right, Vishy, since you're still here with us, Nomura has come out with a note and they seem extremely bullish on Bajaj Finance. Give us some more details as to, what is there in the note exactly that makes them bullish on the counter.
Right. So as far as Nomura's assessment of Bajaj Finance is concerned, they're looking at the provisional numbers that Bajaj Finance has put out, and according to them, the company is showing continued strong performance across all parameters. They have actually upped the target price from 7,250 rupees per share to 8,560 per share. That's a significant jump on the price target there. According to the brokerage, the reasons for sustained performance include new product launches, of course, that the company has done, and the balance between secured and unsecured loans. Remember that Q2 was not that great for Bajaj Finance because they had guided for higher asset quality problems in the rest of the year. What Nomura is saying is that they don't see much upside risk to this assessment by Bajaj Finance in Q2. So things are looking more stable for Bajaj Finance. Alongside that, of course, advances growth is quite strong. Now, the provisional numbers point out that AUM is about 3.98 lakh crore, very close to that 4 lakh crore number. They had just reached 3 lakh crore last year and now adding more loans on their portfolio, about 28% year-on-year growth. Similarly, on the new customers base, about 21% growth, as well as new loans booked, about 22% growth. So totally for Bajaj Finance, this is looking like a very, very strong quarter, but we'll still wait for the final numbers to come out on the 29th of January when the company discloses what the asset quality position for the company is at this point.
All right, thank you so much for that, Vishy. Raghvendra, I'll come to you quickly on all of these two counters, that is HDFC Bank as well as Bajaj Finance. How are you viewing both of these Q3 business updates?
A lot of positive signs in terms of loan to deposit ratio becoming in single digits, in terms of the CASA coming at around 4%, and there is some significant growth in terms of the overall deposits at around 16%. So we take these deposit growth, LDR coming down as positives. The benefits of the merger with HDFC Limited will also unfold in the coming quarters. So we believe a 20% upside for a target of 2,100 on HDFC Bank is possible for a time horizon of 1 year. Bajaj Finance, we believe that the positives are factored in at current price of 7,400, and the stock might be at lackluster levels. So overall, we prefer smaller NBFCs where their overall trajectory of growth could be much higher. So HDFC Bank is a preferred pick in terms of, if you ask between HDFC Bank and Bajaj Finance, and Bajaj Finance at current levels is a avoid unless it significantly corrects.
All right, Sarvendra, on the charts, how does HDFC Bank and Bajaj Finance fare?
See, going first with Bajaj Finance, I think I would agree that from 2021 onwards, I think it's been very difficult for Bajaj Finance to stay above 7,800 on closing basis. And I'm talking about monthly longer term charts. So I think, and it's not been able to breach that psychological 8,000 mark and stay above that. So there was a brief period where we stayed a couple of days, weeks, we stayed above that. But broadly, it's not been able to go beyond that 8,000 levels. So I think risk reward wise, I would agree that the risk rewards are not that great here for a long trade. Possibly, as I said, maybe someone who's from the more aggressive side, so who's an aggressive trader or a sharp trader, he can possibly look at maybe shorting Bajaj Finance also. So in that case, I would agree with the speaker. And secondly, I think on the HDFC Bank front, I think here also, if you look at it, 1,800 was a important level, which it was not able to take out for a couple of years. And this time also we went past 1850, but we've kind of sold off. So here also I would agree. I would still suggest here that on a correction, possibly I will look at HDFC Bank for buying, but not now. And Bajaj Finance possibly. I think risk rewards are more on the sell side right now.
That's with regards to HDFC and Bajaj Finance, but let's look at other banks also that have reported their quarterly updates, because that is what is causing some bit of a dip in terms of the stock performance. Union Bank of India also trading under pressure. Harsh, which are the banks that you're picking up, and what are the updates indicating? Any trends that you're picking up so far?
Well, it's a tough growth environment, Hiral. That's essentially the trend that's playing out. You're not seeing the kind of growth that one would expect from some of these banks. Whether it's certain banks constrained in terms of deposit growth, whether it's asset quality, which is impacting the growth of other banks, maybe a combination of those factors playing out. What you're seeing for sure is pressure with regard to deposit growth. So that has come back in a significant fashion, at least in this quarter. Someone like an IndusInd within the larger private banks seeing pressure with regard to deposit growth. You've also seen that in RBL today. So your loan to deposit ratios have started again to shrink, at least in terms of those with updates. AU Small as well, for example. So those are some names. But let me focus on the specifics. One, Union Bank of India. Growth absolutely muted in terms of deposits. -2% sequential. So they've actually degrown deposits. Deposit growth over the last 12 months is now at 3.8% YOY growth. That's abysmally low. Advances too, just shy of 6% YOY growth. 2% sequential, so definitely better on a sequential basis, but the year-on-year number not providing any comfort whatsoever. So that's one a bank which is seeing a bit of a drag today. The other one is Bank of Baroda, where growth has come off sharply. And of course, it's a quarter where consumption has likely picked up because of festive. And despite that, Bob has done 2.5% sequential, just about 11.5% on a YOY basis on the advances front, and a very similar number on the deposits front, 2%. But now you're seeing Bob in terms of loan to deposit ratio at around 82%. will that constrained growth will likely be something that the street will look out for. Last off, I want to suggest that Citi expects BOB's margins to actually compress further this quarter, so watch out for that as well. And that's probably the other piece which is keeping the street worried. Last off, RBL Bank, again deposit growth negative 1% on a sequential basis, 15% YOY, while CASA has gone up, which is the positive, and granularity of deposits have also gone up. I beg your pardon, CASA has actually fallen 3% sequential, but granularity of deposits has gone up. So below 3 crore deposit has actually seen a bit of growth. So that's where all the growth has come from. Advances 3% growth. So that is decent, and that's probably why the street's kind of rewarding the stock on an otherwise difficult day of trade.
Right. Thank you, Harsh, for that. Before we just get on and get Keta Kurkute ED at United Financial Consultants to join in, but a quick view, Sarvendra, with regards to the three banks that Harsh spoke about. What are charts indicating?
See, we'll also like to look into the Nifty PSU bank index, and where there you see, I think again, there's still that index is also possibly struggling. So I think looking at the bank Nifty and both the Nifty Private Bank and the Nifty PSU bank index, I think broadly another 8 to 10% I think is still possible on both those indices going down. So I would still believe that a small little correction is possible for both the private and the PSU space.
Right, so that's with regards to the PSU versus the private banking space. But let me get in Keta Kurkute ED at United Financial Consultants as well. Keta, welcome to the show. Good afternoon. The rupee has further slipped to a record low right now. What is it that you're picking up? What is the reason for this kind of a number, and what's the action?
If you look at the CNY, we are seeing CNY at the new low today again. It is trading around 7.35. Definitely a weaker Chinese currency will have a good weight on all the Asian currencies, and rupee is not an exception to it. International dollar is also trading close to 109 mark. So that is also one of the reasons why it is under pressure. But somehow, if you consider the technicals on both dollar index as well as on the dollar rupee, looks like it is trying, the steam is losing. At this moment, it is hovering around at this level. 85.87 is the immediate resistance. So it will try to hover at this levels. We are expecting a small correction at this levels because we on a RSI and all the technical levels, it's quite overstretched. Having said that, after a pullback, we are expecting it to consolidate on a weaker bias only because of the how the Trump policies are going to happen, and we have to even watch out for the FPI flows in 2025. So we have started 2025 with a rough move, and we have to be cautious at these levels.
We have to be cautious at these levels. I agree, it's a rough start to 2025. Keta, where is the RBI according to you? Because considering the change of guard at RBI, there was an expectation that we could see some bit of creativity in terms of where managing stabilization is concerned at the cost of these temporary bouts of volatility that we could see in the Indian rupee. So what are you picking up on that front?
See, we have to actually, everybody's waiting and watching the move that RBI is going to come. But definitely the stance of RBI, I think so since ages, I am in this market since last 20 years. And they have we have seen 2008 crisis and again a taper tantrum. And they have done a solid job in protecting the financial market, especially the currency. Even if you look at 2024, we have just depreciated by 2.8% vis-a-vis all the other emerging market currencies as well as Asian currencies. They will be there, they have to come up, but you cannot protect a currency, you cannot go against the tide for a pretty long time. So they will be there. I think so this levels of 85.82, 83 are the crucial levels wherein they are there in the market. They are trying to cap in the volatility and cap in some rupees depreciation. Because right now, see, what we are doing is beyond this level, there are no technicals for us to look at what could be the high. So people are talking about 87, 89, what not levels have been discussed in the market. But RBI will definitely come and try to reduce the volatility, or again a band could be seen. So we have shifted from 84 to 85. Now we are above this band. So 85, 86, I think so is the new band for next 6 months.
Wow,
Where
85 to 86 is the new band for the next 6 months.
Absolutely.
That's going to be an
Absolutely.
interesting one. That's going to be an interesting one, Keta. We'll be happy to have a detailed discussion on this little later because we're completely running out of time. But Raghavendra, Sarvendra, as well as Keta, thank you so much for joining us on the show and sharing your views with regards to markets as well as with the rupee hitting the new low. So overall, the markets have corrected in today's session. There has been a mild recovery, Mahima, that we've seen as well.
Right, absolutely. And, with that, that's all that we have on the show for now. But stay tuned to NDTV Profit for more news and updates.
On my face. Chalo, chalo, chalo.
How do you define a disruptor?
The idea was, why should we charge differently? We should probably charge the same.
What's the idea to change things down?
People would be scared to put 50,000 rupees with us, right? But we have customers who put 500 crores with us.
What was your biggest challenge?
Did not have enough money in the bank to even meet the payroll.
What are the lessons that you've learned from the mistakes that you saw being made?
Didn't want to dilute their stake and therefore, ran out of cash.
Think you know what success looks like? Think again. Meet the disruptors, those who dare, dream and defy.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first trade to buy all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target. It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings. Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Welcome to NDTV Profit. You're watching Top Trades. I'm Hiral Dadia and with me is Rucha Somaya. Rucha, good afternoon. Clearly, if you see in terms of markets in the last 1 hour, we did see a lot of beating, but there has been a recovery that's happened from the day's lowest levels as well. Very quickly, let's just pull up Nifty 50 on the screens as well as also pull up Bank Nifty and see what's happening on that front, because sectors across the board have been trading in the negative as we speak, but there has been a mild recovery. There you go, 360 points down tick in terms of Nifty 50. And in terms of Bank Nifty as well, there is pressure building in. In fact, it's the quarterly updates that have kept the financials absolutely under check. And that's a similar trend that we're witnessing with regards to FMCG as well. But there have been some positive surprises also that have come in. Overall, if you see in terms of the Sensex, almost a 1,500 point drop from the day's highest levels is what we saw in today's session. Let's just quickly pull up the sectoral heat map as well as individual names as well on Nifty 50. If you see the sectoral heat map, that will tell you a story. IT is the least losing sector. I'm sure Rucha is happy about it as well ahead of the earnings that start trickling in. But healthcare, pharma also trading under pressure. You have the PSU, bank, metals, energy, real estate, oil and gas. These are the top losing sectors in today's session. Moving on, let's just quickly pull up the stocks which are losing out, because Apollo Hospitals, interestingly, was the only gainer on Nifty 50. But that has been joined by Tata Consumers, Titan, Bajaj Finance and Infosys. All of these counters have seen a recovery from the day's lowest levels. Whereas on the losing end, you have ITC, HDFC, RIL and Kotak Mahindra Bank. ITC, HDFC and Kotak Mahindra Bank will be the stocks that we will be talking about in detail as well. But Reliance is also contributing almost 34 points. Rucha, clearly, are broader markets also reflecting a similar trend?
Yeah, definitely, for sure. If we can pull up the mid-cap 150 index, it is down about 1.5%, actually more than 1.5%. Small-cap 100, more than 2.5%, almost 3%. But if we take a quick look at what are the constituents of the mid-cap 100 doing, well, on the positive side, we have Nykaa, which is up about 4%, followed by Dr. Lal Paths, which is up about 3%. SBI Cards. Emphasis is buzzing on a brokerage note. Jefferies, which has initiated a buy rating on the stock with an upside of almost 18% over here. But on the losing side, well, over here we have names like Union Bank, IRDA, IRB, Infra, which is not doing well in trade. But let's pull up the small cap 100 index as well, and let's see which constituents are buzzing in trade. Yeah, there we go. We have Swan Energy, which is down about 6%. Well, this one hit a 52-week high almost a few days back, followed by 5-star as well. But on the positive side, well, we have likes of ITI. This one is definitely buzzing in trade, 15.5%, and not only today, Hiral, this one is up about 20% in last 5 days, but we'll definitely talk about this one during the course of the show, Hiral.
Absolutely. So a lot of individual counters that we have been watching out for. Let's just quickly pull up EaseMyTrip planners. That's an interesting one. In fact, that was one of the stocks that we were focusing on the back of a deep dive. But is this a falling knife opportunity for investors, or should the retail investors exit? That's the key over here. The stock is up almost 6%. What's happened over here is you recently had Nishant Pitti, who went ahead and sold almost 1.4% stake out of the little over 14% that he held. And the FIs, DIIs and promoters have been on a selling spree since the stock listed in FY21. To now. So clearly the FI holding has come down from 4.15 to a 2.98. DI holding has come down from 11% to a 2.49, and the promoter holding has come down from 74.9% to a 48.97. Now, taking all of this into consideration, there have been concerns, and it's mainly the retailers who are actually, collecting EaseMyTrip. The key questions were whether a retail investor should hold, because they have been looking at unrelated businesses. Secondly, if you talk about the promoters, their stake sale is something which was concerning. Clearly, there was reduced confidence in the company's prospects as well because of all of this. Long-term stability has been an issue as well with regards to where the leadership changes have been taking place. And there's a change in business strategy now with Srikanth Pitti taking over as CEO, wherein Nishant will continue to be the chairman. In fact, overall, if you see, the employee and the marketing costs have been the highest since listing. The revenues have been the lowest in the last 5 quarters as well. Their operating margins have been the lowest at 26% in the last 13 quarters. And if you talk about their debtor days, that stands at 144 days, which is the highest in the last 4 years. So with all of this into consideration, we also spoke to Nishant Pitti, the chairman now at EaseMyTrip, to understand from him as to why the promoters have been selling, what is going to be the action from here on. Let's quickly first listen, and then we'll go to the guest.
As I mentioned before also, we were still, if you compare, tell me one company in the e-commerce space, in the B2C segment particularly, who still have 50% promoter holding. You will not find it. All the companies which are into e-commerce space, have to dilute their stakes just to raise money. And we are a bootstrap and a profitable since inception company. So it was certain things which are being required by the family. So these are the things which have been done. So there are no more further selling, and the expansion part is on the way. Like the company is focused on sending international presence and exploring new markets, while also strategically acquiring this complementary businesses to accelerate our growth. This dual approach allows EaseMy to diversify its offering and expand its global footprints, positioning itself as more comprehensive travel solution provider across the globe.
So going forward, will you look at increasing stake? You're saying no more selling. Would you look at increasing stake in the future?
I can't say on that part right now, but my focus remains firmly on EaseMyTrip growth, and I'm fully committed to supporting an expansion and success.
But no further promoter selling that could be on the cards. Avinash Gudakshaka, Director at Research Profit Mart, joins in. Avinash, good afternoon and welcome to the show. How are you looking at the EaseMyTrip? Because in terms of fundamentals, a lot of things that are happening, a lot of unrelated businesses that they're entering. International business expansion plans is what is on the cards, and 1,000 crores is what they plan to raise, for which they are planning to do roadshows from here on. The stock is corrected almost around 25 to 30% lately. What would you advise investors to do?
No, I think Hiral, first of all, good afternoon. And my sense is that, whenever the promoter divests such a large equity chunk in the market, I think it's definitely a cause of worry because, whatever expansion they plan to do, the commitment of the promoter is obviously known by the percentage of the shareholding. And I think clearly, the promoter who has sold off the stock, there is a possibility that some further sell-off cannot be ruled out. And most importantly, they are diversifying into unrelated businesses. Now, this is something which the markets would not digest that easily. As you rightly mentioned, their debtors collection days are pretty high. Their margins also have been lower as compared to other listed peers. So I think, it's always better to be a little cautious here because one is, we don't know what is the percentage of promoter shareholding which may further come in the market. And secondly, the kind of expansion which they are planning, these are all new businesses which I believe would take a little bit of more gestation to start generating cash flows. So it's going to be a long gestation period for the new business. And that is something which I think the existing shareholders have to worry about. So I think it's better to wait for some time till some clarity comes in. Existing shareholders can also book out some gains if they are sitting on good profits. But I think overall, they run a very profitable kind of app, which is basically for ticketing and hotels. And I think that tailwind will continue because as long as the hotel and hospitality business continues, we would say that, steady kind of growth on that business will continue. But the market would like that the promoters definitely stick to now their current shareholding pattern. Any further sell-off would actually spoil the market sentiment further on the stock.
All right, thank you so much for that. But let's shift focus to an ITL Limited, which is up about 15% in trade today. And last 5 days, it was up about 27%. Yes, there we go. Actually fallen from the day's high, but still up about 14% is what we could see. But let's briefly look at what the company actually does well. This is an Indian public sector undertaking which specializes in manufacturing and marketing of telecommunication products. In terms of the suite of the products which it has, it manufactures optical networks, Wi-Fi access points, and also set-top box, etc. It also provides defense products and optical fiber cable. It is also into manufacturing and marketing of diversified products such as smart energy meters, smart cards, solar panels, and mini personal computers as well. Let's look at the stock performance. Over the last 5 days, up 27%, 6 months 67%, and 1 year 72%. So what stellar returns this one has given. Actually, this might be unnoticed by most of the investors, but this public sector undertaking has given stellar returns. What is the buzz? No fundamental news as such in this one, but yes, volumes surged during these days. Currently, it is at around 1.5 times its 30-day average. But let's look at the key recent announcements. The most recent one happened on 7th November, wherein it emerged as level 1 bidder for around 3,020 crore worth of BharatNet project for middle mile network. On 10th September, it bagged an order worth around 300 crore rupees for solar street light systems in Bihar. And on 29th August, it bagged the first EVM order from West Bengal State Election Commission. Well, the recent numbers, that is the second quarter numbers, if we look at that, is up. Revenue is up 310% from 250 crore same time last year to a 1000 crore. So that's a whooping growth over here. Operating profits also up by 160%. Loss was down 44%. So same time last year, it had a loss of about 126 crore rupees, and this time, that is in second quarter FY25, the loss was at 70 crore. So narrowing of loss is also what we could see because of stellar operations. But Avinash, my question to you is: do you, number one, keep a track on ITI, and if yes, what do you think of the recent rally?
No, I think, frankly, ITI operates in various sectors, and I think amongst the interesting sectors are basically the telecom equipment business, which is going to get a big fillip because of the 5G rollout. And most importantly, on the solar business side, typically on the computer laptop side, I think there's a lot of order wins which the company has got in the last 6 months. And I know that is the reason the markets are quite excited. Losses have also come down. So I think probably, FY26 could be a lot better. And I think that is what the stock is indicating. So, clearly this was a little bit of a slow mover in the earlier period. But with these orders, I think the revenue visibility has improved significantly. And I think that is the reason the markets have given it a thumbs up. And probably we could see maybe for the December quarter or maybe for the March quarter, the company may come out with a, positive bottom line. And that actually could further re-rate the stock. So I think, it's interesting times for the company. I think one has to take a slightly longer term call here. Markets have started discounting the future, especially FY26, when hopefully the company will be profitable. So I think, that's the reason the stock is in the limelight. And that is the reason we have seen that this PSU stock has done really well, in a reasonably short period of time.
Right, so short period of time, good growth coming in terms of ITI. But moving on, KNR Construction, NTPC Green, DCX Systems, all buzzing on the back of order wins. KNR now is trading under pressure at the day's lowest levels. All of them have actually turned into the negative. Anushi, what are the order wins? And stocks have now actually cooled off.
Right. So I'll start off with NTPC Green first. Now, here the subsidiary NTPC Renewable Energy has won a 1000 megawatt of project from Uttar Pradesh Power Corporation Limited. It has emerged as a successful bidder in the solar PV power project auction with a tariff, securing a tariff rate of rupees 2.56 per kilowatt per hour. And the letter of award from the other side, that is Uttar Pradesh Power Corporation, is awaited for this. In other updates for the company as well, NTPC has UP Green Energy Limited has been set up on the 1st of January. This is going to be a JV between NTPC Green Energy and Uttar Pradesh Rajya Vidyut Utpadan Nigam with a shareholding ratio of 51:49. Coming to KNR Construction, multiple set of orders that we are seeing. Firstly, they've received a letter of award worth rupees 328 crore in Telangana. This is for a flood flow canal of Sitarama lift irrigation project. Contract period for the same is 24 months. In other highlights also, it won another 198 crore project in Telangana. This is a JV order in which KNR holds about 51% stake. Contract period again, like the last order, is around 24 months. Total order book, if you see as of September end, that stands at about 4,406 crore. Coming to the last one is DCX System in the radar, which here the company has received an export purchase order worth rupees 483 crore. This it received from its customer called Elta Systems from Israel. This is to manufacture and supply of close-in weapon systems. If you look at order, this is a significant order considering the order book that the company had as of September end, which stood at about 2,164 crore. So these are the three stocks in focus on the back of order wins.
Thank you, Anushi. In fact, Avinash, let me come to you. Your top picks out of the three.
No, I think clearly, within the three stocks, DCX System looks pretty attractive. It's a defense play. And I think they've got a very large order of almost 400 crores plus. So I think, in this kind of market, Hiral, when the markets are worried about a new virus, which I think has been the major cause of concern today, I think that's the reason markets are ignoring all fundamental news plays. And that's the reason, despite good news, stocks are slightly under pressure. I would suggest that, this is a good time to accumulate quality businesses where the revenue visibility is good. And I think DCX System has been accumulated by a lot of HNIs, funds, and it definitely appears to be a reasonably good bet within the defense basket. Defense is a sector where I believe in the coming budget also there could be a lot of big announcements by the government. So I think DCX System seems to be pretty good at the current level. The other two companies also, I believe, KNR Construction has been a very well-established player in the EPC construction market and has been one of those companies where they have delivered projects before time. So I think there also, if one were to take a slightly medium-term call, KNR also can definitely give a reasonably good risk reward.
Okay, thank you so much. But let's move on to work hard. Well, down about 4% in trade, but up 65% in last 6 months. So definitely very good returns is what the stock has given. But we spoke to the management on the back of receiving approval for the antibiotic drug. Listen into the slice of the conversation.
This drug, McNaff, we have just received approval a few days back from drug controller. And we should be launching in about 3 months' time. And it will be available in the market. In India, just to get you the size of potential, is we would be focusing primarily on specialists to introduce the new drug, McNaff, to chest specialists and consulting physician only, so that it is not misused and it is used correctly. And the incidence available and to these specialists is about 15 million patients every year. So it is a very significant market potential of 4,000-5,000 crores in India. And I am sure once we go outside India, the market is equally even larger than what is here in India. We would be launching McNaff from beginning of FY26, that is about March, April. So there will be no revenue whatsoever in 25 FY. But 26, we expect at least nearer 70-80 crores revenue. And I think over next 2-3 years, we should be able to get about 10% of the market potential, 10 to 12% of the market potential in India. As far as the international market is concerned, I think we will be introducing in Saudi Arabia in less than 1 year, because we already received a fast track approval. And that is where the first country we would be introducing our product. The other places, it will take generally 12 to 18 months from now on to get the approval and then launch the product. So we would be launching the product in Latin, Southeast Asia, Africa, MENA region, all over the world actually.
Well, that was the management. But Avinash, coming to you, what do you think of Wockhardt? Good time to enter foreign investor in this one, or any other pharma pick do you have?
I think Wockhardt definitely is in the limelight because of the new molecule discovery and the launch expected in the next, say, 2 to 3 months. But I think, the stock has run up quite significantly. Sometime back, the company made a QIP where, a lot of funds and a lot of large investors participated. So I think you could see better numbers from FY26 onwards. But I think within the pharma pack, we like the large cap companies like Sun Pharma, typically a Torrent Pharma, which are more stable players and which have got several triggers. In fact, Sun Pharma has got their specialty business, which I believe is going to be scaled up quite significantly over the next, say, 6 to 12 months. So I think clearly, one needs to diversify, and obviously Sun Pharma could be a good addition on declines, and Wockhardt, for highly, investors who can take the risk appetite in their stride, because it's a highly volatile counter. So I think broadly, longer term, yes, pharma is an interesting space, but you need to give in a slightly longer time frame when you want to invest in stocks like this.
Right, so pharma is an interesting space you should be watching out for. But moving on, you have FMCG ITC that is in focus today as it's trading ex-hotels business. In fact, the discovery price has been absolutely interesting as compared to what the street was looking at. Sajid is standing by with more. Sajid, over to you.
That's right. ITC demerger special trading session happened in the morning, and as a result of that, nearly 26 rupees per share has been removed from the ITC's price compared to the Friday closing, and 27 rupees on the BSE for that. Now ITC is trading on ex-demerger basis, ex-hotels basis, and the current stock price correction that you see is primarily based on the market trading that's happening there. ITC hotels will continue as stock, dominant stock within the Sensex and the Nifty and other indices where ITC is there as part of the constituent, and it will start trading once the shares are credited to the demat account of all the shareholders. And once the trading begins, there will be a process through which it will exit the key indices, which is the Nifty, Sensex and the other indices which are there. on the day of listing, the ITC will be allowed a circuit breaker circuit which is upper or lower for 20% for ITC, and there will be a pre-open session which will happen for ITC hotels on that day. As a result of which, the stock will remain in the index till the time it hits the circuit, and once the stock moves out of the circuit, it will gradually be exiting all the indices which is there. As per regulation, 60 days is the time by when the company ITC will have to list ITC hotels on the stock exchanges. But there are other factors at play there, especially because ITC has a weight of 4.2% on the Nifty and other indices. It is also part of the active and passive funds of global indices, which is the FTSE global indices and the MSCI indices, which is there. So within the next 20 working days, ITC will have to declare the listing date. If it doesn't, then there's a chance that ITC will be dropped from the global indices. ITC has roughly around 9% foreign, 15% foreign holding, and ITC Hotel will have around 9% of foreign holding. And if ITC dates are not announced by then foreign investors who are pegging their entire portfolio to global indices will have to exit ITC Hotels.
Right. Thank you, Sajid, for getting us a detailed one on this one. Avinash, how are you looking at ITC, and what do you make of the price discovery with regards to where the hotel business goes?
No, I think the hotel business looks very interesting because it's the second largest hotel chain in India. And I think, hotel business is doing extremely well. We could see very strong numbers for the December quarter. And hopefully, Hiral, I think once the stock gets listed, investors would like to know on a standalone basis, what's the kind of performance in terms of top line, in terms of operating profitability and the net profit only from the standalone entity. Because I think clearly, as more and more management commentary comes on this business, I would believe that it would be a more focused player, and with a large room inventory already with them and plus some expansions going on, I would not be surprised that the stock would be gradually be accumulated by a lot of large funds which want to increase their exposure in the hospitality sector. So I think it's a good long-term bet, but yes, in the short term we may not see any big fireworks, but once the numbers come out and the commentary comes, I think the market would get a hint of what kind of growth this company is going to put out on a standalone basis.
All right. Thank you so much, Avinash, for all your inputs. It's lovely speaking with you. But that's all that we have on the show for now. From myself, Hiral, and the team who just put the show together, thank you very much for watching. Do stay tuned to NDTV Profit. Lots more action on the other side.
On my face. Chalo, chalo, chalo.
How do you define a disruptor?
The idea was, why should we charge differently? We should probably charge the same.
What's the idea to change things around?
People would be scared to put 50,000 rupees with us, right?
Yeah.
But today, we have customers who put 500 crores with us.
What was your biggest challenge?
We did not have enough money in the bank to even meet the payroll.
What are the lessons that you've learned from the mistakes that you saw being made?
Didn't want to dilute their stake and therefore, ran out of cash.
Think you know what success looks like? Think again. Meet the disruptors, those who dare, dream and defy.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first trade to buy
all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target. It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings. Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
This is not my face. Chalo, chalo, chalo.
How do you define a disruptor?
The idea was, why should we charge differently? We should probably charge the same.
What's the idea to change things around?
People would be scared to put 50,000 rupees with us, right? But today, we have customers who put 500 crores with us.
What was your biggest challenge?
We did not have enough money in the bank to even meet the payroll.
What are the lessons that you've learned from the mistakes that you saw being made?
Didn't want to dilute their stake and therefore, ran out of cash.
Think you know what success looks like? Think again. Meet the disruptors, those who dare, dream and defy.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV.
Hello and welcome. You're watching India Market Close here on NDTV Profit. I'm Harsh Saita, and over the next hour and a half, we'll take you through the day of trade. Now, let's look at the Nifty 50. It's a weak day of trade. We're languishing at the day's lows. In fact, 1.5% lower, 370 odd points shaved off from the index. We're now staring at 23,600 actually, and it's a weak market therefore today. Plenty happening. You have the US 10-year yield seeing a bit of a spike. You're also seeing a bit of a virus scare. Likely some profit booking also coming into markets because of earnings coming through. Numbers for banking is weak. FMCG numbers have come in. They've come in slightly on the stronger side of things, but you have certain pockets even within FMCG like a Dabur where numbers have been weak. So it's kind of a mixed bag, all of that playing out. Let's look at the Nifty Bank. There you go, that's Dabur, 4% lower. But let's look at the Nifty Bank first. So again, that one also very close to the day's lows. You're seeing a 2% gash there. We've broken 50k. We're now staring at 49,900 on the Nifty Bank. So those are levels that we're looking at. 1,000 points shaved off from the Nifty Bank. Pressure on some of the heavyweights. Let's pull up the Nifty 50 heat map of the 50 stocks. The breadth also looking very, very weak, as you can see. ITC, that's an anomaly because there's a demerger at play, and that also kind of playing on the index itself. But outside of that, 2% lower on a Reliance Industries, 2% lower on an HDFC Bank, and you're staring at some of the bigger banks, something like an IndusInd, some of the heavyweights, something like a Kotak, down 3% each. And ICICI Bank is also seeing some bit of pressure. SBI is seeing pressure. So that's among the banking counters. What's holding up is a little bit of IT. Look at HCL Tech, TCS, Infi, some of them holding up in the green. Titan doing well post its Q3 update. Tata Consumer. So consumer, IT, largely that's the play at the moment. Auto also taking a bit of a knock. Look at some of the auto stocks and you'll see that there's a bit of pressure creeping in. A Maruti, even an L&T is down 1.7%, Oyster down 1%, Tata Motors down 1%. Okay, so that's how it's playing out on the index. But let's look at the broader markets. Let's look at the breadth first. And the breadth is looking extremely weak and it's just getting weaker, as if that is even possible, but it's just getting weaker as the day has gone by. Now it's 2,000 plus declines to just 170 advances. The crocodile's mouth is gaping open and therefore the breadth is looking difficult as well. Not difficult to predict the direction of the mid cap and the small cap indices. Let's pull those up and there you go. That's the Nifty mid cap, 2.4% gash down now on that one, 500 plus points shaved off. That's on the small cap, 2.6% down, 470 points off. You know, that's currently the texture. Let's look at sectors before I get in perspective. The sectors, well, the Nifty IT just holding on. Look at the VIX. It spiked 15+% in trade today. So that one is up and away. So the volatility has really widened. PSU Bank is the biggest one with the knock, 3% lower on metals as well. You're seeing some bit of pressure on oil and gas, which is okay. Nifty Bank is down 2%. We spoke about that. And we're also seeing some pressure on auto, 1.7% down, 1% down on pharma as well. So it's pretty much across the board that we are seeing this pressure. But let me go across to Himang Jani, try and understand what's happening. He's joining us. Himang, I'm also joined by Brijesh Singh, Opulent Advisors. Now, Himang, let me come to you first. Your take on exactly what's happening currently. How do you read through this? Is it macros? Is it a little bit of scare in terms of the virus? What's playing out on markets?
Yeah, hi, good afternoon, and thanks for having me. So I think the larger contributor to this weakness, as I understand, is that the updates which have come in from some of the banking names. Remember that it's not as if that there are only few banks which have reported the numbers, but 50% of the total banking system numbers are out, today. And clearly what is reflected there is that you have hardly about 2 or 3% kind of growth when it comes to deposit and advances, and which is, below the market expectations. And at this point of time, the market is looking out for some positive triggers, to kind of have some sort of a positive rub-off. But that's somehow not coming through. And, some of the other updates, let's say QSR companies where the numbers have been good, or some of the jewelry companies, but then they are not part of the larger indices. So I guess mainly the banking stocks are languishing on the back of the updates, and of course the market depth is slightly shallow. So whenever you see the selling, the impact in terms of the prices are on the heavier side. So I do expect that things are going to be a bit subdued, even at the stock level. Friday when the Nifty was down, stock level, portfolio level, price damage was limited. But today, whole host of stocks are down anywhere from 3 to 5%, which means that in the broader market, the weakness is far more prominent.
Yeah, far more pronounced, the weakness. It's a tough one. And Himang, I'll come straight back to you. But before that, let me go to Brijesh. Because Brijesh, we've made a low of 23,601 today. Do you expect to breach that low? What are the levels you look out for? And how do you play the week then?
Good afternoon, Ash. See, overall sentiment of the market has been negative, and the main culprit right now is the banking indexes. And we know that banking indexes, whenever it moves up, Nifty also gets been supported. Now the banking index has broken its 50,000, the psychological mark, and it's been trading below that level. Any closing below that thing would be giving an invitation for another 300 or 400 points of correction on the downside. So looking that part, immediately support for the banking index is 49,600, 49,650. If closing below that of 600, 49,600, then psychological mark of 49,000 48,000 would be coming into play and weigh down the support lines to 48,500. Whereas on the higher side has been considered 50,400, 50,500 is an immediate resistance for the banking index has been considered. But the trend for the banking index look weak. I feel that we might try to touch 49,600 and then we can see some minor bounce back. So keeping that in the mind, Nifty, no doubt 23,600 it has touched, but it should have not broken the 23,750 or 23,780 level on the downside for the correction has been considered. Now since that has been had been broken and it's been trading below that level, I feel we might try to touch 23,300, 23,500, 23,350 in coming week to be considered. So immediately support for the indices been considered 23,500 we can keep, followed by 23,300, whereas resistance lies at 23,900 to 23,950 for both the indices. Trend right now has been on the negative part.
Brijesh, how quickly do we get there? Because the slide has been dramatic today. And what's the sense like? Is it just profit booking that's playing out?
See, obviously the profit booking has been seen and followed by the global picture of the virus which has been going on in the market. So people want that money to be in the hand rather than, looking idly sitting with the and looking the market going down or their stocks going down. So they are trying to remove that money and sitting idly and just waiting that let that dust be settled and let the base be formed or let the previous support be in touch, and from there if any pullback comes then they can just go and investment. So right now the trend for both the indices, it look like we might try for the Nifty, if I say we might try to touch the previous swing lows, which is 23,267. So that's why I mentioned 23,300 followed by 23,500. That is a support of 100 points for the current scenario has been considered. But as I've said, trend for both the indices look weak for the 2 to 3, or I would be saying for a week has been considered.
Weakness, Brijesh, is what you see. I'm going to come straight to you for picks in this market. It's going to be an interesting one. But Himang, before that, let me come to you with regard to macro. The US 10-year bond yield has seen a bit of a spike. You're seeing the rupee weakening further. The dollar is only going to strengthen. On the 20th of December, you're going to have a new president coming in, which will likely signal more strength on the dollar, if anything. At this point, what should an investor do? Hold on, liquidate a bit, or should you start buying?
I think it's kind of a bit tricky situation because you're seeing the dollar index remaining at elevated levels. The selling from the FIs is continuing even in the new year, though it's just the beginning. But the data that we've had Friday clearly indicates that they are still on a selling mode, and even VIX is actually spiked up today by almost 10 to 12%, and we're seeing this after a long time. So I do reckon that things are going to be slightly more turbulent in the near term, and we have to be far more mindful of the earnings because the other factors can change, but the earnings and how things are going to shape up in terms of macro front, that is going to be far more crucial. So I would be a little cautious at this point of time, not in a hurry to go out and buy something which has fallen 3, 4, 5%, but I would be more comfortable buying into the names where the earnings picture is better. Like for example, with the jewelry companies, the update has been fairly decent. The names like Titan, QSR companies, the numbers have been pretty decent. Jubilant Food, Sapphire. So some of the pockets where the numbers are good and the stocks have corrected a meaningful way, 5, 7, 10%. That is where I would be more comfortable buying into, but in a phased manner.
Okay. Brijesh, let me come to you. Picks.
So I have 3 picks right now, and all the 3 picks are from the sell side, looking the weakness in the market, followed by weakness in the stock also. So I'll start with Canfin Home. If we look at the Canfin Home on the hourly chart as well as on the daily chart, both the time frame, they have been trading with lower tops and lower bottom formation. The swing low of 699 has been there, and if I talk about the 52-week low, it's somewhere around 680. So 705, 708, if any bounce come, then one can take a sell call in it with the stop loss of 717 and then play for the target of 690 followed by 677. Another counter where the selling is being seen is the Bandhan Bank. Bandhan Bank overall trend has been weakness has been there on a daily chart as well as on the weekly time frame on the chart. It's been trading below all the important moving average, following a same pattern of lower tops and lower bottom formation. In today's session we have seen 52-week low also. So I feel like any bounce towards the level of 154, 155 it comes, then one can take a sell call in it with the stop loss of 159 and play for the target of 145 and below that level. And the third counter where same pattern formation is being seen is the Tata Chemical. The previous low has been broken somewhere around 1016 around. It has been broken with the volume. It has come down. So right now it has been trading at 992. So any rise towards the level of 1000 rupees if it comes, then one can take a sell call in it with the stop loss of 1015 and then play for the target of 965. And all the stocks time frame would be at least 2 to 3 trading session.
Okay, so those are 3 counters, all 3 sell. But it's time to move on a little bit from here. We have updates from a slew of banks. Vishy standing by, or rather sitting alongside. Vishy, what's the sense like? It's a weak set of numbers overall.
So overall, yes, you're seeing some amount of weakness coming through. The expectation was widely that advances growth will continue to slow down, considering that the deposit growth is only now picking up. So it was only around November, December where deposit growth overall for the system started growing, and most of that is coming from the larger banks. Your medium-sized banks are not really reporting very high deposit growth numbers, so that will show up overall as far as future business growth is concerned. Now let me take you through some of the key banks that are out there. First and foremost, HDFC Bank, the largest private bank in the ecosystem and the largest by market cap across the board, right? 3% advances growth. Understandably, this was a quarter when the bank has also sold loans, so there will be some runoff on the advances book alongside that, some amount of growth that would have happened. Still, 3% looks like a very weak number. Deposit growth about 16%. That's a very strong growth considering the base that HDFC Bank is sitting on. Yes. Also, the first quarter since the merger with HDFC Limited that you're seeing deposits higher than advances. Deposits number is about 25.6 lakh crore, advances at 25.4. Very marginal difference, but means a lot on the LDR side, from 100.7 down to 99.1. Again, for anybody who doesn't understand what the LDR is, that looks like a very small dip, but for HDFC Bank to come down to a 99% LDR, big story there.
Yeah, I just want to, it was at 115 at one point.
Exactly, exactly. So when the merger happened,
has been
it's a stark drop as far as LDR ratio is concerned. So that's the positive side of the story.
Yes.
CASA deposits continue to disappoint. You're seeing CASA ratio dropped about 34% for HDFC Bank. One might argue that high interest rate scenario, therefore people are moving deposits from CASA to your fixed deposits, but other banks are still reporting, banks comparable to HDFC Bank are still reporting higher CASA ratio. So that's a point of concern as far as HDFC Bank is concerned. Some of the publicity banks have reacted today, of course, primarily because banks like Union Bank of India are reporting a very weak set of numbers, about 3.76% growth on deposits year on year, advances up only about 6% for Union Bank. Even on the domestic CASA front, you're seeing CASA deposits down year on year, marginally down, but still down. That's something of a concern for Union Bank. Bank of Baroda, on the other hand, did report slightly better numbers. You're seeing about 11.8% on the deposits and 11.65% growth on the advances. More balanced growth there as far as Bank of Baroda is concerned. Good thing there is that domestic retail is up about 19.5%. So that shows that the bank is growing towards higher yielding assets, but is still keeping its growth contained as far as deposit growth is concerned versus advances growth.
Yeah, so great context overall, and it's a good time to bring on board Ashutosh Mishra, Head of Research Institutional Equities at Ashika Stockbroking, to talk to us about exactly this. Ashutosh, good afternoon. Want your take on what this means. What is your view given all the numbers that have come out, PSU banks as well as private? Just your top 3 takeaways.
Yeah, good afternoon.
Good afternoon.
So, almost all major banks has indicated that no, this will be the quarter where the consolidation of the balance sheet will be there. Especially the larger bank, if you look at HDFC, they have clearly indicated that the whole of the FY25 will be the year of consolidation, where they will address the disparity which has emerged post the merger in their deposit and loan growth part of it. And as the RBI was pursuing with many banks, so many banks slowed down their loan growth also. Yes, if you look just at a business number, things are not looking so rosy, part of it. But overall, when we look at industry growth, things are moving in the right direction for the banks. So what I expect in this quarter is that there will be stable NIMs performance by the bank because cost of fund has peaked out in the last quarter, and overall credit cost is also not expected to go above what it was there in the second quarter of the current fiscal year. So overall, business number may not indicate very positive trend, but on a profitability front, because of picking out of the cost of funds and picking out of the credit cost, we may see some positive surprise coming in.
Right. Ashutosh Vishwanath joining in. I just wanted to ask you this question. This quarter has also seen, at least last quarter and then RBI's guidance for this quarter, it looks like asset quality might not be at its best even now. Things like unsecured retail, as far as microfinance is concerned, even there, you're seeing some amount of delinquencies there. I know that the banks that we listed, for example, HDFC Union or Bank of Baroda, neither of them are big on microfinance, but some of the other lenders are. And I just wanted to get your view. Is that period of only improving asset quality, is that period over?
We can say that surely, but even if you see the Q2 result on asset quality front only, what you will find that the only relatively smaller bank with disproportionately higher proportion of MFI or unsecured retail credit, they have more negative impact. That larger bank, across the public and private sector bank was not impacted by this cycle out there. And till now, we are not seeing any major deterioration in the secured credit as well as corporate credit part of it. So yes, there was some blip out there, and this time, because of the election part of it, heat waves and excessive rain, this portfolio has got impacted. But if we look at trend, I expect it to improve from here. Overall, we have not seen any major spread of the credit risk from unsecured to secured part of it at this point of time.
Ashutosh, one last question, and I wanted to focus on HDFC Bank here. Last couple of quarters, actually 3 quarters now, where we have seen the bank sacrifice its advances growth in favor of deposit growth. How long can a bank of HDFC Bank size continue to do that? Is there room for further sacrifice, or maybe this is probably the end of it?
I think one more quarter they will do it at least, so that they go into the balance part of it. See, try to understand HDFC Bank has to address 2 parts of it. If they try to, surely a gap between deposit and credit growth. At the same time, if they try to grow the credit very aggressively at this point of time, they also have to adhere to much higher priority sector lending requirement. So they have to balance that part also within a loan growth part of it. And the penalty is much more severe on that front. So, because of this, what they have indicated start of this year itself that this will be the year of consolidation, which they are doing at this point of time. And I think from FY26 onward, they will return back on a growth path.
Okay. Ashutosh, I'm going to thank you for joining us this afternoon, giving us all of that perspective. Of course, a lot of banks flying around on mostly the negative front. So thanks for that, Ashutosh. Himang, let me come to you very quickly with regard to the 2 heavyweights, HDFC and Kotak, within the banking system. Your views, both facing their own unique set of challenges, how quickly do you think they can overcome it? One, of course, a little bit of management overhang on the Kotak part of things, where there's been a bit of a rejig in terms of the management, plus RBI. HDFC, of course, the loan to deposit problem.
I think HDFC Bank, I think should settle down very soon. I don't think there's a case for a further de-rating, because though the past growth has been on a lower side, the fact is that the bank has delivered last quarter, right? There has been a certain improvement in the deposit rate, and I don't think at an economy level you're going to see an extended slowdown. So the stock should stabilize very soon. Kotak, the reaction is primarily maybe because of the exit of the CEO and CTO. But I do think that if you have a bit of a positive news from RBI about the lifting of the ban on the onboarding of clients through the digital channel, I think that's going to be a big positive trigger. So Kotak actually, to me, is a buy even at this point. If you see any further small correction, that would be a great opportunity because we do think that the risk reward is favorable. And when you have the RBI news, which we do not know the timing, but it is likely to, come about. So I think that will be a big positive trigger for Kotak Bank.
Okay, I'm going to have to slip into a very short break, but everyone stay on. Gentlemen, I request you to stay on as well. We're going to take a quick technical check with regard to these two banks on the other side of this break and more. Stay tuned.
On my face. Chalo, chalo, chalo.
How do you define a disruptor?
The idea was, why should we charge differently? We should probably charge the same.
Was the idea to change things around?
People would be scared to put 50,000 rupees with us, right? But today, we have customers who put 500 crores with us.
What was your biggest challenge?
We did not have enough money in the bank to even meet the payroll.
What are the lessons that you've learned from the mistakes that you saw being made?
Didn't want to dilute their stake and therefore, ran out of cash.
Think you know what success looks like? Think again. Meet the disruptors, those who dare, dream and defy.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first to buy
all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target. It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings. Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
On my face. Chalo, chalo, chalo.
How do you define a disruptor?
The idea was, why should we charge differently? We should probably charge the same.
Was the idea to change things around?
People would be scared to put 50,000 rupees with us, right? But today, we have customers who put 500 crores with us.
What was your biggest challenge?
We did not have enough money in the bank to even meet the payroll.
What are the lessons that you've learned from the mistakes that you saw being made?
Didn't want to dilute their stake and therefore, ran out of cash.
Think you know what success looks like? think again. Meet the disruptors, those who dare, dream and defy.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV.
Welcome back. You're tuned into India Market Close here on NDTV Profit. Thanks for staying with us. Quick check on where markets are at. You're 1.6% lower on the Nifty. But let's look at also the points contributors here because there are some big moves made by some heavyweights. And you'll see that on your screen. HDFC, RIL among the two biggest movers in trade today, at least moving the Nifty. 100 points between both of them being contributed. Outside of that, there's ITC, and mind you, that point contribution that you see on ITC is X the demerger. So we've excluded the demerger and given you the points contribution. There's also Kotak Bank, it's contributing 18 negative points. In terms of gainers, far and few, as you can see, just very, very thin in terms of the breadth. And with that, let's pull up the breadth of the market. Really, global indices not really making an impact on India at the moment. You can see the breadth extremely weak, continues to be that way over the last half hour, 40 minutes or so. So no change in terms of the breadth per se. But there's honestly very little in terms of, it's already so skewed. How bad can it get? I mean, it can only likely improve from here, but that's not being seen either. So the breadth not improving in any form at this point, can't worsen much from here. Last off, I'm going to also look at the sectoral indices, because the Nifty Bank is the key drag. Outside of that, the Nifty Auto is down 2% odd. The IT index is the only one trying to at least maintain itself in the green, not managing to, but trying to. FMCG is down 2% now, despite some good numbers being declared by some stocks and counters. Pharma is down 1% thereabouts. Metal is down 3%. PSU Bank is down 4%. The top loser at the moment is the PSU Bank. I have with me both our guests even now, Hemang Jani, Brijesh Singh. Hemang, if I can come quickly to you before I go to Brijesh. Hemang, with regard to macro, do you see a risk at this point of the macro worsening? You're seeing the US 10-year bond yield climb. Is that at all a risk for you of FIs continuing to pull out money or incentivized to pull out money even now?
Sensing that if you have a case of the bond yields going up further and the dollar index remaining high, there is a risk of further sell-off by the FIs, and along with that, if there is no support on the earnings front, then clearly, there is going to be a bit of a weakness that one can really expect the market. So I think, near term, we have to really watch out and see if there is any stability on the VIX or the interest rates and how the FIs are dealing with the current data points on the global front. So yes, short term, particularly for the high beta and interest rate sensitive pockets like banking and real estate and those kind of sectors, including the mid caps, I think there is a bit of a risk.
Brijesh, HDFC Kotak, how is it looking on charts? HDFC is down 2% plus for a second day in a row, for a second trading session in a row now. Is it looking increasingly weak now, or do you expect some strength, and what levels to look out for in terms of strength?
So Harsh, in one word, if I say HDFC Bank look weaker as compared to the Kotak Bank has been considered. Now, if we check it out, the SDFC Bank chart on a weekly time frame, it was been trading with higher tops and higher bottom formation. But if we draw a trend line taking these swings lows, the trend line has been broken, and now it has been trading at 1,708. So immediately, if I say the support lies at around 1,675, I'm taking with a shorter term time frame view. So 1,675, that is on the higher side. The resistance lies at 1,725 followed by 1,745. So if someone wants to play for a sell side, then I'll say that any bounce towards the level of 715 to 1,720 if it trades, then one can take a sell call and in with the stop loss of 1,745 and play for the target of 1,675. So any closing below 1,675 and at the 40-50 rupees downside can be seen, that can go up to the level of 1,620 or 30. Whereas Kotak Bank has been considered right now it's roughly around 3% down and it's been trading at 1,783, but it has made a base at around 1,720 or 1,725. So if someone wants to take a chance on a buy side with a Kotak, not at the present date, but anywhere if it trades somewhere around 1,750 around, then one can take a buy call in it with a stop loss of 1,720, with a strict stop loss of 1,720, and then play for the target of 1,840 to 1,850 zone.
Okay, and Hemang, if you were at this point holding something, what are the 2-3 sectors, spaces, pockets, names which you would be most worried to hold at this point and you would be most happy to sell at this point?
Well, I think banking and NBFC, these are the two pockets where, at least the near term looks a bit challenging given the this monthly update, quarterly update, and the fact that if you have interest rates inching up, that will cause another challenge to the banks and NBFC. So this is one pocket, and the other one is of course high beta names, real estate, the broader market where you've seen a big run up, and where if the numbers are not supportive, then you can see a bit of profit booking, in the broader market as well. So I do think that one should stay a bit cautious, in terms of high beta names and the companies or sectors which are linked to the interest rates per se.
Okay, Hemang, I'm going to thank you and I'm going to let you go. And also going to appreciate that, you stayed back with us for another 5 to 6 minutes. So thanks for that. We requested you to do that. Thanks for that. But I'm going to switch focus now. We've spoken enough about financials and a little bit about macro. Let's go to micro now. Go bottom up. FMCG is essentially today the one, or rather the 2-3 stocks which are doing decently well within that basket. Mahima is here to break down the numbers that have come out as a result of which those stocks are doing decently well. Mahima.
So I'll start with Titan. Titan is doing well because of the overall sentiment in Q3. All the sectors, across the sectors saw growth, and this was on the back of the wedding season. In terms of CaratLane sales, they've been up around 25%. TCL was up 24% in terms of sales. Emerging business was up 5%. iCare saw a growth of 18%, which has not been the case. iCare has been a little tepid in the past few quarters, and watch and wearables also saw a 15% growth. And jewelry sales overall saw 26% growth. So it is both in terms of volumes. Of course, we'll wait for the results to come in to see where the volumes and value growth stood. But overall, the sentiment was good in terms of Titan results on the back of the wedding season. In terms of store count, also CaratLane added around 20 stores. Jewelry stores overall additions were at 26. So CaratLane itself added around 20 stores. Moving on to the next retailer, that is Jubilant FoodWorks. Jubilant FoodWorks, strong Q3 update, and on the back of this, we are seeing Devyani and Sapphire Foods also buzzing in trade today. But Jubilant Foods in particular saw a revenue uptick of 56% YOY. The Domino's like-for-like growth stood at around 12.5%. Net addition stores were 130 stores. So basically, the revenue expansion and the same-store sales growth expansion was on the back of the total store count and store expansion that is taking place for Jubilant FoodWorks. And Domino's alone opened 60 stores in India, and the total store count for Domino's stands at 2139. In terms of the provisional quarter updates for Nykaa, the Q3 business update, company reported a revenue which was higher in mid-20s in Q3. The beauty vertical saw an accelerated growth with respect to the previous quarter, so that's a good sign for the company. The E2B business continues to witness rapid expansion, and the fashion vertical is expected to deliver a revenue growth of around 20% going forward. And online fashion demand continues to be subdued to remain optimistic for long-term opportunity, and contribution margins, however, will decline sequentially, but EBIT margins will rise. In terms of Nykaa's margins, they've been range bound for the past 8 quarters. So these are the few updates which are seeing some positivity in the consumption space.
Fair point. Thank you so much for that, Mahima. Now, there are some updates obviously on the negative side as well, and I'll come to that. But I want to quickly flag off 2 things. One, the Nifty 50 has breached the day's lows. Now we're sitting at the day's lows. We've breached 23,600. We're below it now. So that's one possible cause of worry. The other one is, of course, we'll take a quick technical check. But before that, let's go across to Mahima. Dabur and Marico, the updates, Mahima, were weaker than what one would have anticipated given the kind of numbers that some of the others have posted, which you spoke about. What's the sense like?
So basically the numbers that we discussed before this were majorly retailers. So retailers Q3 have panned out to be well on the back of the wedding season, and QSRs on the back of store expansion. But talking about major FMCG staples, the outlook, even the brokerages have said that the outlook does not remain very good for the second half of FY25, and so does the business updates also indicate. In terms of Dabur, week Q3 consolidated revenue estimated to grow in low single digits. The company is expected to have a flat operating profit growth in Q3 is what the management has said, and the international business, however, will see a growth of double digits in terms of constant currency terms. In terms of the key highlights given by the company, rural consumption is resilient but and continues to grow ahead of urban. General trade still under pressure. Quick commerce is taking over. The company has partially mitigated the high input costs through price hikes is what the management has said. Healthcare is impacted by a delayed winter for Dabur, and the home and personal care is expected to grow in mid to high single digit, and beverages reported a muted performance. In terms of the outlook, the management expects sequential improvement in demand. Moving on to Marico. Marico expects modest operating profit growth in Q3 is what the management has guided. The consolidated revenue is expected to be in mid-teens. The company expects international business to grow in mid-teens in terms of constant currency terms. In terms of key highlights, well, domestic business saw a sequential uptick in volume growth, which is a good sign. The rural consumption improving and urban sentiments remain stable as they were in Q2. And in terms of the inflation, what they've said is that there is higher than expected inflation, and this will lead to contraction in their gross margins. And they've taken another round of price hikes for Parachute specifically. In terms of outlook, the management has said that they're watchful of margins in the near term. They eye profitable volume-led growth over the medium term, and they're on track to meet double-digit revenue growth from a full year perspective. So this is the overall roundup of the 2 major FMCG companies giving their Q3 business updates.
Okay, Brijesh, I want to first talk about the positives here. Something like a Nykaa. How do you look at it on charts? Looking good? What's the sense like going forward?
So Harsh, if we look out the Nykaa chart on a daily time frame, already we have seen the stock has been trading with lower tops and lower bottom formation. It had made a base around 157, and from there we have seen a pullback, but the pullback rally is towards the level of 176. So 200 moving average, I always say on all the business channel, whenever the stock or the indices breaks the 200 moving average, and if it trades below that, and if they are making the doji candlesticks or the hammer candlesticks or the base formation and with the volume, and then after that pullback happens, that pullback happens towards the level of 200 moving average, and that's what happened in the Nykaa has been considered. So for the fresh buying, Nykaa has been considered any close above 178 or precisely 180. One can take a buy call in it with the stop loss of 165 and then play for the target of 200 or 205 or 210 zone. But right now I feel since already the chart had touched that level of 200 odd level, I don't feel it would be easy. Again, we can see a range bound session of 160 to 170 zone in the Nykaa has been considered.
Also welcome on board Siddharth Khemka, Head of Research, Wealth Management at MOSL, which is Motilal Oswal. Siddharth, your sense on some of these updates and what do you make of it? You know, you have a jubilant very strong numbers. Titan really impressed me because the studded number was 20% plus, which was a serious surprise, and that will likely reflect on margins as well. But then you have a Dabur, not so great. What's the sense like?
Yeah, hi, good afternoon. So, yes, I think this dichotomy continues in the market. We have seen that while the staples are kind of witnessing a pressure, some of the large ticket items and the discretionary spending, that is where some growth is being witnessed. So, if you look at in a larger sense, staples, what we are expecting is an overall growth of about 4 to 5% for the quarter, while QSR is expected to witness a better growth of 18%, jewelry about 30%, and liquor is about 12 to 13%. So clearly, the trend indicates that staples continue to see, so value growth is not there, volume growth marginally uptick, and that too supported by the rural sector where the demand is kind of a bit resilient. Urban growth for the staples continues to lag, and I think this trend will reverse, but it will take at least 1 or 2 more quarters where margins would stabilize first, and then demand will improve. After that, only some of these FMCG companies will be able to take price hikes and improve the margins. So in the interim, we remain kind of equal weight, or you can say a little bit cautious on the FMCG names. But at the same time, some of these discretionary spendings, be it in the QSR space or the jewelry space, that continues to remain robust.
Siddharth, does that also mean that the move that Avenue Supermarts made on the back of numbers was likely overdone? That the SSSG, which is same store sales growth number, may not be as impressive as was anticipated on Friday, given that staples has not done as well in terms of at least the numbers which have come out today?
Yeah, definitely. I think they would face some more pressure, not only because of the lower growth in the staples business, but also that a lot of that growth that is happening, especially in some of the large urban centers, is being driven by the Q-commerce, where they are not present to that extent. So I think DMart, I would still be cautious at this juncture and would wait for the results, and a better way to play the staples would be through the quick commerce companies, where we have now 2 of them listed, Zomato and Swiggy, both of which we have a positive view.
Okay, excellent. Okay, let me though quickly switch focus. Let me just take a quick question with Brijesh actually before I go on. Brijesh, some of these which are under pressure, some of these staple companies, Marico, Dabur, what's the sense on these? Will they continue to remain under pressure? Do you expect a bounce back?
So if I talk about the Dabur and the Marico has been considered, Dabur chart looks more weak. I feel that it might break the recent swing low of 500 odd mark, and it might try to touch 480, 475. Whereas on the higher side, it has to give closing of 525. So I feel Dabur would, if I compare both the chart, Dabur and the Marico, Dabur chart look weak. As I've said, 470, 475 is a level where the next support lies. So anything closing below 500 would be the invitation for the Dabur has been considered for the 475. Whereas the Marico has been considered, I feel that it would be consolidating. And in this scenario, if any stock has been consolidating in the range, that is good part. And after that, when the market make a base near the support level, and we can see a swing in it. So Marico has been considered. The range on the for the Marico is of 620, 625 on the downside, whereas on the higher side, 665 to 670 is a range of this. So I feel if someone wants to play Marico, not at this level of 645 or 646, anywhere somewhere around 630, 633, if it comes, then one can take a buy call with a stop loss of 620 and then play for the target of 660, 655.
Thank you so much for that, Brijesh. We'll let you go on that note. Thanks so much for joining us this afternoon. I'm going to again switch focus. Top 3 stocks on our radar this afternoon. Puneet joins in with the list on that one. Puneet.
Well, thanks for that. So while the first stock is of course Equitas Small Finance Bank. While we've seen the whole banking space, on the losing end today, this particular stock was up 4%. and that's led by its Q3 business update. Of course, its deposit growth was almost 26% in this particular time frame, coming at roughly around 40,700 crores. While the advances growth has been slightly slower, coming in at 14%, and that's largely because they've lowered their contribution to the microfinance business, so it's down 4% quarter on quarter, and that actually might not be a very bad thing considering the current environment and the delinquencies that we're seeing in the banking stock. So this one is the first one. The second one is Devyani International. Now, we saw the update from Jubilant FoodWorks, 12% sales growth, and that's been very positively taken by something like a Devyani. Now, Devyani, of course, operates the Pizza Hut franchise as well as the KFC as well as the Taco Bell franchise in India. And while they haven't provided the Q3 update, post their quarter 2 updates, they had mentioned that they've opened roughly about 645 stores now in total. That's up about 85 stores compared to the same time last year. While they've also signed master franchise agreements for 3 new brands that they want to make, they want to cater in India, being Tea-Liv, New York Fries as well as Sanook Kitchen. So watch out for this stock in its quarter 3 earnings. Is going to be very important as well. Finally, JTR Industries now it's a very differentiated stock. It's up 14% in the 5 days and up almost 5% today. And while its Q3 update was really poor, the sales volume were down roughly 3% on a year-on-year basis and 5% on a quarter-on-quarter basis. What's interesting is that it has given it a commentary basically from Nuvama that has mentioned that it's encouraged by a pickup in the government as well as the private capex, and the company is also anticipating a very profitable growth as well, with Nuvama having a target price of 155 rupees per share, almost a 48% upside from current levels. So while it's been a very down day, these are 3 stocks on the positive side, buzzing on the back of news flow.
Okay, thanks so much for that, Puneet. Let me also welcome on board Tamanna, who's joining me. Now, let me take it to Siddharth though. Quick question, Siddharth. Of course, these are stocks on our radar, and I'll probably talk about these individually as well. But just in terms of what one can anticipate in Q3 numbers, earnings, do you expect some bit of tepidness in Q3, or do you expect a bounce back? Do you expect to see some recovery? Because the way markets have moved today, it seems they're pricing in some bit of slowdown, some bit of tepidness in Q3 as well.
First, if you look at the largest sector in terms of weightage, banking sector, and we got a whole host of updates from the larger ones over the weekend, and they're not painting the bright picture, at least so far, in terms of Q3 numbers are concerned. So I would believe that while our full Q3 estimates are not yet out, we have come out with few sectoral notes. What we see is that Q3 could see another subdued quarter in terms of earnings growth. And as I said, even management commentaries post Q2 suggested that Q3 will see a subdued quarter, especially from some of the index heavyweight sectors. Like banking, we saw the numbers not being that great. Some of the other consumption sectors not being that great. There would be few segments where we could see a good growth. For example, IT, where we are seeing recovery that could continue in Q3. Pharma as a space continues to report healthy numbers. Oil and gas is a space where we could see sequentially a large uptick, largely driven by the change in oil prices. The Singapore GRMs improving a lot on a sequential basis. That could lead to a lot of strong sequential jump in profitability for the refining companies. So these are the pockets. Apart from that, I believe that overall the trend could be another quarter of subdued earnings.
Yeah, okay. So that's good perspective coming in. Tamanna, there's just so much happening at this point. The macros don't seem to be supportive. Earnings, also there's a bit of underconfidence with regard to what's happening in Q3. And there's the virus.
I think I would put it in the reverse order. Let's be honest, that macro concerns have been on for a while.
Yes.
Your earnings question mark has been on for a while. Frankly, your updates are mixed. They're not all that bad.
Sure.
But we have gone in the last 2 hours from 1 case to 2 cases to now a 3rd case in Gujarat. If you just saw that on your ticker, the first case of the MPVS virus has been I'm saying that wrong. HMPV virus, sorry, it'll take some time to get used to it and hopefully we don't have to, has been detected in Gujarat. Again, it's an infant. So 3 cases, infants coming in. And from the conversations that we've been having, and we'll play out for you what ministers are saying in Karnataka and in Assam, because this is going to be something that you have to control at the state level. But the conversations we've been having with experts are saying that the scale of this is not yet known. It is a corona-like virus, so which is why the street is concerned. It is a corona-like virus. It spreads in a similar fashion, so you need to stay away from people with cold, cough, etc. I suppose the masking, the hand washing, all of that needs to come back. And the concern is whether you will see the same kind of hit. And why am I saying this is the reason? Look at the way markets have cracked. I want to pull up the VIX just for a second, and that puts the picture up very clearly. Pull up the India VIX just for a bit. The sharp uptick over there, up about 16%, the VIX above 15 right now. That is fear that you are seeing. Pull up certain segments of stocks. I want to pull up all the aviation stocks and whatever we have, of course, in the listed space, an Interglobe, a SpiceJet, all of that showing pain points today. An Interglobe down 4.5%. Why would an Interglobe be down to that extent? A SpiceJet down nearly 5.5%, because that's the fear factor, right? If you have pandemic-like situation, then you are going to see first flights shutting, hospitality sectors and stocks likely to be hit, restaurant brands, any of those chains of any kind of restaurants will be hit. I want to see if Jubilant is holding up despite it having pretty good updates. Is it still holding up? Well, Jubilant at least is up there because it had good updates. That's going to be the pain point. Look at the diagnostic stocks, for example, and then that sort of bolsters the point about why we're saying that this is clearly pain and fear with an incoming virus. Possibly that's moving the market 1.5% up on a lal path. Vijaya Diagnostic also up in the green. I want to see what a Metropolis is doing just for a second and see if any of the hospital stocks are moving. Metropolis up nearly 3% at this point. So that's where it's headed. But you must also remember that the last time something like this happened, as horrible as it was, as a human experience and shook up the world, it gave some killer opportunities in the stock markets, as terrible as that sounds to say right now. In fact, I want to ask Siddharth Khemka about it. Siddharth, Himen, hi, great to speak with you this afternoon on what is really looking like a tough afternoon. I mean, I hope this is not the deja vu we're all feeling. I really hope these are isolated cases. But the fact is right now, from what I've been speaking to experts and I'm learning, we don't have the exact test for this. The test will have to be devised. There is no vaccine for it. It will have to be devised. I don't know how many people will adopt the vaccine after experiences from COVID-19. And the cure or the treatment is only symptomatic. Is this the fear factor in the markets today, Siddharth?
Yeah, Tamanna, hi, good afternoon. So I think definitely this is a new unknown factor that has gripped the market, and definitely the current scare looks like, so we had 2 cases confirmed by the government in the afternoon. Now you are talking about a 3rd case. So over the weekend, we saw the news flows coming in from China, how the hospitals are overcrowded and there is no space and stuff like that. So definitely a deja vu situation, the bad days of COVID getting to the fore. But I would say that it still may not be, so we would definitely need answers from the scientific community about the impact of the virus, about the available vaccines, because again, I was reading somewhere it's a 60-year-old virus which has been there. It's not a new virus that we are looking at. So definitely there could be some space, some situation where they would have some medication or vaccine which could be developed if it is not yet developed. But again, as I said, it's a lot of uncertainty on day one. We need to know and understand it's a scientific or a health situation where financial analysts like us only can read and understand and take a decision on what to do with the market.
Yeah, so Himen, hi, good afternoon, and it's turning out to be a bit of a scary afternoon. Any view on the index with the ferocity with which it's cracked, both the Nifty and the Bank Nifty?
A very good afternoon to Tamanna. Thank you for having me on the show. It's always a pleasure. You mentioned the VIX, Tamanna. If it goes up like the way it does at 15.5, HMPV or what, I mean, obviously the market is going to be in a tizzy. So not sure if this was there on the charts. And I have a feeling that it seems overdone. Once again, like you said, there were tremendous opportunities when it happened the first time around. I am once again not a medical profession, but I spoke to somebody who is, like I think Siddharth also said, has been around for decades, discovered in 2001, doesn't spread as fast as COVID. And most of the people get it till the age of 5. It affects people below 5, above 65. 99% of adults have already developed antibodies. And strangely enough, all these things happen only in China. So I don't know. Maybe I feel it's a little bit of conspiracy gone overboard. Having said that, levels have broken rather easily. A bounce which was sort of stabilizing, bases are being formed, deeply oversold market, pharma, FMCG and auto were looking good. Big stocks were stabilizing. So frankly speaking, everything has been washed away by today's movement. Hopefully things don't get so bad. Nifty hasn't broken the bottom, Bank Nifty has. So frankly speaking, it's still too raw. It seems more like a knee-jerk panic reaction. The way I see it, one would have to wait for a couple of days how things pan out, but I don't know. 7,600 in COVID, 23rd March 2020. And so not fair to compare all those things, but I think one needs to take a break. I wouldn't be so bearish as of now, but like I said, couple of days we'll see some more clarity in terms of levels. The bright part is Nifty hasn't broken. Bad part is VIX above 15.5.
Okay. So what would be your play? You're saying it looks overblown. Frankly, we don't know, right? We're going to play out some sound bites from you. We've heard from the Karnataka Health Minister today. We've heard from Dr. Rakesh Verma, who's an advisor to the Health Ministry. We've heard from the Assam government. Let me just play that out for you before I come to him in on what would be your Nifty call.
A report has come out that this is the first case of HMPV in India, which is not true, because HMPV is an existing virus and a certain percentage of people do get affected by this virus, and it is not something new. And the baby, the child that has got affected has got no travel history, and they're all local people. They're not coming from China or Malaysia or some other country. So I do not think there's any connection to that. China's outbreak is, they are saying, is a new variant of HMPV. So that is what they are saying. We don't have the full details. And the government of India is yet to provide any full details to us. And maybe they are also trying to get more information. So if that could be a new strain of a HMPV which there is there in China. But HMPV is something which is already there it's been there for a long time, and it causes common symptoms like cold and maybe flu and cough, and then it's a self-limiting virus, so it goes away after some time.
Okay, so I think a couple of things that are important to remember is that the concern and why you're seeing the VIX climbing like that is because the origin once again is China, and no one is sure if what they're saying is true. Let's be very honest. No one knows if the information coming out of there is trustworthy, there's transparency or not, and that's where the fear is. What the minister is saying, the Karnataka Health Minister is saying is right. This virus has been around. It's this version of the virus that we aren't clear about, whether it could have the same devastating impact as COVID, whether it will continue to mutate, we don't know. But Hemant, coming back to the point of what would you do with the Nifty, you're saying this is overblown. We've seen this play out, at least the fear factor we've seen play out to some extent. Would you then take a plunge on the Nifty right now?
We're at, Tamanna, currently we're at what? 23,651. I would say I'd sell the 23,200 put options. Because I feel, once again, it's repetition, but yeah, I think this has been a bit, it's like James Bond movie. He has the antidote, the whole world gets infected seriously, and everything comes only from China. No. I feel there are certain positives from this. Like I said, I'd sell the 23,300 or 200 put options and wait. Currently it would be open. If it goes below certain, if it breaks 23,453, then I would hedge it by shorting the future. But I just sell the puts right now because I have a feeling, once again, it's knee-jerk.
I hope so. So 23,300 put option you will sell. Did I get that right, Hemant?
Yeah.
Okay. And what about stock calls? Will you buy anything right now?
No, I don't have any stock calls because I'd wait a bit. But yes, if you were to put a gun on my head and say give a stock call, I would say Tata Motors deeply oversold, positive divergence, crossover buys. That is something looking interesting. So is Reliance, and so is Hindustan Unilever. So Yeah, Apollo Hospital is the obvious one. Everybody's panicking and expecting the hospitals to get full again. I think Tata Motors and Reliance would be my picks if I were to give. Currently, I'd say wait for just a bit, but yeah, these two would be.
JLR updates are out and you're seeing the impact on the Tata Motors stock as we're speaking. Total Jaguar sales up 16.7%. Year to date, decent-ish uptick there, but nothing much happening to the stock. Off its lows at least. I just want to talk a bit about those hospital stocks. Siddharth Khemka, is there a play here? And I mean, when we talk about something like this, we need to separate the human devastation, how serious this is as a story, as a news event, from what we're talking about here, which is investment opportunities. Pathology, hospitals, any of those allied kind of industries, would you be buying right now?
Yeah, Tamanna, so I think while the situation may be worse, but definitely any adversity, there are certain opportunities. So if the situation were similar to what we are seeing or hearing the news about in China, there will definitely be the hospitals could see a lot of inflows, and hence hospitals, diagnostic players, healthcare companies, I think there will be in focus, and we are seeing some momentum there. Again, very difficult to say if we have a testing facility or not, or as we heard the Karnataka minister talking about, there is no way to see this, but still there is a case for the hospitality, for the healthcare space. So hospitals like Apollo Hospital, Max, Medanta, all these kind of hospitals will see an influx of patients, and could be a play in the current environment.
Okay. And Siddharth, if I can come to you with regard to the other drag, more on the domestic side of things, there's also expected to be a miss on the capex front, government spend especially. Do you expect that is already built into the 6.6% GDP number, which the RBI has suggested India will clock for FY25, or do you expect that there's further downside to that?
First, definitely there is an issue with the government spending, and last few years we have seen that being the single most driver for the growth in the country, that the government spending had been on an overdrive, and finally for whatever reasons, be it elections, be it some other factors, government spending has slowed down, and meaningfully for that. Expectation is that H2 could see some improvement, and we saw that in terms of the ordering activity. Executions has picked up. Q4 could see even more ramp up, because the government has come out and clarified that they would kind of maintain the targets for spending for the year. So we could see an increased spending in the later half of the year, and that could kind of sustain or maintain those growth rates. Very difficult to say whether that could come down. Yes, there could be a downward pressure, and a lot would depend on what the government says or does in the last few months that is left of the financial year. Nonetheless, next year there is a lot of hope and expectation with the government's budget being presented on 1st of Feb. I think this year the GDP growth as well as the corporate earnings could remain a bit subdued. But next year could see on a low base, we could see a better growth next year.
Okay, we'll take a very quick break. A quick check on the markets before we hit that break. We're coming back with a conversation with Metropolis. Want to understand what they are learning at the ground level about the virus. Meanwhile, we're leaving the Nifty just struggling above the 23,600 mark, 1.5% down. Nifty IT, I would say completely flat is the only hope. Bank Nifty pummeled today, 2% down over, and look at India VIX. So this is a tough market. Broader markets have cracked even deeper. We're coming back after a very short break. Stay tuned for our top BTST ideas, or at least what the strategy should be in this market.
This is on my face. Chalo.
How do you define a disruptor?
The idea was, why should we charge differently? We should probably charge the same.
Was the idea to change things around?
People would be scared to put 50,000 rupees with us, right? But today, we have customers who put 500 crores with us.
What was your biggest challenge?
Did not have enough money in the bank to even meet the payroll.
What are the lessons that you've learned from the mistakes that you saw being made?
Didn't want to dilute their stake and therefore, ran out of cash.
Think you know what success looks like? Think again. Meet the disruptors, those who dare, dream and defy.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first to buy
all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target. It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings. Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
This is on my face. Chalo, chalo, chalo.
How do you define a disruptor? This afternoon, markets in a bit of a tailspin. And if you're getting a sense of deja vu, don't blame yourself. There is a new virus in town, the HMPV, and there are concerns that it could be the next leg of COVID. So far, we don't know. We don't know for sure, and that's important to tell you, that there are cases which have come in, 3 cases that have been reported so far in India, and all of them are babies. So we don't know if this is something which is restricted to those under the age of 5 and how deadly it is. Having said that, just want to get a sense from our next speaker on what they are hearing on ground, how they see this panning out, and also from the point of view that for this entire industry and for this company, COVID-19 saw sales, revenues and business skyrocketing. Dr. Niranjan Patil, Head Infectious Diseases at Metropolis Healthcare, joining us now to speak more about this. Dr. Patil, thank you so much for your time. Just first, what are we hearing on ground? What are you learning? Is there anywhere to actually test this?
Yes. So, human metapneumovirus is not a new virus. In fact, it is there. It was in Indian settings as well. It was first reported in 2001 in Netherlands, and it is not a novel virus as such. And we have been testing this virus since 2017 as a part of a syndromic approach towards the respiratory viruses. So not only the flu viruses, but the COVID virus and human metapneumovirus as well as the RSV. And generally, this virus generally infects the kids, especially less than 5 years, and is seen more severe cases in age less than 2 years and in the elderly people and people who have compromised immunity because of multiple reasons, especially those who are on steroids and people who are having COPDs like asthma, bronchitis, and all
So
those.
one minute, Dr. Patil, you're saying it's not a new virus, and this is known that it's not a new virus. Having said that, is there some kind of a mutation in this virus? Is that why there is concern? Because this virus has been around for a while, but the world seems to be worried about it right now. Why is that?
Yeah, because see, the data is coming from China. We currently see to understand whether this virus is a new strain or novel strain or a more infective strain or a more deadly strain, it has to be molecularly characterized. And for that, Indian Council of Medical Research is doing its best. Ideally, because of the weather currently, because of the flu season, I will say, the cold weather, the New Year was around the corner, so a lot of gatherings. So basically, it is the conditions are all set for any respiratory virus for that matter. So we have to ensure that we are testing and we are testing it with the correct characterization so that we are able to clearly make a distinction whether this is a particularly a deadly strain of a particular virus. But as of now, we are not seeing any such thing. These are usual HMPV cases, and these cases are related all through the season. So it is not. I would like to refute the claim that 3 cases. In fact, these cases happen every single month.
Okay. And Dr. Patil, this strain in particular, which we're talking about, Harsh also joining in. Apologies for that. Harsh also joining in. Want to know that this strain in particular, is it skewed towards younger humans? Because the most of the cases we've heard are among children. Is that at all something which is something which you all have studied or you all have analyzed?
Yes, so mostly cases of HMPV, especially the symptomatic cases, are seen in younger children, especially those who have age less than 2 years. Okay, and also in elderly population as well. Those beyond 65 years of age, they are also prone to such infections. And why we are worried in them is because in severe cases in kids, it can lead to a condition called as bronchiolitis and pneumonia. And their oxygen situation can drop, and that is where this fear is all that is there, that is seen in China currently.
Okay, now I want to understand because people watching this would be wondering if they come to Metropolis, is there a test right now? Is there, if someone has a cold and cough and flu-like symptoms, is there a way to test? Because from what I understand, you have the standard PCR test right now. It's not tailor-made to this particular virus. Is that correct?
No, so we have 2 kinds of assays. So currently the assay that we're using is a syndromic based approach where not only detects the flu viruses, the RSV, it also detects the human metapneumovirus as well as the other respiratory viruses which are commonly seen in the community. The advantage of this test is that it is US FDA approved test, it is CE approved test, and we also the test is also accredited by the NABL body. And the turnaround times are rapid. I mean, it is less than 2 to 4 hours.
2 to 4 hours. What is the accuracy of this test?
Because the accuracy is more than 93% accuracy.
So right now, someone has flu symptoms, they can book a test and they can know if they have this HMPV or not.
Yes. Yes.
Oh, okay. Thank you so much for that. What is the cost? Just before I let you go, what is the cost of the test?
We have a standalone test and the panel. So the panel obviously will be costly. I think I may not be the right person to speak about the cost. But yes, it is being currently tested all across.
Okay.
Broad range, Mr. Patil. Sorry if I can ask you, Dr. Patil. Broad range, if at all, with regard to the cost.
Sorry, I may not be the right person.
Okay. Now he's heading infectious disease, might not know. Thank you so much for that. But that's information that we should get out because unfortunately, whatever it may be, people want to know this right now.
Yes.
And the problem with this lot of diseases is it's so much like a common cold and cough and flu, which everyone has all of the time. So you don't really know.
Yeah, not able to distinguish between it being a common cold and flu, and these days the flu is just flying around. So
which is all of the time. But having said that, there is no need to panic. There is no need to panic. Some tests are available, and that is what we should look at. Meanwhile, back to stocks that have been in focus today. Nuvama has upgraded SBI Cards from to a buy, actually, to a buy rating. My colleague Mihika joins in to give details.
Nuvama has upgraded its rating on SBI Cards from a reduced to a buy. It's also increased its target price to 850 rupees versus 620 rupees. So when you talk about, the implied potential when you compare to the previous closing price, the new target price implies a 17.5% potential upside versus a 14% downside that the earlier target indicated. Now, why has Nuvama updated SBI Cards? Well, it's based on the back of improving credit cost outlook. Just to note, credit cost is basically the amount spent to maintain credit quality, and this was a key driver of the company missing estimates in the past. But Nuvama states that the credit costs have likely peaked in Q2 FY25. They expect the credit cost for SBI Cards to be stable in Q3 of FY25 and start improving from the fourth quarter of the financial year. They also expect the credit cost trajectory to improve because their weak credit cost cycle came in much earlier when you compare it to peers. Lastly, Nuvama has also stated that the October 2022 RBI master direction regarding credit and debit cards did negatively impact the company's income. However, the full impact has been fully captured in FY25. And lastly, the key positive trigger that could be a boost for SBI Cards is any potential cut in RBI's policy rate.
Okay, so SBI Cards. I think SBI Cards definitely off its highs. Pull off the intraday. It's come off its highs. The note was good, the update's looking good. I mean, Hemen, are you looking at any of the financial space as a potential? Any view on an SBI Cards?
SBI Cards doesn't look bad, Tamanna. Underperformance has been there for a long time. It peaked in September 21 at 1165. Since then, it's been on a downward spiral. Couple of things. Firstly, 650 is rock solid support. This support, or maybe 10 rupees here and there, this level has worked for at least 1, 2, 3, 4, 5, 6 times. So I believe that is a significant enough support which would in all probability not be broken in the near term. That is the case as a supply line coming in right over the last 4 years, from which it has just come off. So frankly speaking, a base formation is in place, Tamanna. Downside does appear limited, but whenever a trend is turning, it takes time. So it's struggling, but the downward momentum has stopped. It's flattened, and now the next thing would be on the upside. So I would be more positive than negative. If you want to play it safe, you buy it only on a monthly close about 764. Otherwise, I believe the worst is almost getting past us.
Okay, Siddharth, just a word from you on the financial space. I'm sure you addressed this earlier. But, how are you looking at the kind of updates we've seen so far? HDFC Bank, Bandhan, Bajaj Finance, all of them looking good. And if there's any view on an SBI Cards?
So I think some of the NBFCs have reported a bit, I would say in the face of what the banks are reported, a bit resilient numbers, but again, not that encouraging so far, apart from, I would say, an IDFC First, which was somewhat better than expectations. But I would say that mostly the banks, the NBFCs, not that great set of numbers. Even say SBI Cards, recent track record has not been that great. We have seen market share in the spends have declined in the recent period on back of moderation, both in corporate spends as well as increasing credit costs in the retail side. However, given the space that they are in, they are the second largest player in the card industry. Digital adoption and new business opportunities such as the introduction of credit on UPI. That could lead to a growth in the overall business, and hence we see that FY26 could see improvement or recovery in terms of growth and in terms of ROAs. So while our rating continues to be a neutral on SBI Cards, I think these are good levels, and entering into FY26 we could turn positive. But one needs to have patience and hold it from a long-term perspective.
Okay. Thank you so much for that, Siddharth. Hemen, stay on with us. Let's just get in, another perspective, which is on the IT pack. IT is going to be in focus this week. TCS reports day after tomorrow. And Jefferies has initiated coverage with a buy on Emphasis. It's also upgraded its rating on LTIMindtree. Rucha joins in with a detailed report.
Thanks, Tamanna. So TCS reports on the 9th, as you rightly mentioned, but Jefferies has initiated on Emphasis with a buy rating and a target price of 3,460 rupees, implying an upside of about 20%. Now, this is because it believes that Emphasis offers the best way to play in the recovery of demand, especially in the US and also in the banking space. Remember that many of the management talked about how the banking is reviving for IT. Talking about valuations, yes, valuations are expensive for the companies currently, but at 29 times, Emphasis offers relative comfort for an investor to enter into. Talking about LTIMindtree, it has upgraded this one to a buy with a target price of 6,650 rupees, implying an upside of about 16%. Now, it believes that IT firms continue to focus on cost and therefore support margins. However, as I said, the valuations are expensive, but improving outlook should support these premium valuations. Therefore, lastly, speaking about the key ideas in the IT space for Jefferies, Infosys, TCS, LTIMindtree is what it has included in the large cap space, Emphasis and Coforge in the mid cap space, and this new stock that is Sagility, which focuses on serving tech to healthcare clients in the US, is what it has added in its top picks for the IT space. So yes, this is what Jefferies broadly believes for the Indian IT sector.
Okay, Rucha, stay on with us. Let's also talk about ITI. That's one stock which had seen a great up move today and was buzzing in trade today. We'll see what ITI is doing right now, though, and whether it's stayed up through the kind of day. And yeah, it's been an outlier actually. Why is ITI 20% up?
So yes, Tamanna, ITI, there's no fundamental news behind this, but yes, volumes are healthy over here. Right now, it's around 1.5 times, it's 30 times the average. Let's look at the stock price performance. Last 5 days, 27% upside over here. Last 6 months, 67% returns is what this company has given. Briefly talking about what ITI does, well, this is an Indian public sector undertaking specializing in manufacture, marketing of telecommunication products. Some of the product suite that I want to talk about is it manufactures and distributes smart energy meters, smart cards, optical fiber cable, as well as mini personal computers. Well, there's no fundamental news as such because of which the company is buzzing, but let's talk about the recent Q2 numbers. Revenue was up around 300%. Margins came in at about 114% this time, and loss was also narrowed from about 126 crore of loss same time last year. This got narrowed to 70 crore as of second quarter FY25. Recent key deal announcements include level 1 bidder for 3,000 crore BharatNet project, which came in on 7th November. On 10th September, it announced that it bagged an order worth about 300 crore for solar street light systems in Bihar. And lastly, on 29th August, it announced that it bagged the first EVM order from West Bengal State Election Commission. So very healthy 2Q numbers and healthy deal announcement as well is what is backing ITI on fundamental basis.
Okay. I wonder if you are looking at an ITI at all, Himen?
If it's hit the 20% circuit, Tamanna, I wouldn't, but frankly speaking, all-time highs. It's been a humongous multi-bagger over the years, so no known levels. But the way it has moved on rocket boosters over the last couple of months, I'd just stay away. I mean, a lot of the positives, I believe, are in the price. It spent almost a year, Tamanna, consolidating between 210 and 380. It finally gave a breakout, and the positives of the breakout seem to be achieved in just 5 days in the first month. So looks good. Everything is hunky-dory. It's fresh buying. I'm not sure.
Okay, and sell if you have positions in. Offload if you have positions.
Oh, I'd sell probably 1/5 or 1/4 just to play it safe. This is gap, which has happened today. 20% circuit gap. Maybe a couple of days more. I believe there would be some cool off coming in. Normally these gaps and 20% circuits don't go hand in hand. Somewhere there would be a reality check, Tamanna.
Maybe. Okay. Just want to quickly address a couple of numbers which are flashing on your screen. Now, Utkarsh Small Finance Bank gross loan portfolio is actually contracted on a sequential basis. While the 16% growth in the gross loan portfolio, QOQ, the number looks far weaker, 19,057 crore versus 19,101 in Q2. Even deposit growth, though, holding up fairly well, 3.5%. So the growth there looks quite solid. CASA also the ratio is kind of holding up at this point, 19.7 versus 19.6. So CASA growth also largely in line, but just the loan growth not kicking through. What would you do at this point, Hemen, with some of the larger lenders, if I can ask you, something like an HDFC, something like a Kotak? What's the sense like? Can you continue to hold on to your positions there or what?
Frankly speaking, Harsh, Kotak has been an abysmal underperformer. 4 years of doing nothing in a raging bull market. So, frankly speaking, doesn't seem to be going anywhere. A lot of promise, but it hasn't delivered up till now. On the other hand, excuse me, HDFC Bank recently posted a fresh or all-time high recently, I mean last month, Harsh. That too after spending almost 4 years in a range-bound movement and not performing. And now it is promptly reversed and come off. So it doesn't look very attractive, but having said that, quality companies, they've been not doing anything for a long time. Selling them at this point in time, frankly speaking, doesn't make sense. But after 4 years of underperformance, you would maybe I would just like to go for a Bajaj. Finserv with it, one check. That is one of the stocks which looks better, the twins. I believe finance looks better. Simply because once again 4 years, but the setup is it's an ascending triangle. I'm not sure it's valid over 4 years, but what I mean to say is downward slanting support line. The day it takes out 8,000, it's going to 12,000. So something of that sort. Not a very convincing thing, but I would prefer Bajaj Finance.
Any one top call him in, and no, there's no gun to your head. I know you're not in the BTST mood. I don't blame you because you'll have to really stick your neck out. But any one top call you'd want to look at?
Well, thank you, Tamanna, for clarifying that there's no gun on my head. So I would gracefully avoid giving a BTST. But yeah, if somebody is in a risk-taking mode, this is a high-risk call. I said you can do a BTST on a Nifty or a Bank Nifty. I mean, I don't think there's much to lose here.
Okay, a BTST or a Nifty, Bank Nifty. Or what level would you buy a Nifty? Current levels you would go long on a Nifty or a Bank Nifty? Between the two?
I would say Nifty because it's shown a little bit of relative strength. So this last hour, so today's low would be my stop loss for a BTST.
Today's low on the Nifty would be Hemen's stop loss for a BTST. If you are in a risk-taking mood, that's the caveat. Thank you so much, Hemen. Always a pleasure to speak to you. All right, we're winding down and it's looking like a tough day. Off its lows, perhaps not as bad. Bank Nifty, though, in a world of pain. So I just want to pull up the intraday for the Nifty just for a second and see how it's going over there. Yeah, it's not pretty. Off its day's lows, but that's not saying much. The Bank Nifty hurting a little bit more. Yeah, I mean, just 2% down. It's mayhem. It's mayhem today. There's no question about it. There is fear. We should pull up the VIX before I pull up the heat map because that's telling you the story really of what's happening here. And the VIX about 15% up over the level of 15, showing the kind of fear that we're seeing right now. That is the volatility index. The heat map very quickly before Harsh takes you through the broader markets and what we're seeing there. And it's a sea of red, largely speaking. So let's pull up the Nifty heat map if we can. Pain points over there. What's up? Apollo Hospitals is up because there's fear of a pandemic. That's why you're seeing Apollo Hospitals as the highest gain, about 2% up. Nice, very good updates from Titan. This is also the season for it, so keep that in mind. Titan up nearly 1%. Tata Consumer doing okay. HCL Tech, all of that really, whatever the rest is in the green is also flat. Tata Steel, they're hurting. Tata Steel, a Trent, BPCL because Brent is back above the $76 mark. NTPC, these are some of the PSU bank stocks looking tough. Kotak Mahindra Bank about 3.5% down because of the CTO exiting. But anyway, it's a tough day.
Reliance down 2.8. So the heavyweights really taking a punch today.
Yeah, the heavyweights taking a punch today and the broader market's not looking too much better. I would say broader market's actually worse off.
Yeah, of course. And that's how it's showing. You know, before I look at broader markets, I'd like to look at the breadth. So, of course, 2.5, 2.8%, but look at the breadth. It's been so tough. I mean, pretty much all through the day, and it just continued to worsen. Right at the fag end, maybe 5-6 stocks flipping to the green, but 2,000 declines to 183 advances. The breadth has just been so tough today. And that's what I've, wanted to try to underline. And even in terms of sectors, just far and few. talking points here. Nifty IT, which was flickering between the red and the green for quite a bit, has closed in the red now. And look at PSU banks, look at some pockets really hurting. PSU banks auto down 2%, pharma is down nearly 1% as well, infra is down 2.5%, so and metals is down 3%, so some real pain being seen even in the larger cap names. Realty is down 3%, so the broader market's feeling that pinch as well. Last off, I want to pull out the BSE 500 top gainers, top losers, kind of cap this off. Of course, some skewed moves on the back of news, but outside of that, and Devyani International, good update. You know, updates, news, keeping some stocks buzzing in the green.
EaseMyTrip, we spoke to Nishan Pitti this morning. He's clarified.
Correct.
No more promoter sales.
Equitas, good set of numbers in a tough environment. Devyani also the same.
ITI, that outlier. In any case,
Metropolis, no surprise there, given everything around health. That's likely, hopefully, not going to play out, but you never know. You know, some stocks really taking a battering in trade today. So that's how it's looking at this point. It's a tough day.
It's a tough day. Outlook for tomorrow, you're going to have some results coming in. I mean, notably, yes. I would say one MobiKwik. It's first showing after its listing. So that will be interesting to watch. And over the next few days, of course, results season will come in. Business updates will be in focus. But I think any news flow on new cases of this virus will definitely dominate the headlines and dominate market mood as well. Tread with caution is what I would say. Going long on a Nifty would be a very risky move if you have a risk appetite, but maybe being cautious and in a wait and watch mode will make a little more sense right now. Well, that's all the time we have on India Market Close. From Harsh, me and the team that put the show together, thank you so much for watching. Stay tuned. Market Express up next.
On my face. Chalo, chalo, chalo.
How do you define a disruptor?
The idea was, why should we charge differently? You know, we should probably charge the same.
What's the idea to change things down?
People would be scared to put 50,000 rupees with us, right? But today, we have customers who put 500 crores with us.
What was your biggest challenge?
We did not have enough money in the bank to even meet the payroll.
What are the lessons that you've learned from the mistakes that you saw being made?
Didn't want to dilute their stake and therefore, ran out of cash.
Think you know what success looks like? Think again. Meet the disruptors, those who dare, dream and defy.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first trade to buy
all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target. It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings. Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
On my face. Chalo, chalo, chalo.
How do you define a disruptor?
The idea was, why should we charge differently? We should probably charge the same.
What's the idea to change things around?
People would be scared to put 50,000 rupees with us, right? But today, we have customers who put 500 crores with us.
What was your biggest challenge?
Did not have enough money in the bank to even meet the payroll.
What are the lessons that you've learned from the mistakes that you saw being made?
Didn't want to dilute their stake and therefore, ran out of cash.
You're watching Market Express, a bit-sized wrap of all the news and market action today. I am Aditya Rao, and let's get straight into the show with market updates. The markets were spooked by HMPV virus today. The Nifty lost over 370 points, while the Sensex lost over 1,200 points. Both the indices fell over 1.5% each. Most Nifty stocks ended the day in red, and broader markets underperformed the benchmarks. The sell-off resulted in 10 lakh crore rupees of investor wealth being wiped out from the markets. And if we talk about the rupee also breached yet another record low of 85.85 rupees, and it was the worst ever so far. Banking stocks were hammered the most in trade. Oil and gas stocks and FMCG took a hard knock as well. Tata Steel and Trent led the fall. EaseMyTrip is in focus. The CEO and chairman of the company, Nishant Pitti, posted on social media platform x.com that there will be no promoter selling. He also announced that his brother Rikant would take over as CEO of the company. Nishant will continue to be the chairman of the company, and the stock ended higher by 5% on the clarification today. In an exclusive conversation with NDTV Profit, Nishant Pitti, co-founder of EaseMyTrip, said that there will be only one company in the e-commerce space. Speaking about B2C segment particularly, he said that they will still have 50% promoter holding. The companies in e-commerce space have to dilute their stake just to raise money, so there is no further selling. The company is focused on exploring new international market while also strategically acquiring businesses to boost growth. In the wake of a highly anticipated hotel demerger, ITC shares adjusted nearly 6% in the special pre-open session. ITC shares adjusted by 27 rupees to settle at 455 rupees on BSE. On NSE, it slipped 5.4% lower to settle at 555.6 rupees. The price got adjusted by 26 rupees on the National Stock Exchange. The demerger came into effect on January 1st, and the eligible shareholders will receive 1 share of demerged ITC hotels for every 10 shares held in the parent company. Another stock in focus is Titan. The company posted its Q3 business update. The company has added 49 stores in Q3, 20 additions in Cart Lane stores, 3 eye care stores have been shut. The total of jewelry stores of the company stands at 749, with 26 additions made in this quarter. If we look at the sales performance of this quarter, the overall sales on a standalone basis is up 24%, and the Cart Lane sales of the company is up 25% on an yearly basis. The jewelry sales is up 26%, and if we talk about the emerging market sales, it is up 5%. Eye care sales is up 18%, and watch and wearable sales is up 15% on an yearly basis. Overall, Titan posted a fairly strong quarterly performance on the business front. Realty firm Macrotech Developers reported a 32% increase in its sales bookings to Rs 4,510 crore for the quarter ended December. This was on the account of better demand for its residential properties. Macrotech Developers, which sells properties under Lodha brand, is one of the leading real estate developers in the country. Macrotech Developers' total collection increased 66% in this quarter and stood at 4,290 crore rupees. Poonawalla FinCorp has reported a 13.3% quarter-on-quarter increase in the total disbursements during Q3 FY25 at approximately 7,150 crore rupees. The company had disbursements worth 6,313 crore in the previous quarter. The non-banking finance company's assets under management grew 9% on sequential basis to 30,950 crore rupees. Poonawalla FinCorp says that it continues to have an ample liquidity of 4,800 crore rupees as on December 2024. Another company in focus is Bajaj Finance. The company has recorded highest ever loan book in Q3. The assets under management is up 28% to 3.98 lakh crore rupees. The deposit book is up 19% at 68,800 crore rupees. The Bajaj Finance growth has picked up in terms of new consumer additions as well. The loan growth was also slightly above the expectations. Brokerage firm Nomura has upgraded rating on Bajaj Finance with a buy call with a target of 8,560 rupees. Nomura believes that FY26 outlook looks better than FY25. Nykaa traded 4% higher in today's trade. This was on the back of December business update. The company's revenue was higher than mid-20s in Q3. Beauty vertical has accelerated if compared to the previous quarters, and the B2B business continues to witness a rapid expansion. Let's take stock of Jubilant Foodworks now. The QSR giant has traded with strong gains in today's session on the back of strong Q3 business update. The revenue of the company is up 56% on an yearly basis. There has been an addition of 130 stores in Q3, and the total group store count now stands at 3,260. On to brokerage notes now. Citi has maintained a buy on HDFC Bank. The target price has been set at 19% upside. The reason is that they expect stable margins from the bank despite loan and credit growth slowing. Deposits were marginally higher than estimates. The SBI Cards next, and Nuvama has upgraded the stock to buy from a reduced rating earlier. The target price has also been increased and shows that Nuvama expects a 17% upside. The key reason for the upgrade is that the company has reported improving credit cost outlook. Credit cost is the money spent to maintain the credit quality. This means that SBI Cards is likely to improve in terms of asset quality going forward. Antique Broking has released a note on the real estate sector. The firm expects that the sales bookings to be muted in the third quarter for players like Aditya Birla Real Estate, Prestige Estates, Shobha and Kolte Patil. But on the other hand, Godrej Properties, Lodha, DLF, Oberoi Realty and Suntech along with Brigade Enterprises would see better numbers due to new launches and inventory. The brokerage's top three picks are Aditya Birla Real Estate, Oberoi Realty and Prestige Estates. Morgan Stanley too issued a note on the real estate sector. They expect DLF and Oberoi to show strong sales momentum in the third quarter. They estimate key launches to result in 20 to 35% quarterly growth in the last 12 months. And if this growth is maintained, it expects 60% year-on-year growth in FY25. They expect Lodha and Godrej to report pre-sales of 4,100 crore rupees and 5,300 crore rupees respectively, which is in line with the street expectations. Let's move to Jefferies now. The firm has initiated coverage with a buy on Emphasis. Their view is that the stock is best play on US macro factors, especially with improved demand in BFSI. Jefferies has also upgraded rating on LTIMindtree to buy. They see an upside of 16% on the stock. The reason for the upgrade is that IT firms across the board are focusing on costs and improving margins. Jefferies expects premium valuations for the stock. Jefferies also published macro commentary on the IT space. They believe that IT firms are counting to focus on costs, which will thereby result in margins getting better. Plus, this improvement in the outlook will most likely support premium valuations. Infosys, TCS, LTIMindtree, Coforge, Sagility and Emphasis are key ideas in the sector. Here's some good news on the economy front, and India's Services Purchasing Managers Index or PMI for the month of December rose to 59.3 points. This is an increase from 58.4 points recorded in November. This increase signals growth in services sector. The services sector is witnessing good demand with new business inflows, which has encouraged an expansion in workforce. New orders increased for the 41st consecutive month. Let's look at the stock-specific action today. KEC International is up first. The company has won 1,000 crore rupee order in the transmission and distribution space. This constitutes 72% of the order in the transmission and distribution segment for the company this year. The project is for setting up 400 kV transmission lines, and they will also supply towers, hardwares, and poles across US, Mexico, and Brazil. OYO has introduced a new check-in policy for its partner hotels starting in Meerut. Under the upgraded rules, unmarried couples will not be allowed to check in. All the couples must now provide valid proof of their relationship during the check-in. The new rule will be applicable for online bookings as well. OYO has said that the partner hotels can decline couple bookings at their discretion, considering the local social norms. The Supreme Court has transferred all related cases in Amazon and Flipkart antitrust probe to Karnataka High Court. The move is in relation to the Competition Commission of India's antitrust probe against Amazon and Flipkart. Supreme Court was informed that 5 new cases have been filed since its last order. SC directed that these 5 cases, along with any future cases on this matter, will be heard by Karnataka Supreme Court. SL, a global venture capital firm, has raised $650 million early stage fund to support startups in India and Southeast Asia. This is SL's 8th fund in the region, and funds will focus on early stage founders building innovative and impactful businesses in areas like artificial intelligence, consumer brands, fintech, and manufacturing. Ward Wizard Innovations, the maker of Joy e-bike and Joy Rick, has partnered with C4V, a New York-based battery technology company. The partnership is aimed at improving battery technology for electric vehicles and boost India's shift to green mobility. The share fell over 2% intraday. MedPlus Health Services stock fell over 1.6% today. The stock was impacted due to a suspension order of drug license, and company's subsidiary Optival Health Solutions gets one suspension order of a drug license for Andhra Pradesh store. Gensol Engineering stock jumped as much as 4% on the back of order win. The company received an engineering procurement and construction order worth 1,062 crore. The order is for a 275 megawatt solar PV project in Kadwa in Gujarat. Andhra Paper's stock fell over 5% as company declared a lockout at its Rajahmundry plant today, and operations at the plant were disrupted due to a strike by the workers' trade union. Teamly Services plans to acquire the remaining 10% stake in TSR Durshaw. This is subject to the board approvals. The board has also approved the purchase of a 30% stake in Crystal HR and Security Solution. The company will acquire the remaining 70% stake in Crystal HR in multiple phases. The stock fell as much as 4% intraday. Delhi is again under the grip of cold wave. The Met Department reported a temperature of 11.4 degrees. The rain made it even worse. The intense fog disrupted road and rail traffic. National Capital's AQI is still in very poor category. Commission for Air Quality Management has implemented emergency measures to control the situation. PM Modi virtually inaugurated 3 railway projects in J&K, Telangana and Odisha. Among the highlights of the event was inauguration of the new Jammu Railway Division, a landmark addition in the Northern Railways. This new division is expected to enhance operational efficiency, improve passenger services, and bolster connectivity in the Jammu region. In Telangana, PM Modi inaugurated the Charlapalli new terminal station, a state-of-art facility designed to cater the growing passenger traffic. Assam CM Hemant Biswa Sarma met industry leaders in Mumbai to boost investment in the state. He invited them to advantage from Assam 2.0 investment and infrastructure in an infrastructure summit and further Assam's growth. CM Sarma also called Assam a magnet for infra companies pushing for industrialization and in the infrastructure, banking and textile sectors. 2 cases of HMPV have been reported in Karnataka following an initial case of an 8-month-old from Bengaluru who tested positive for the virus. The health department has confirmed that HMPV is airborne and reassured the public that it behaves similarly to common viruses. Additionally, there has been no unusual increase in the cases of influenza-like or respiratory illnesses. Gujarat has also reported a case of HMPV virus in Ahmedabad. A 2-month-old baby has been reportedly infected due to the virus. Maharashtra has issued a public advisory in lieu of the recent HMPV virus. The advisory emphasizes on ensuring adequate ventilation to minimize contamination. NDTV sources reveal that Canada's Prime Minister Justin Trudeau will resign by the end of this week. It remains unclear whether Trudeau will leave his position immediately or stay in power until a new leader is selected. The sources also mention that Liberal Party leader is reportedly growing distance from his supporters and party members. 3 states in USA have declared an emergency as 60 million Americans brace for winter storm. The emergency is expected to disrupt travel and work from Kansas City to Washington. The air traffic monitoring sites have also shown that almost 2,200 flight cancellations have happened over 25,000 flights were delayed. The political turmoil in South Korea has been deepening. The anti-corruption agency has asked the police to take over the execution of an arrest warrant against the suspended President Yoon Suk-yeol. The President Yoon imposed a martial law in the country last month for a few hours, only to be revoked after the parliament overturned it amid major protests across the country. India slams Pakistan for launching airstrikes on Afghanistan that claimed 46 lives, including women and children. Randhir Jaiswal, spokesperson of Ministry of External Affairs, wrote on X.com in a post that we equivocally condemn any attack on innocent civilians. The Pakistan airstrike that took place on 24th of December affected 7 villages. Indian skipper Rohit Sharma faces uncertainty about his future. He was left out of the Sydney Test against Australia, sparking reports that selectors might be moving on from him. However, Rohit clarified his stance during a candid interview with a TV channel on day 2 of the match, and he stated that I am not retiring, and revealed he chose to sit out due to poor form. Rohit scored just 31 runs in 3 test matches during the series. Let's shift focus to the Formula E case. KT Rama Rao reached the ACB office with his legal team to record the statements, and reports suggest that KTR remained in his vehicle for 45 minutes and left without recording his statement. He questioned why his lawyer was not allowed to accompany him and insisted that he would not appear for questioning without legal representation. KTR also claimed that he suspects a raid at his home and a possible attempt to plant evidence. Anti-Corruption Bureau had summoned KTR to record his statement in connection with the Formula E race case involving the alleged transfer of rupees 45 crore to a foreign company. India's top fast bowler Jasprit Bumrah is likely to miss most of the white ball series against England. This is according to a PTI report. The decision is to keep him fit for the ICC Champions Trophy starting on February 19th. Bumrah had suffered a back spasm and couldn't bowl in the final innings of the Border Gavaskar Trophy in Australia. He bowled over 150 overs in the series and took 32 wickets, even though India lost 1-3 to Australia. The 82nd Golden Globe Awards kick-started the 2025 Hollywood season. Nikki Galser became the first woman to solo host the event, and Payal Kapadia's All We Imagine as Light received 2 nominations but didn't win, losing Best Non-English Film to Emilia Perez. The Brutalist won Best Director, Best Actor, Best Motion Picture in the Drama category, and Brady Corbett won the Best Actor, and Fernanda Torres took the Best Actress award. January is set for a number of exciting new Bollywood releases. Cinema goers are spoilt for the choices, with movies ranging from cybercrime thriller to historical dramas. Sonu Sood's Fateh, Kangana Ranaut's Emergency and Shahid Kapoor's Deva are only a few from the thrilling list. They are all set to release between January 10th and January 24th. The beloved rom-com Ye Jawani Hai Diwani is in the cinemas again. More than a decade after its release, it released on Saturday once again, and the film has already earned a total of 3.5 crore at the box office. And that's a wrap on Market Express today. There is lots more action left on NDTV Profit. Stay tuned and stay updated.
On my face. Chalo, chalo, chalo.
How do you define a disruptor?
The idea was, why should we charge differently? We should probably charge the same.
What's the idea to change things around?
People would be scared to put 50,000 rupees with us, right? But today, we have customers who put 500 crores with us.
What was your biggest challenge?
Did not have enough money in the bank to even meet the payroll.
What are the lessons that you've learned from the mistakes that you saw being made?
Didn't want to dilute their stake and therefore, ran out of cash.
Think you know what success looks like? Think again. Meet the disruptors, those who dare, dream and defy.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first trade to buy
all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target. It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings. Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize
Sensex Nifty logged sharpest decline since October as news of human pneumovirus virus or the HMPV spooks the market. Nearly 10 lakh crore rupees of investor wealth wiped out from the exchanges. All sectoral indices end with deep cuts. PSU Bank Index bleeds nearly 4.5% with all of the constituents in the red. Underwhelming third quarter business updates of banks fail to cheer investors. Indian rupee declines to fresh low of 85.82 against the US dollar. This is despite the Reserve Bank of India's efforts to protect the rupee amid geopolitical pressures. Third case of human metapneumovirus or the HMPV virus registers in India. Gujarat, a 2-month-old baby is infected in Ahmedabad. This is after ICMR detected 2 cases of HMPV in Karnataka through routine surveillance. Pre-budget exercises in full swing. Finance Minister Nirmala Sitharaman holds meetings with trade unions and energy, infra and urban development sectors. Meta Platforms moves National Company Law Appellate Tribunal, challenging the 213 crore rupee CCI penalty order in the WhatsApp 2021 privacy policy issue. India condemns Pakistan's airstrikes on Afghanistan, calls it an old practice of Islamabad to blame its neighbours for its own internal failures. Canadian Prime Minister Justin Trudeau likely to resign as the Liberal Party leader as early as Monday. This is according to media reports. Pressure for his resignation has been on the rise since his finance minister stepped down last month. Hello and welcome. This is Profit 360 on NDTV Profit and I'm your host Himakshi Bahugna. Along the next half an hour, we'll bring you the latest on the markets as well as national and international news. So viewers, benchmarks end with deep cuts as news of HMPV virus spooks the market. Nifty and the Sensex logged the sharpest decline since October 3. Nearly 10 lakh crore rupees of investor wealth wiped out from the exchanges. Sea of red across all sectoral indices. Harsh is here with the market trap.
Well, you saw pressure on the index today and of course a multitude of factors likely culminating to that. One is the slightly weaker macro that we've seen. We've seen US bond yield spike. The 10-year bond yield went to 4.6% now. That's the highest we've seen it in the last couple of months. The second factor is the fact that there's a new virus in town, HMPV. How that will play out in terms of impact will be the other concern. The third concern is, of course, that capex and government spend may not be as elevated as was budgeted. They'll in fact fall short this year, which will likely impact growth. You also had numbers coming out for banks. You had numbers coming out for FMCG companies, staples, as well as some of the other QSR companies which declared numbers. The QSR companies did well in terms of their numbers, but the staples not as much. Dabur, Marico were slightly on the weaker side. Banks growth was slightly on the muted side. Deposit growth has come back into focus. Loan to deposit ratios have started to get elevated, and that is the other concern which is playing out, along with, of course, asset quality, which we will know later at some point this month. But in terms of where markets were at, the breadth was shallow. It was a tough day of trade. 2,000 declines to just about 180 odd advances, and pretty much through the day we saw the advance decline being extremely skewed to the declines. The VIX has spiked to 16%. So we've seen strong volatility, second straight day where markets have fallen. We've seen 1.5% erased on markets. We are seeing now new levels starting to emerge, 23,600 being one of those key levels to watch out for. The Bank Nifty was down 2%, 1,000-point plus loss on the Bank Nifty, so pressure there as well. Kotak came out with news, CTO resigns. HDFC Bank's numbers were so muted. Both of those were impacted and they've dragged markets, the Bank Nifty as well as the Nifty 50 lower. The mid cap and small cap is where all the pain was, 2.5% plus on both of those, lower on both of those indices, and that's where a lot of the pressure has also started to build in. All the sectoral indices in the red, IT mildly in the red, but outside of that 1% plus across the board, as you can see on your screen. So pressure across the board. Broader markets also feeling the pain, and the BSE 500, some stocks which did well on the back of news reflecting there on your screen, and some which are doing which were beaten along with the market, and there were a lot of those today.
market this year will be slightly muted. This is what Vikas Khemani, the founder of Carnelian Asset Management, says on the market performance. He even advises investors to expect expectations low and the bar of risk higher. Here's from that conversation.
The biggest risk in the market is the risk of high expectations. I think given the fact in last 3-4 years we have done very well, investors' expectations have gone up significantly high. Investors have started believing that 20% return is very easy to come by, which is not the case, which is not a normal case. You might get in a pocket, but you can't get sustainably for a very long period of time. So I would again say that biggest risk is risk of high expectation, and given the fact that we are on a backdrop of a very large run-up and slightly challenging macro global environment, probably this year could be slightly muted, or at least I would say keep the expectations low, invest with the low expectation, and keep the risk bar high. And at the end of it, it boils down back to identifying companies which can grow given the environment. Like I just said that, when whole street has been saying IT is not doing well in last 3-4 years, we have had many 5 to 7 baggers in our portfolio coming within the IT sector. So I think, the real money is made in looking beyond narratives, identifying companies, identifying management which can deliver better growth.
US PSU Bank index cracks over 4% on back of underwhelming third quarter business updates of the banks. The banks report a mixed bag of figures where the moderation in loan growth fails to cheer investors. Vishwanath is here to give us an overall picture. Vishwanath, please take it away.
So the day saw some of the larger public sector bank names getting hammered on the stock exchanges, primarily because of weaker than expected quarterly figures that the banks have announced. Now let's take a couple of examples, specifically Union Bank and Bank of Baroda, two of the larger public sector banks in the ecosystem. Now both these banks saw advances growth and deposits growth sort of tempered down during Q3. Especially in the case of Union Bank, for example, the overall advances growth was about 6%, while deposits growth was only about 3.76% year on year. And that points to a lower business growth as far as these banks are concerned. Similarly, as in case of Bank of Baroda, the deposit and loan growth were pretty much comparable. Advances growth about 11.65%, while deposit growth at about 11.82%. This is understandable. Now, what is happening over the last year or so is that banks are trying to manage the deposit growth and bring it closer to advances growth. So the best way to probably get there is to slow down the advances growth, which had been growing at about 15 to 16% year on year till a little while back. Now that they're bringing down that advances growth, the expectation is that the loan to deposit ratio will come into control and the banks will be able to lend more in the future. However, there is a question of demand as well. Currently, the way banks are reporting their numbers, it looks like demand might be at a certain turning point as far as banks are concerned. We need to see what the final numbers look like when these banks announce their quarterly results in the next couple of weeks, in the next few weeks. Actually, we'll find out what is the kind of commentary that they're giving and the expectation of loan growth for the entire year.
Thanks, Vishy, for that. Now, let's talk about a stock that has been in the news for a while now. I'm talking about EaseMyTrip. The latest news flow was about the resignation of the CEO, Nishant Pitti. The stock has a falling knife, to say the least. 26% in the last 6 months. Promoters as well have been exiting the travel services provider. Hiral is here with the deep dive.
Absolutely. If you see in terms of the stock price, a 26% kind of a downtick is what we've already seen in the last 6 months as well. So good amount of wealth erosion that's happened for the investors. Now, what's happening from a promoter's, FIs and DII's perspective? All the three of them have been reducing stakes. So it's not really the FIs and the DIIs who are losing confidence, it's the promoters as well. That's what it comes across, because if you see the FIs, their stake has gone down from 4.15 in FY21 to a 2.98. DIIs from 11% to a 2.49. And if you talk about promoters, from a 74.9%, it's now come down to 48.97. So selling across the board, that's what we've been seeing. Moving from there on, let's look at the promoter action. Now, Nishant Pitti has reduced his stake from 37.13% since listing to a 25.88 in December 2024. Apart from that, Nishant Pitti has sold 1.4% stake in December 2024. That's the recent one, and the reports were that he was planning to sell little over 14%. Now, whether there have been no buyers for the remainder or what's the concern, we don't know, but that's the amount that he's gone and sold. Prashant Pitti, though, has increased his stake marginally to 0.5%, to 10.29% in December 2024. So a marginal increase by Prashant, but the other two co-founders have gone ahead and reduced as well. Moving from there on, let's just look at Nishant Pitti's stake since the IPO. From 37.26, it's now gone down to 12.8. It was 14.21. That's when the reports were coming in as to that he's going to sell entirely, but now he's sold around 1.4 and stands at 12.8% with regards to Nishant Pitti.
Thanks, Hiral, for that deep dive. Now, ITC stock end over 2% lower on the back of demerger of its hotels arm. The special pre-open session for ITC demerger saw the shares correcting by 26 rupees on NSE and the BSE. The demerged value of ITC hotels will continue to remain dominant on nearly 50 indices of NSE and BSE. The question now remains, is the date of ITC hotels listing? We have my colleague Sajid Mangad joining us with more details.
ITC demerger special trading session happened in the morning, and as a result of that, nearly 26 rupees per share has been removed from the ITC's price compared to the Friday closing, and 27 rupees on the BSE for that. Now ITC is trading on ex demerger basis, ex hotels basis, and the current stock price correction that you see is primarily based on the market trading that's happening there. ITC hotels will continue as dominant stock within the Sensex and the Nifty and other indices where ITC is there as part of the constituent, and it will start trading once the shares are credited to the demat account of all the shareholders, and once the trading begins, there will be a process through which it will exit the key indices, which is the Nifty, Sensex and the other indices which are there. On the day of listing, the ITC will be allowed a circuit breaker circuit, which is upper or lower for 20% for ITC, and there will be a pre-open session which will happen for ITC hotels on that day. As a result of which, the stock will remain in the index till the time it hits the circuit, and once the stock moves out of the circuit, it will gradually be exiting all the indices which is there. As per regulation, 60 days is the time by when the company ITC will have to list ITC hotels on the stock exchanges.
Thanks, Ajit. Now, viewers, the rupee depreciated to fresh lows and closed at 85.82 against the dollar on Monday. The rupee is expected to be in the range of 85.70 to 85.90 as per market analysts. Foreign exchange reserves held by the RBI fell to an equivalent of $640 billion in the last week of 2024 amidst its active intervention to limit volatility in the rupee. The depreciation in the rupee comes amidst a strengthening dollar, which is now showing some signs of stability. The dollar index remained at the 108.6 mark as markets await key data, including the US job openings, Fed's December meeting minutes, and the non-farm payrolls report. Viewers, 3 human metapneumovirus or the HMPV cases have been reported in India so far. A 2-month-old baby has been infected with the HMPV virus in Ahmedabad. This marks the first case in Gujarat. 2 more infants have been infected in a hospital in Bengaluru. The Union Health Ministry earlier said that India is prepared to manage respiratory illnesses with surveillance mechanisms. In fact, in the wake of these cases, Delhi Health Minister has directed Health Department to make arrangements. My colleague Shreya Ghosh joins us with more details.
Well, of course, we have to understand that ICMR detected these two cases in Karnataka through routine surveillance, and HMPV virus, the human metapneumovirus, it is nothing new. There shouldn't be much panic over this because this virus has been globally circulating for the last 20 years and also in India as well. So there is no need of panic over this because it is not a new phenomena. But then the health officials in Delhi will not take any chances, and they have made certain arrangements. The ICMR has said about these two cases in Karnataka that these two babies who are currently recovering, they do not have any travel history. These are essentially respiratory illnesses or flu-like symptoms. If people are having that, is what this HMPV virus can lead to, and it is completely treatable. And how it is different from COVID is that COVID affected all the organs, right? And HMPV virus is essentially a respiratory illness, and it affects only the respiratory organs. And if we talk about the arrangements that are being made, or the kind of precautionary measures that people can take, is of course to stay hygienic, to put on masks, and to avoid crowded places. And the health officials have also said that India is ready in terms of its health infrastructure to contain the surge in HMPV virus if it takes place at all. Right now, officially only 2 cases have been reported, that too through routine surveillance. Now that India is going through increased routine surveillance, rightfully so, in all these hospitals, more and more such cases are coming out. But there's nothing to be scared of because this virus has been in circulation in India itself for the last 20 years. And of course, people can take certain precautions, and they can stock up critical medicines like paracetamols and antihistamines, and hospitals should also be prepared with enough oxygen supply and ventilation support. So these kind of precautions are being taken in the national capital by the system, and also on an individual level people can take certain precautions. But again, senior doctors are urging everybody to stay informed but not alarmed.
Right, Shreya. Thanks for bringing us those details. In fact, we also spoke to Rakesh Verma, the principal consultant at Ministry of Health, about the virus. He says that the virus has dynamic mutation capabilities. It can spread through cold and cough, just like COVID. He explains more about the virus. Listen in.
This is quite a scary information that we are, as medical doctors, we are perceiving it. And undoubtedly, the memories of COVID are very, very warm in our heads even now, in our minds, and we really want to avoid any such situation across the country. It also spreads with the oral cavity, with the respiration, so with every cough, with every sneezing. An infected person can inflict the same disease to several people within a spectrum of 6 meters. That's why they say that we have to follow the same precaution. Now, considering whether it is the same prevalent or same dangerous, the news from China is still very much restricted and is very much censored. But whatever we presume, yes, this could be as lethal as COVID virus was, because both belong to the same family. Third, your query was whether this virus was available or prevalent. Yes, it was prevalent, but not in that, it did not have that many pangs. Just like we have so many snakes around us, but all snakes are not dangerous. There could be natural snakes. Only certain type of snakes could be more dangerous. So while the virus was present in the atmosphere, but the current mutation is seemingly very dangerous, could be causing lethal, and we have to keep our fingers crossed.
Viewers, in fact, you can catch the entire conversation at 6 p.m. today at The Big Question. NDTV Profit's Tamanna Inamdar will be in conversation with Dr. Rakesh Verma on what measures to take for the HMPV to take stock and to also take stock of government's preparedness. Now, viewers, pre-budget exercises kick in full swing as Finance Minister Nirmala Sitharaman holds a consultation meet with trade unions, energy, infra and urban development sectors. Rishabh joins in with more. Rishabh, what was on the wish list of trade unions?
Finance Minister Nirmala Sitharaman is holding another set of meetings today as part of her pre-budget consultations ahead of the budget that is scheduled to be presented on February 1st. The first of the meetings was with trade unions from across India. Trade unions such as All India Trade Union as well as Bharatiya Mazdoor Sangh were present today. Their demands included the scrappage of the new pension scheme as well as the unified pension scheme and the implementation of only the old pension scheme. Apart from that, they demanded an additional 2% tax on the super rich as a way to guarantee social security for all informal workers. They also asked for exemption in income tax limit to be enhanced to 10 lakh rupees annually. They also asked for the immediate implementation of the code on wages as well as the code on social security by the centre. What they also demanded was recognition for gig workers as workers and social security and a minimum wage code for them as well. Apart from that, they also demanded for the roughly 1.2 crore domestic workers status as well as social security. The second of the meeting is currently being held. It is apart and it is being held with representatives from the infrastructure, urban as well as the energy sectors. So that is underway and we will report on that as well.
Thanks, Rishabh. Now, Meta moves NCLAT to challenge the 213 crore rupee CCI penalty over WhatsApp's 2021 privacy policy issue. An urgent meeting is sought on January 16. Varun is joining us with more on this.
So yeah, a little background for our viewers. So in November last year, the CCI had imposed a penalty of rupees 213 crores on Meta, which is the parent company of WhatsApp. Now CCI had imposed this penalty because it found Meta guilty of abusing its dominant position and in the implementation of WhatsApp's 2021 privacy policy. And through its investigation, CCI had found that the 2021 policy was on a take it or leave it basis and that constituted an abuse of dominant position. Now, as per this update, the 2021 update, the user data was collected and shared with other Meta Group companies, which created an entry barrier for its rivals. Now, senior counsels Kapil Sibal and Mukul Rohatgi appeared for Meta today and informed the NCLAT that the CCI order has huge implications, and since it would have industry-wide ramifications, the case must be heard on 16 January, that is 10 days from now, and the NCLAT principal bench agreed to their request and the case has now been posted for a hearing on 16th of January.
Varun, stay with us. The Supreme Court has transferred all petitions pending against the antitrust probe by the CCI into activities of Amazon and Flipkart to the Karnataka High Court. Tell us about what the Supreme Court has said.
So the Supreme Court has transferred all the cases pertaining to the antitrust probe launched against e-commerce giants Amazon and Flipkart before the Karnataka High Court. Now, the Competition Commission of India was represented by the Attorney General of India, Mr. R. Venkatramani, and he told the top court that 5 new additional cases have been filed in the matter, apart from the already existing 26 cases that are pending before various high courts in the country. Now, the court said that all cases, including the newly filed 5 cases, will be heard by the Karnataka High Court, and it added that if any additional cases are filed in the future, the same will also be heard by the Karnataka High Court. Now, it is very crucial to note that the investigation in this matter has come to a standstill by virtue of stay orders passed by the High Courts, and this was the primary reason the CCI was keen on seeking consolidation of all the cases before the Delhi High Court or the Supreme Court. Now, and though the CCI's request for clubbing of cases has been accepted by the top court, the regulator's forum of choice has not been accepted.
Right, Varun. Now, according to media reports, Canadian Prime Minister Justin Trudeau is expected to announce his resignation as the leader of Liberal Party this week. Remember, Trudeau has been under pressure from elected lawmakers and his party to quit for months. NDTV's Maha Siddiqui joins us with more details.
A lot of his party members also blame Justin Trudeau specifically for the unpopularity of the Liberal Party. They feel that the economic situation in the country was not properly handled. There was rising inflation, housing crisis, because of which the party has been left vulnerable now electorally. And that is why there were calls for a leadership change in the Liberal Party. These calls have been made for the last over 6 months. Members of his party, as well as members of parliament of the Liberal Party have been calling for his resignation as the party leader and have been asking for a fresh leadership to take them into the next election. But his situation became even more tenuous after his close ally, the Deputy Prime Minister and the former Finance Minister, Chrystia Freeland, resigned. She said that Justin Trudeau wanted to change her ministry, but she chose to step down from the cabinet instead. Since then, the NDP that had initially been supporting the Trudeau government, the minority government from the outside, but they had, remember, withdrawn that outside support in September. However, they were supporting the government on a case-by-case basis in Parliament. The leader of that party.
Well, viewers, that's all the time we had on this edition of Profit 360. Stay tuned to NDTV Profit for more news and updates.
On my face. Chalo, chalo, chalo. How do you define a disruptor?
The idea was, why should we charge differently? We should probably charge the same.
What's the idea to change things around?
People would be scared to put 50,000 rupees with us, right? But today, we have customers who put 500 crores with us.
What was your biggest challenge?
We did not have enough money in the bank to even meet the payroll.
What are the lessons that you've learned from the mistakes that you saw being made?
Didn't want to dilute their stake and therefore, ran out of cash.
Think you know what success looks like? Think again. Meet the disruptors, those who dare, dream and defy.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first to buy
all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target. It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings. Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
On my face. Chalo, chalo, chalo. How do you define a disruptor?
The idea was, why should we charge differently? We should probably charge the same.
What's the idea to change things around?
People would be scared to put 50,000 rupees with us, right? But today, we have customers who put 500 crores with us.
What was your biggest challenge?
We did not have enough money in the bank to even meet the payroll.
What are the lessons that you've learned from the mistakes that you saw being made?
Didn't want to dilute their stake and therefore, ran out of cash.
Think you know what success looks like? Think again. Meet the disruptors, those who dare, dream and defy.
Hello and welcome to KYC, Know Your Company as the abbreviation suggests. It's a new show on NDTV Profit, and what we focus on is to try and cut the clutter in this fast-paced world of stock markets. Investors generally are bombarded with information, but what they lack often is deep comprehensive understanding of companies that they invest in. Know Your Company is a show designed to give the regular investor powerful, actionable insights into the fundamentals of single NSE listed companies daily. Now, quickly moving on to the company that we're going to look at today. We're going to look at Popular Vehicles. It's a distributor in the auto segment, and it's an auto retailer which was established in 1984 with Maruti. Headquartered in Kerala, it operates now a dealership with Maruti, Honda, JLR, Tata Motors, commercial vehicles, Ather Energy and Piaggio. Those are all the brands that they currently distribute. They employ over 10,000 people across 430 touch points across India. Now, key segments, let's pull those up as well, try and break that down. First off, new vehicles, 74% of their sales comes from there, 5% from spare parts. Services is the other larger chunk, 15%, and then pre-owned vehicles is 6%. What I would also want to try and break down and understand, and we'll have Puneet joining in just a minute, is how quickly is pre-owned vehicles growing, and can that growth rate kind of sustain. But that's the larger breakup in terms of the current revenue. I'm also going to try and break down, as we always do on each show, the fundamentals, and we at the end of all of that we give you a rating. So let's start off with what our rating parameters are. First off, we look at the income statement before we look at the balance sheet, the cash flow and the return ratios on all the capital that the company continues investing. Shareholding, how that has evolved, along with street cred, what's the kind of return the stock has given. Along with street coverage, are analysts actually looking at the stock in a deep fashion? Is it a well-tracked, well-covered counter? And what do analysts believe is the upside or downside potential? That's street coverage. And last off, on the valuation picture, how does valuation stack up versus peers as well as other players in the similar kind of cohort? And we'll talk about all of that on this show. Let me first start off with income statement. Well, revenue currently sitting just shy of 6,000 crore. It's got a very strong revenue growth that it has clocked over the last few years. And I'll pull out not only the last year, but I'll also try and cull out from the last, say, 2021, when the top line was maybe just about 3,000 crore. Currently, top line sitting at roughly 5,600 crores, which is just shy of the 6,000 crore mark. So it's been a very healthy revenue growth that we've seen the company clock. EBITDA too has grown at a healthy pace, but what we've seen is it's not grown as quickly. So EBITDA has shrunk from 5%, EBITDA has shrunk to around 4% odd. And we'll try and add color to that, because is it just growth that they're focusing on currently, and which is why it shrunk? We'll try and get some more understanding on that. But profit after tax up 32%. So strong growth where PAT is concerned. PAT has gone in FY22 to a sub 50 crore to now nearly 100 crore, nearly in FY24 on a consol basis. So that's how it's lining up in terms of numbers. But Puneet, let me first off welcome, always good having you. Trying to understand from you, Puneet, how do the balance sheet metrics line up?
Well, definitely, there are a couple of data points when you look at the net debt to equity, especially It's trading at around the 0.6 times for net debt to equity specifically. And what's important is that, while the cash reserves have been maintained around 40 to 45 crores, the aspect that the gross debt is over 500 crores for a company like Popular. Now, the size of the balance sheet as well as, that's not too much, but this is not a key concern specifically because, it's an auto dealership. So it has to maintain roughly 30 to 50 days of inventory of cars in its warehouses. For that, of course, it needs this kind of working capital, which is generally, financed with the kind of debt that they've taken on a gross basis. But they do also maintain a decent cash balance of about 46 odd crores, which is roughly about 40 to 50% of their annual profit as well. So they have been maintaining that and increasing that steadily over the last 3 years as well. That's something that's something very positive for this company as well. But one of the other aspects, Harsh, is of course to also look at the cash flow of a business like this, because heavy cash investment needed to maintain that kind of inventory also has certain strains on the cash flow as well.
Yeah, and that's reflective, Puneet, of the balance sheet that we'll pull up very, very quickly. The cash flow per se, 80 crore is the cash flow from operations. But let's also break this down, because you have receivables which have doubled over the last year or so. From sub 40 crore, it's gone to 71 crore, and you have inventory which has gone up 5x from around 35 odd crore to 150 plus crore. Those are the two metrics, in my view, which is impacting overall cash flow. In terms of the compounding, therefore, you're seeing a negative 6% on cash flow from operations. And that's where the likely negativity is starting to creep through. Can that change in a big fashion? Well, you would hope so. And if that does happen, of course, you may start seeing a tweak with regard to how one views cash flows as well within the company. But for now, you're seeing a negative 6% over the last 3 years in terms of cash flow from operations, largely led by these two, which are dragging numbers. Net cash flow has, though, been quite healthy in that sense. So somewhere there's been a balance, Puneet, and therefore overall we'll want that cash flow from operations to start to pick up, and therefore that thumbs down view at the moment with regard to cash flow.
And another, I think one of the key metrics is, of course, the return ratios as well, which we do look at as well.
Yeah.
Now, the ROE is of course 11.6%, and the reason why it's actually fallen by 7 percentage points compared to last year, but that's largely because of the IPO proceeds that they got in 2024. So that's one of the key things, because they had increased that ROE to roughly about the 18% in FY23. The company has also spoken about this in the previous conference call, that it is expected to rise again in the next year once this excess cash is deployed. The other aspect is the ROCE, or the return on capital employed as well. That's very healthy at around 17.7 to 18 percentage points. And over the last 3 to 4 years, the company has been steadily increasing this and maintaining at least the 17% levels continuously over the last 4 years, despite the pandemic as well. So that's one of the key things, that they've been able to deploy cash very effectively, Harsh, and that's reflected in these numbers as well.
Well, yes, so cash deployment in that sense is effective, and return ratios therefore looking positive. We'd like to look at a turnaround both in inventory as well as with regard to receivables. So those are two metrics we'll track. But moving quickly on, you have shareholding, which is a key metric here, because what's happened over the last year or so, they've listed themselves, they've gone through an IPO process, they've listed themselves on exchanges, and 61% promoter ownership is what the shareholding stood at the start of immediately post listing on exchanges, and that's carried on over the last 2 to 3 quarters, which is obviously a positive of some sort, and it's definitely a thumbs up on that metric, because what you would expect is some amount of dilution post listing, but that's clearly not happened at all. So management remains very well invested in the company. 61% is a good shareholding as well. It's a healthy shareholding, more than 50%. Not only do they maintain control, it also signifies that they have confidence in the company. So both of those metrics, definitely a thumbs up on that count. One was return ratios, which Puneet covered, and one is the shareholding, which I covered. But let's talk about street cred, because returns not as healthy, right, Puneet?
Yeah, and it's been dragged because of the market conditions as well, because this year we have seen a very slow movement of cars specifically, which is the majority of the revenues for a company like Popular. That's one of the key things, that they have reported lower growth in Q2 as well as Q1 as well. Apart from that, what's interesting is that, which Harsh pointed out, the promoters, it's split equally between the three promoters, with Naveen Philip, who's the current MD as well, holding roughly about 20.39%, along with Mr. Francis Paul as well as John Paul, who hold the same stake. So it's been consistent. And the key aspect about the share price performance is, of course, reflected in its peer Landmark as well, which we'll get to eventually. The aspect that, the company is expecting better performance in the next year, both in terms of cars as well as commercial vehicles, because infrastructure spending has increased in this half, starting somewhere in the previous month of November as well as December. That was also absent in the first 6 months, largely because of elections as well as the monsoon. So both the companies, the passenger car segment was dragged down because of the very stupendous growth over the last 2 to 3 years. But the truck segment also wasn't working specifically because, the industry as a whole had come to a standstill in the first 6 months as well. So that's largely dragged down the share price performance in this particular year. But of course, when we eventually get to valuation, that will be one of the positives to talk about as well, because it's now somewhere trading at a very interesting point, to say the least.
Yeah, and interesting you bring that up, because whenever you have a company trading at a decent valuation, you'll always have good street coverage coming through. But at the moment, we don't have any street coverage on this one, and therefore we give it a neutral. No street coverage whatsoever. Two drawbacks of that. One is you don't understand perspective. You don't get a perspective of an active analyst tracking a stock all the time. And second is typically when an active analyst tracks it, you will have certain ESG or rather more governance parameters looked at in a more deeper fashion, which also we don't get, and therefore we'll hold on to the neutral rating on this one. But Puneet, let me quickly come across to you with regard to valuations. How do those stack up?
Well, it's very interesting for both the companies, because we're also comparing it with the listed peer, which is Landmark Cars as well. So for Popular, of course, it's trading at 13 times current price to earnings, since it does not have any kind of analyst coverage. We haven't taken forward PE of FY26 or 27. What's interesting with Landmark is the share price correction hasn't been as steep as something like a Popular vehicle. So when you look at price to earnings specifically, while the earnings have deteriorated for something like a Landmark, the price has stayed stagnant, and that's why we see the big disparity between both these price to earnings ratio for these companies. In terms of Popular vehicles, the numerator, the price has corrected while the earnings have corrected as well, and that's why you can see that the 13 times current price to earnings looks decent, and the disparity is there. But over the next year, when performance increases for both these companies in terms of better market conditions, as well as the passenger car segment also showing some growth compared to the previous year, because of course FY25 will be a low base in FY26, so that's also going to correct slightly. It is expected that something like a Popular vehicles, where the earnings might increase in the next year, will also have some kind of positive price movement. But currently, Ash, it's very interesting what's happening in both these players, because there's not too much competition, or at least in the listed space, while on the private side there's a lot of competition with razor thin margins, of course. But for something like a Popular vehicles, the price is corrected to a point with respect to its fall in earnings in this particular year, and that's why we see it being, cannot call it undervalued per se, because the earnings have fallen, but definitely when compared to something like a Landmark Cars, it's at that adjacent point as well.
Fair point. Lower growth but at a cheaper valuation, as is generally the case. You pay more for growth. But let's quickly break down all that we've discussed in terms of performance parameters. Income statement we spoke about, positive. Balance sheet check was positive. Cash flow was negative because of a couple of one-offs that we spoke about. Return ratios was positive as well. Shareholding positive. Street cred negative because of the returns given post IPO. Street coverage is neutral, and valuation picture is positive, giving us a rating of 5.5. But let's go across to the management, shift focus. Puneet, of course, spoke with the company's MD and promoter, Naveen Philip, and he chatted about the company's growth plans ahead, as well as what can we expect in terms of guidance. Listen into a slice of that conversation.
So we are spread across the entire automobile sector. So we have two-wheeler, three-wheeler, we have passenger cars and commercial vehicles. And then we also have distribution of spare parts and the used vehicles per se. In terms of brands, we are associated with very limited brands per se. So in passenger vehicles, we are associated with Maruti, we are associated with Jaguar Land Rover and Honda. In commercial vehicles with Tata Motors and Bharat Benz. Two-wheelers, EV two-wheelers with Ather and EV three-wheelers with Piaggio. In terms of distribution of spare parts, we have far more brands because it's a much larger in terms of we have both Tata Passenger, Tata Commercial, Maruti, JCB, Ashok Leyland. We are agnostic over there. In terms of a strategy going into the future, and this has been a philosophy from day one, and we have repeated it even during the IPO and post, is in terms of building up our service infrastructure in the passenger car business and in terms of having an overall coverage of all categories of the automobile sector. Here, Maruti being the largest brand for the last 40 years plus, the base for service, that is the number of vehicles at the car park that is already present in the country, is the largest for Maruti. So our expansion in service and the expansion to other states and all that would predominantly be Maruti-led in terms of the passenger vehicles. In terms of luxury vehicles, we are present with Jaguar Land Rover. Here again, we would like to keep growing with Jaguar Land Rover and maybe add one more brand in the luxury vehicle portfolio. We are very concentrated in terms of our brand addition. So we are in terms of very focused with the players that we are already there with in terms of OEM and we believe that is our strength in terms of long-standing relationship with the OEMs and having a much larger area coverage and in terms of depth. In commercial vehicles, we have been with Tata Motors for the last 27, 28 years. We are already present in 2 states. We would like to keep expanding with them. Similarly with Bharat Benz since the inception. So overall strategy is that in terms of continuing to be with the brands that we have and growing with them per se, instead of just adding brands on that. In terms of two-wheelers, we have added, we've got into that space only about 2 years ago with Ather. Continue to be happy with the Ather, and Ather is also going for an IPO. And again here, would like to expand with Ather into other states also. And that's our philosophy per se. Three-wheeler as a market, we've seen some troubles in terms of because of the FAME subsidy and all that. So we're still evaluating whether we want to be in that space.
The second question, Mr. Philip, I just wanted to continue the point because the reason I asked for brand addition is because, according to your RHP also, there are either auto dealerships with a single brand across states or, multi-brands as your, only listed player has roughly 10 brands currently operating. You're somewhere, positioned in the middle. So I just wanted to ask, because this year has seen slowdown across the passenger cars as well as the truck segment as well. And it's visible because of market conditions. So, and while you mentioned that your two-wheeler business is only 2 years old, so in terms of revenue, it might have lower contribution. But if we get kind of like a slowdown, what would be the company's strategy in case of a similar issue in terms of, brand additions as well?
Yeah, so our strategy doesn't change because 1 year is a slowdown. And as I said, our focus is in terms of building up our service facilities and service partnership per se. And last year we serviced about 1 million vehicles. And we continue to focus on that and build that as our strength area. And for that, we don't need to have multiple brands as a strategy. With the same brands that we have, there's enough scope to grow. And that's the focus that we have, both in terms of across geographies and within that brand in the states that we are.
Now, Mr. Philip, I just wanted to take forward this point because, working capital is one of the mainstay of any auto dealerships because, you have to maintain the car stocks in the inventory as well. I wanted to understand what kind of contribution that you're targeting from the non-new vehicle sales portfolio as well, mainly the pre-owned vehicle spares as well as the service business. Because this will help you offset some of the high interest costs of maintaining working capital and inventory. While I know you're on silent period for Q3, what would be the FY 26 and 27 targets coming from these 3 businesses firstly?
If you look at our last year's numbers or the year before last, in terms of last year, we delivered a PAT of about 76 crores. So approximately 15% of our turnover comes from our service business. So last year we had a turnover of approximately 5,000 crores, about 750 crores came from our service business. But close to about 56% service and spares business. But close to about 56% of our EBITDA came from our service and spares business. And if you look at what goes down to the PAT level, it would be closer to about 70-75% from the service and spares business. And which is why we keep stressing that we would like to build that service portfolio up because that's a more consistent business And I mean, there's no inventory stock involved in that except for a very 30 days of spare stock that is involved. So that is where our focus is in terms of. As you rightly said, the turnover per se, out of the 5,000 crores, 80% of our turnover comes from new vehicles. But that contribution of the new vehicles into EBITDA levels and into PAT levels is much lower in terms of percentage contribution per se. So that's where we want to focus on building our service franchising, and that's been our philosophy through all these years that we have. And going back to the statement that I made initially, and for that we don't need to have multiple brand additions, because if you look at the car park, the car park consists mainly of 3 or 4 players. That is Maruti, Hyundai, Tata and Mahindra. If you look at these 4 players, probably approximately about 85% of the car park lies there. Coming to this year specific, and in terms of H1, it's been muted because the interest costs that have piled up has taken the sheen out of our bottom line numbers. We were carrying in the initial months, starting from April till about August, September, we were carrying in terms of passenger vehicles closer to a 75 to 90 days of stock. That has slowly started coming down, and I think that would start showing in the results going forward. So, since we are in the silent period, I'm not getting into numbers of Q3 specifically, but I think an overall trend. So over the last 5 years, we've been clocking a CAGR in our spares and service business of approximately 20%. And the contribution, which was, as I said, it was 15% last year. That contribution 3-4 years back was about 11%. So that's the growth that we would like to maintain, and we're confident of maintaining going forward over the next 2-3 years. So 1 year might be a blip here and there, but over a trend of 3-4 years, we would still like to grow at about 20 to 25%. And we are quite confident of delivering those. And as we grow in that number, the contribution, as I said, from 11% to 15% of turnover, that would further go up, and in terms of our EBITDA margins and in terms of our PAT.
Now, Mr. Philip, electric vehicles has been an up-and-coming segment post the pandemic, especially, since the focus on personal mobility. Now, while in 2024, we saw roughly about 1 lakh electric vehicles sold in the country in terms of four-wheeler cars, still a small share of the overall 40 lakh vehicles sold in 2024. I want to understand your strategy in terms of electric vehicles, because the brand that you operate in, mainly Maruti, is looking to launch an electric vehicle in this particular quarter. And it's mainly dominated by brands such as Tata Motors, Kia and MG, who have taken a steadfast approach to electric vehicles. How does an EV brand addition for you work? And in terms of the service business as well of electric vehicles, how would it be different from a traditional, diesel or petrol service business in terms of revenue as well as margins as well?
So if you look at in terms of, Maruti is launching their EV Vitara in terms of, it will be there at the Bharat Mobility Auto Show. If you look at EVs across the world, they're actually very disparate in terms of, so if you look at China's EV penetration and population or sales per year has gone up drastically. But whereas if you look at the other extreme of US, it has gone down consistently. And in Europe also, earlier the target was that by 2030 everything should be alternate fuels or EV specifically. They have moved that timeline from 2030 to 2040 in terms of adaptation. Large companies like Mercedes, all of them have stepped back on the EV portfolio and EV business per se. So we don't know how it will play out in India, whether it's just EVs or hybrids that will do well, biofuel, CNG. We also have hydrogen cells, everything coming in. So it's a mix that will go over the next 3-4 years. How does it impact us as a dealer is the question. In terms of service business, if it is only an EV portfolio, definitely services come down by about 10, the regular service, because moving parts are lower. But if you look at, even as I said earlier, in terms of our revenues, the EBITDA contribution, 55% of our EBITDA came from service and spares business. So if you look at 4 million vehicles that will probably get sold this year, will probably go to about 8 million vehicles by 2030. We are looking at this year, the penetration of EVs, as you said, is only 1 lakh on 40 vehicles. 40 lakh vehicles, about 2.5%, 3%. It will probably move up to the most optimistic of estimates is that will go to 30%. But we would look at, if you look at what the trend is, it'll probably be around 17-18%. Which means even in 2030, that out of the 8 million vehicles that is estimated to be sold, 6 million would be ICE or hybrid or a combination of those. And about 2 million vehicles would be probably EV. Which means that from now to 2030, we are going to see at least about 25 million ICE and hybrid vehicles going to be added. Okay, and that will sustain service for the next 10 years to come. Because usually the service period is at least over 5 to 7 years. So that's one part. Out of the 55% EBITDA that we generated last year, close to about 70% came from our accident repair business or body shop business. Now that, whether it's an EV or an ICE engine or any other powertrain, the accident repair business doesn't get affected because the more number of vehicles on road, the number of two-wheelers penetration, three-wheeler penetration, everything, accident rates have not come down. It only has gone up. And even in highly regulated markets where you have ADS and all that, even in US, China, everything, accident rates have never come down. So that's where our concentration is. So our accident repair is concentrated mainly on our passenger vehicle thing. Because if you look at commercial vehicles, though accidents are there, the repair, so you should look at accidents as not just major accidents. I'm talking of small scratches on the vehicles, a small dent on the vehicle. A commercial vehicle operator would not repair it immediately unless the vehicle stops running because he or she has to generate money out of the commercial vehicle. In terms of passenger vehicle, the thought process is very different. The owner wants the vehicle to look spick and span. So even a small scratch dent is repaired, and that is where there is a flow of revenue also.
Well, out of time on this edition of KYC. Thanks, Puneet, for joining us and giving us all that perspective. But for now, from me, everyone who puts the show together, including Puneet, thanks so much for watching. Stay tuned to NDTV Profit. More action on the other side.
On my face. Chalo, chalo, chalo. How do you define a disruptor?
The idea was, why should we charge differently? We should probably charge the same.
What's the idea to change things around?
People would be scared to put 50,000 rupees with us, right? But today, we have customers who put 500 crores with us.
What was your biggest challenge?
Did not have enough money in the bank to even meet the payroll.
What are the lessons that you've learned from the mistakes that you saw being made?
Didn't want to dilute their stake and therefore, ran out of cash.
Think you know what success looks like? Think again. Meet the disruptors, those who dare, dream and defy.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first to buy
all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target. It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings. Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Hi, thanks so much for joining in. I'm Alex Matthew and this is Your Money Matters on NDTV Profit, because for us at NDTV Profit, your money matters. It's really simple. We discuss everything related to money, not just your investments, but also your expenses on things like travel, luxury, and even health. On today's episode, I want to talk about something that often gets ignored. We stress about the interest that we earn on fixed deposits and other investments, but not enough about what we're paying to the bank. I want to get you to think about how you can stop banks from earning so much from you. And later on in the show, one of our lucky viewers will join in to discuss his most important financial goal, and my guest today will help him achieve that goal and to plan for it. Joining me today is Harshvardhan Rungta, Certified Financial Planner and the co-founder of Rungta Securities. Harsh, thanks so much for taking the time.
My pleasure, Alex. It's always good to be in discussing personal finance with you.
Yeah, and this is a brand new show. Thanks so much for being on the first episode.
My pleasure. Entirely my pleasure.
So, do you agree that people often don't entirely factor in the cost of interest?
Absolutely. In fact, Alex, if you look at the situation right now, we would see people are judging the affordability of a product based on the quantum of EMI, not on the total cost of the product. Yes. Now, I'll give an example. I mean, we've seen so many people, upgrading their cars, right? Now, how do they judge what is the cost of the car that they need to buy with the EMI that they can afford? So say an individual says, I can afford say 35,000 rupees EMI. So they will look for an EMI equivalent to 35,000, nothing to do with the cost of the car. So if the EMI does not fit into a 3-year loan, they'll extend the loan to say 5 years.
Right.
But they'll keep the car, the cost of the car will be much higher than what they had originally anticipated. So what happens in this case? So initially you had a budget of say you would want to buy a car worth 15 lakhs.
Yes.
And for whatever reasons, the EMI fits into say 35,000. Now you walk into the showroom and you'll have a salesman telling you that, look, why are you looking at a 15 lakh car? Why don't I give you something which is say an upgraded version of this, which comes say about 20 lakhs. Now, if you were to compute the EMI over 3 years, it's certainly not going to be 35,000.
Correct.
So what do you do in that case? Now you say, okay, if you can afford 35,000, let me extend the loan period to 5 years. So you say, okay, fine, that suits, as long as I can pay 35,000 every month. But now in this bargain, you've actually increased your spend from 15 lakhs to 20 lakhs.
Right. And the interest cost is significantly higher.
Absolutely. Let me explain that to you with another very common example of a home loan. I mean, if buying a house has been on the wish list of almost everybody.
Yeah.
Now, if you were to use that as an example and you take the numbers out of that, so say suppose you're taking a loan of 1 crore, the tenure being 20 years, and your rate of interest is 9%.
Sure.
Your EMI in this context will come to about 90,000 rupees.
Right.
Now, you have to pay 90,000 rupees over 20 years. So that's 240 installments.
Correct.
The total outflow, 90,000 into 240, is 2 crores and 16 lakhs.
Right. That's more than double.
Yeah, against a loan of 1 crore.
Yeah.
So 1 crore is your principal that you've repaid, and 1 crore 16 lakhs is the interest that you're paying. So the cost of your house has become more than double.
Yes.
Okay, so I'm not saying do not buy a home loan, do not buy a house on loan. I'm not going to that. Just extrapolate this onto discretionary spends like a car or a holiday. We see people, taking loans for buying cars which are way beyond their means. We're seeing people going on holidays on EMIs. So I think if you were to compute the interest that you're paying for discretionary spends and depreciating assets like cars, so then you would possibly know what kind of impact you're having. So it's very, very misjudging for people to evaluate their spends based on the affordability of EMI.
Are there good interest costs and bad interest costs?
Yes, of course. So any product that is productive in nature, say for example, house. A house is something that you possibly live in. It could also very closely be related to investments.
Sure.
Over a period of time, you believe that at least you should be able to get your cost, if not profit.
It's usually an appreciating asset.
It's usually an appreciating asset. So, I mean, I wouldn't put, and house mainly, as I said, roti, kapda, makan. I mean, these are the things that, and if you're buying a house for investment purpose, then you have to evaluate it independently accordingly. But if you're buying a house for your own self, being an appreciating asset, if at all, I mean, I don't think that would be going into the unproductive area.
Okay.
However, going on a holiday on EMIs on a loan, I don't think I can even come to terms to accept it by any means. I mean, and that is what...
Or clothes, for that matter.
Yeah.
You said roti kapda, I know. But
no, but designer clothes, I mean, you don't buy designer clothes on EMIs and on loans, right? That is not... So, roti kapda makan would essentially mean your basic living, by living standards. And I don't think you would have a problem covering yourself up with regular clothes, and you don't need no loans for that.
Right.
But given the culture that we are in right now, the concerns are that we are tending to spend more than what we can afford. The aspirational value of things that we want to own is much more than the practical side of the brain that works to say that, look, you're not supposed to do that. So I think that mismatch at one point in time will be very fatal. And that is when you get into a debt trap. That is when you get into those lifestyle traps that once you've upgraded your lifestyle, you cannot go down again. Like if you've started moving into an ultra luxury car, and then suddenly after the next round, you're going down to a regular sedan, I don't think that the society is going to like it. And you're going to be worried about that.
So there are certain, and you know, I often talk about thumb rules, I know, but I try to contextualize it and make it usable by everybody. And there are reasons why these thumb rules exist. There are thumb rules about what your EMI should be as a percentage of your overall income. Why does that exist?
So see, it's basic rules and basic principles. If you're earning, say, 100 rupees, there are going to be certain expenses going to be required for your day-to-day living expenses. Like, I mean, you're going to have food, clothing, shelter, as I said. So essentially, if you notice, I mean, if you're in a good situation, if your income is beyond say about ₹1 lakh per month, then your basic living expenses would be at least 50% of that.
Sure.
Okay, if you're earning only 15,000-20,000 rupees a month, then everything goes towards living expenses.
And that would include rent and your food and all of that.
Absolutely. So there is going to be one basic expense that you're going to incur based on every city that you live in. I mean, each city will have the different amounts. But unless you're earning at least ₹1 lakh a month, I don't think you'll have surplus left, quite honestly. But in case you're earning more than 1 lakh, that is the time you get into those areas of loans and EMIs, because you believe that 50% of that would be your basic expenses. Even if you don't do anything fancy, in a city like Mumbai, I mean, I don't think you can survive with less than ₹1 lakh a month as an income in that context.
I mean, a lot of people do, but at the same time, they have to limit what they're spending on.
Exactly. So 50% of your income would essentially be for your day-to-day living expenses. Rest for 50% that you have, that can be best allocated towards EMIs. Because if you're going to be allocating more than 50% of your income towards EMIs, then what are you going to be left with for survival purposes?
Okay.
So in that context, ensure that your EMIs are never more than 50% of your take-home salary.
And do you try and ensure that you don't take unproductive EMIs? Is that it? Because a lot of people say, for the purposes of your credit score, which is an argument that I've heard a lot, right? You take a loan to up your credit score for that moment when you need to take a big loan so that you get a good rate.
I think that's a very foolish way of even trying to induce a person to take a loan, quite honestly. I mean, it's like telling a pure vegetarian that you need to have meat to have access to protein. I mean, I don't think it works like that.
And you have a lot of options available to you.
A lot of options. I mean, you could do just regular credit card transactions and you would possibly have a credit score there.
Because it's always struck me as really odd that the banking system looks at somebody with no credit history as a bad borrower or potentially bad borrower because they don't have a history. From my perspective, somebody's not taken a loan because they've never needed it and they've managed their lives very well by apportioning and living within their means. And you know, they're perfectly fine. But a bank manager would say, hey, or a credit a reviewer would say, look, you don't have a credit history, so you're not going to get the best possible score.
So, it's a bit unfortunate, but, being fair to the bankers as well, I mean, if there is no track record of you, there's no credit score, so you don't want to stick out your neck to say that, look, I'm the first one to take exposure to such a person.
But like you said, in your example on the vegetarian versus non-vegetarian protein sources, ultimately you have cash flows, right? And your bank is going to judge your ability to pay based on cash flow. So there should be a way. And that argument is false.
No, so this is fair. So exactly. Now coming to the GST, let me bring GST in. So all those self-employed individuals or small businesses, I mean, right now banks can evaluate their turnover based on the GST returns that they file.
Yeah.
So yes, there are multiple other sources. But that's an excuse if an individual gives, say that I'm taking a loan only to build a credit history. Sure. I don't think that is even holding any good stead in anybody's argument. So if you're fooling yourself by saying that, look, I'm taking a loan right now so that if I want to take a loan later on, I will have a credit history. No, I think don't even get into that zone.
And the kind of loans that people get into, therefore, are your relatively smaller ticket loans. Your credit card, of course, they get into credit card spends. Hopefully, people are not getting into credit card debt. What are the big no-nos? Personal debt, unsecured, and credit card debt. Would you say that big no-nos?
Absolutely. To begin with, to roll over a credit card outstanding is one of the most, unproductive or a most, I would say, a biggest mistake that a person could do is to roll over your credit card outstandings, because that entails an interest of almost 30 to 40%.
Yes.
So you don't want to pay that kind of and then again the credit history gets negatively impacted. Okay, so that's one that you avoid by all means. The other is the personal loans and the unsecured loans, because they come at a higher interest rate. Invariably, they would be in between 14 to 18% is what you're going to pay for an unsecured or a personal loan. The third, of course, as much as anybody would say that these are zero interest
buy
EMIs,
now, pay later.
Buy now, pay later. Those websites will entice you to say that you spend now, pay later, and these are zero interest rate. Nothing in life comes for free.
Yeah.
Okay, they're very smartly packaged offers to you that you don't realize that you're actually you're paying for it eventually. So these travel portals where you go in and you say that you go on a luxurious holiday, exotic holiday, and you just pay so much EMI. I think that's the problem that people are falling into. To say that, look, I'll go on a holiday now and pay it over 6 months out of my salary. I don't think, why don't you go for a holiday after 6 months?
Yeah.
I mean, accumulate it and save it up and spend, because holiday is certainly not a thing that you'd want to spend by taking a loan. I don't think that is even reasonably making any...
Set up a travel fund.
Travel fund, I mean, and travel is not something that you need to take a loan for. I mean, if you're falling into that zone, then there is something that you need to be careful about. You need some kind of guidance and consultation to come back out of this, because if you're going to spend on a holiday out of loan, that means your other priorities that are there in life are not going to be taken care of.
Okay, so we've discussed the quantum that your EMI should be, not more than in your income. We've discussed what type of loans you can consider taking. Let's also consider, if you have loans existing, how do you knock them off? And how do you dramatically reduce your interest cost? Obviously, by paying lump sums, but some people have also talked about paying one extra EMI every year. It's a simple concept. A lot of people diss it on social media. I've seen this as well. But it is a powerful concept when it works.
Absolutely. So it's nothing, no rocket science. I mean, we as Indians have been, have grown up with these money habits.
Yes.
Quite honestly, even if you're a family of engineers, still your parents will be telling you to be prudent with your money.
Yeah.
So they will tell you that, don't spend XYZ amount. If you've taken a loan, try and repay. So that every time that a person gets an increment in the salary, why don't you ever consider increasing your EMI? Okay, so you fixed your EMI at the beginning of taking the loan. And that is for, say, probably 15, 20 years. Why don't you go back to your banker and say, look, I want to increase my EMI by 10%.
So bankers are not going to thank me for saying this, but a lot of them will say, increase your tenure and not your EMI, because over the course of a longer tenure, your interest cost goes up.
Absolutely.
So the bank earns more.
We just discussed this. Over a period of 20 years on a loan of 1 crore, you're paying 1 crore 16 lakhs as interest.
Yeah.
So obviously, you're paying more than the principal that you borrowed. So you need to go back to the bank and say, look, I want to increase my EMI by 10%. Let the interest rate be constant. I mean, the tenor be constant. Let me just increase my EMI. The other concept very popularly is that instead of 12 EMIs in a year, you pay 13 EMIs.
Yes.
Because you get a bonus, you get a performance-linked incentive, you get those lump sums. So just go and prepay, one additional EMI every year. You see the magic when their tenure reduces considerably by just one additional EMI. Or additionally, when the interest rates are going to fall, and then an offer comes from the bank saying that, look, hey, the interest rate has fallen. Do you want to reduce your EMI? No, you keep your EMI constant. So automatically the tenure of the loan will come down. So you'll be able to repay that loan faster. The net interest burden on you will come down.
Yeah.
So of course, you need to evaluate well within whether it's a productive loan or an unproductive loan, all those kind of things.
The last thing I want to talk about is a lot of people are still on the marginal cost of funds lending rate, MCLR, which was used after the base rate regime, because it was felt at that time by the Reserve Bank of India that banks were not passing on the interest cuts and raises that they were doing, more raises than cuts, or more cuts than raises rather. And now it is the benchmark linked prime lending rate. And so therefore, a lot of people are being incentivized or being asked by their banks to switch over to the benchmark linked rate because it resets every month.
Correct.
How do you decide when you want to shift? Because MCLR does not reset very quickly.
So RBI has been prudent on this context to whip the banks on this to say that, look, you keep coming to us and saying the interest rates are high because of which XYZ, we're not able to lend and all those things. The moment RBI reduces interest rates, they'll be very, very notorious in passing it down to the...
Very quickly.
Yeah, they're very notorious in that. Let me put it without mincing words. I mean, they don't very, wholeheartedly pass
when
it on to the...
When they raise interest rates, they do very quickly, and when it's going down, they don't.
They don't do that at all.
Yeah.
So it's on the borrower to be prudent enough to go back to the bank and also flash the credit score that you have, that, look, I've been honest and I've been paying everything well. Then why aren't you offering that benefit to me?
Yes.
Now, the two choices, the banks do not pass on entirely. The other is, then otherwise you have to move your loan to another...
You can shop for a loan.
Yes, but there's a cost to that. So there's a processing fee. Then you have to evaluate whether that cost of moving the loan...
It's usually a percentage of the remaining
about
principal.
0.25% odd. Plus there is a process to follow, right? There's there's going to be a whole lot of things to do. So it's not the most ideal situations to be in, right? Because there is a cost incurred. So then you have to get into the cost benefit analysis. That if I'm incurring that lump sum cost against the interest that I'm going to save over a residual period of time, is it worth it or not? So moving to anything that helps you save interest, okay, and if it's more efficient way of transmitting the reduction in interest rate to the end borrower, I think you should be prudent enough in doing that. So if you're asking your borrower to move from MCLR to the benchmark linked rate, yes, I mean, most certainly go ahead and ask your bank to do that for you. If there is a cost, sit back and evaluate whether that cost benefit analysis makes sense or not. If it does make sense, then please do that, because every interest that you're going to save is as good as money earned.
Absolutely.
Right, and over a long period of time, it's like compounding. So you're compounding a negative impact of high interest rate. So might as well have it reduced to as much as you can.
Yeah, we often talk about compound interest and the compounding of your wealth over a period of time. Not very often do we talk about the compounding cost of interest. All right, so Harsh, hopefully we've given our viewers some perspective on how to manage their interest costs, because really we speak about compound interest and what you earn, but often you don't talk about what you incur, and that is also compounding, as Harsh has pointed out. Now, it's time for a special segment on this show, and I like to call it Money Monday. This is where we speak to one lucky viewer and we ask them what their foremost financial goal is. My guest today is Kamal Sharma. He's joining us from New Delhi. Kamal, thanks so much for joining me today. And what is the goal that you've selected? You've shared with me that you want to retire in 10 years. You are 34 years old. Why do you want to retire so early?
Okay, so thank you, Alex. So currently I'm 34, sir, and I want to retire at an age of 45. So by that time, so it's been 11 approximately years. Right. I want a corpus of 50 lakh for something to build. I have a property of mine in my hometown, right? And I want to invest some money wherein, so I heard of a lot of things about SWP. I wanted to know the entire concept of it. And if I can invest some money for 11 years so that I can get a lakh or 1.25 lakh every month for managing my expenses. So that's what the idea is.
Okay, so Harsh is going to help you out, and please know that over the course of the next few minutes, the stage is set for you to ask as many questions to Harsh as possible. I'm just going to lay the context and then open it up. So you were 34, your goal is to retire in 11 years at the age of 45. You are married, your wife is also earning an income. Your monthly income is 2 lakh rupees, your expenses stand at 1.25 lakh rupees, and your monthly investments are at 55,000 rupees. You're currently investing in mutual funds as well as in the Sukanya Samriddhi scheme and the voluntary provident fund. So you're upping the amount that you put in the provident fund every month. The Provident Fund corpus currently stands at 15 lakh, savings account is 1 lakh, mutual funds is 5.5 lakh rupees. You live in your own flat and your current liabilities stand at a 39 lakh home loan, a vehicle loan of 6.5 lakh and a personal loan of 1 lakh. So I've set the context. Harsh, over to you.
Yeah, hi Kamal. Very quickly, if I just do some basic calculations, okay, because you mentioned that you want to retire at the age of 45. Right. And so there is going to be required, and you said you need every month about 1.25 lakhs, the amount that you're spending today. So if I just do some basic calculation, assuming a 7% inflation, so that 1.25 lakhs, we are taking it adjusted to inflation at the age of 45, and thereafter, I'm taking a life expectancy of approximately 80 years. So what I'm only trying to do by this exercise is to ensure that you have a cash flow up till your age of 80. Okay?
Okay.
And if you were to look at, as I said, the monthly expense of 1.25 lakhs, you'll require approximately 10 crores at your age of 45. Okay? If you can accumulate that corpus of 10 crores by the age of 45, that means that you can look at retirement, assuming that you'll get an inflation adjusted cash flow of 1.25 lakhs every month up to your age of 80. At 80, the entire corpus will exhaust. Okay, so you'll not be left with anything at your age of 80. Now to accumulate this corpus over a period of 11 years, if I assume an investment return of approximately 12%, every month you will have to contribute about 3.6 lakh rupees. So wherein you're currently investing approximately 50 to 60,000 per month, this per month investment goes up and goes up to 3.6 lakhs per month.
I'm curious about what you think, Kamal. When Harsh says 10 crore is what you need to set aside over the next 11 years, is that a number that you had contemplated?
No, 10 crore is way beyond my expectation. But at the same time, you said 80 years of age, sir. I don't think so we'll be able to live up to that. Considering we are staying in Delhi and Delhi is so polluted, going by the trend, we're gonna die by 65. So that's what I am aiming. I'll be alive till 65. So that's how I am calculating.
But okay, Kamal.
So down the line 20 years, if I start from 45, so if you can calculate that and probably tell me then.
Okay, so that's a fair point. But here's my question to you, Kamal. Yeah. You're aiming for 65, right. But assuming that there are a lot of technological changes and we move towards cleaner energy and various other things take place, which we don't know right now, right?
Okay.
What if your life expectancy is not 65 and is actually 80? At that stage, you're not going to have the ability to say, hey, I need more money, right? Because you're not going to be able to go back to work. Is that not difficult?
So, Alex, in that case, I'll increase my retirement life. I'll take retirement at the age of 50, or I'll probably go up to 55 in that case.
So you'd be willing to stretch. Okay, Harsh, I think that is what you're talking about.
Yeah, yes. So in fact, Kamal, I also want to highlight this point. So while you mentioned that, you don't see yourself living beyond 65, I wish and I pray to God that you have a long life. I mean, you should not think of it in that direction. But nevertheless, from a planning standpoint, when you plan for things, plan as if you're going to live forever. So in case you were to live, as Alex said, that you go beyond 65, then what are you going to do at that point in time? It's always good to have a provision up to age 80. And in case something happens earlier, then fine, then you got something left for your family to inherit in that case. Imagine a situation that in this case, I'm even more concerned, given the advancement in medical sciences, given an advancement of technology in that context that doctors don't let you die. They'll put you on ventilator till the time they can. So imagine a situation where you go beyond 80. So I was worried about a question you would throw at me saying that, hey, this is only till 80. What if I live beyond 80? So you pleasantly surprised me, at least in that context, to say that 80 is way beyond your expectation. But anyways, now since you also mentioned that you're willing to extend your retirement age, so I did another set of calculation for you too, which brings things within the comfort levels. So if not 50, I'm going to be disappointing you to say that, look, why don't you just go all, the entire mile, you walk the entire mile, say 58 or 60. So if you were to retire at 60, then what the scenario looks like. Okay. Pardon me to, absolutely, dishearten you with this kind of extended work life. But in case you were going to work until 60, then the retirement corpus that you need at that point in time is not 10 crores, but it's going to go up to 17.5 crores. Okay, but don't be disheartened. Let me give you the good news now. Now, to accumulate this 17.5 crores every month in place of 3.6 lakhs, which was the earlier case, you need to now only put 83,000 rupees per month up till your age of 60 to accumulate 17.5 crores. So 83,000 rupees investing every month is still within reach, as I understand. If not immediately today, but going 1 or 2 years down the line, as your income increases, make sure that you increase your SIPs. So that seems to be a much better equation for you at this juncture.
Is that possible for you, Kamal?
No, definitely. Down the line, 1 or 2 years, that is possible. I can manage that.
Fantastic. And of course, what Harsh has not spoken about is you have 2 lakhs of income. We've just on this show discussed how you can get rid of certain loans. If you can get some of your loans out of the way, and if you can increase the amount that you set aside, you can actually shrink the time that you need to work quite considerably, because you have a sizable income. If you increase the amount of that income that you set aside every month, I'm sure you can save a bigger corpus. But it's been a fascinating conversation. Thank you so much for that glimpse into your life, and hopefully this conversation has been beneficial to you.
Definitely, Alex. Definitely.
Thank you so much.
Thank you so much.
And thanks so much, Kamal, and thanks so much, Harsh, for joining us in the studio. And thank you for watching the first episode of Your Money Matters. Do stay tuned. This is NDTV Profit.
On my face. Chalo, chalo, chalo. How do you define a disruptor?
The idea was, why should we charge differently? We should probably charge the same.
What's the idea to change things down?
People would be scared to put 50,000 rupees with us, right? But today, we have customers who put 500 crores with us.
What was your biggest challenge?
Did not have enough money in the bank to even meet the payroll.
What are the lessons that you've learned from the mistakes that you saw being made?
Didn't want to dilute their stake and therefore, ran out of cash.
Think you know what success looks like? Think again. Meet the disruptors, those who dare, dream and defy.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first to buy
all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target. It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings. Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
On my face. Chalo, chalo, chalo. How do you define a disruptor?
The idea was, why should we charge differently? We should probably charge the same.
What's the idea to change things down?
People would be scared to put 50,000 rupees with us, right? But today, we have customers who put 500 crores with us.
What was your biggest challenge?
Did not have enough money in the bank to even meet the payroll.
What are the lessons that you've learned from the mistakes that you saw being made?
Didn't want to dilute their stake and therefore, ran out of cash.
Think you know what success looks like? Think again. Meet the disruptors, those who dare, dream and defy.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company?
पूरे दुनिया को एक गौरवशाली क्षण प्राप्त होने जा रहा है जब ऐतिहासिक कुंभ होगा। इतना दिव्य, इतना भव्य, इतना नव्य, इतना निर्मल कुंभ की अब तक लोगों ने अपनी आंखों प्रयागराज का एक एक कण सजेगा, एक एक कण बोलेगा हर हर गंगे महाकुंभ चलो।
Where there is dharma, there is power, prosperity and respect.
इतना बड़ा समागम होगा तो स्वाभाविक रूप से अगर आध्यात्मिक और सांस्कृतिक चेतना का जागरण होगा तो सामाजिक एकता का भी वो प्रतीक होगा और आर्थिक समृद्धि की भी एक बेहतर रोड मैप को आगे बढ़ाने का भी वह मार्गदर्शक होगा।
For approximately 43 days, the flag of this dharma will flutter on the sacred banks of the Sangam in Prayagraj, embodied by the different akhadas, their camps, and the ascetic practices of the sages who have come for the holy dip during the Mahakumbh.
महाकुंभ की परंपरा का सबसे अहम पहलू ये है कि इस दौरान देश को दिशा मिलती है। कुंभ के दौरान संतों के वाद में, संवाद में, सार्थार्थ में, शास्त्रार्थ के अंदर देश के सामने मौजूद अहम विषयों पर, देश के सामने मौजूद चुनौतियों पर व्यापक चर्चा होती है और फिर संत जन मिलकर राष्ट्र के विचारों को एक नई ऊर्जा देते थे, नई राह भी दिखाते थे।
These akhadas have a rich history, traditions and values. Their stories of strength are unparalleled and extraordinary because these akhadas and monasteries were established to protect dharma.
महाकुंभ मेला है, ये विश्व का सबसे बड़ा मेला है। करोड़ों की संख्या में श्रद्धालु विश्व स्तर से यहाँ संत महापुरुष जनमानस यहाँ इकट्ठा होते हैं और जो ये व्यवस्थाएं हैं, सुविधाएं हैं, जो प्रमोशन है कुंभ मेले का और सनातन का, सब सुचारू रूप से सुविधाएं दी जा रही है और मेरे हिसाब से जो ये विश्व का सबसे ऐतिहासिक कुंभ होने वाला है।
Shedding the attire of selfishness, these ascetics not only discuss and deliberate on scriptures, but also practice with weapons. This embodies the values of the akhadas.
ईश्वर की प्राप्ति के लिए वो अपने तन पे भस्म लगाते हुए, कहते हैं देवों के देव महादेव जैसे भस्म के अंदर लीन रहते थे, ऐसे हमारे तन तोड़े जितने भी संत नागा हैं वो भस्म लगाते हुए ईश्वर की प्राप्ति के लिए अपना सुमरण करते रहते हैं। आसमान के धरती के ऊपर, आसमान के नीचे वो कोई भी अपने ऊपर छाया नहीं करते, खुले में बैठते हैं। धूने अग्नि देव साक्षात रहते हैं, सभी देव उसमें विराजमान रहते हैं, उनके दर्शन करते हुए ईश्वर की प्राप्ति करते रहते हैं।
This time in Mahakumbh, all 13 akhadas are taking part. These akhadas exhibit diversity in their lifestyles, styles of meditation and practices, but they are united in their mission to protect and propagate Sanatan Dharma. In the 8th century, Adi Shankaracharya took on the mission to protect the nation, religion and culture. He called upon young men from Brahmin and Kshatriya families to contribute their intellect and valor to safeguard the nation and its culture, even forging armies for this purpose. Initially, there were only 4 akhadas, but now there are 13. The akhadas include ascetics from the Udasin, Shaivite and Vaishnavite sects. 7 akhadas belong to the Shaivite sect. 3 belong to the Vaishnavite sect. 3 belong to the Udasin sect. The rules for joining these akhadas are very strict. Ascetics are awarded titles based on their qualifications.
अरुण गुरु जी महाराज ने 1,11,000 गुरु महाराज
पूरे माने 12 वर्ष तक साधुओं की सेवा गृहस्थ करते हैं, किंतु कुंभ क्षेत्र में जब आते हैं तो साधु गृहस्थों की सेवा करते हैं। सारे जो गृहस्थ लोग हैं, जितने भी देश के भक्त हैं, वो सब साधु पुरुषों के पास आते हैं, अपने गुरुओं के पास आते हैं, स्वामियों के पास आकर के ठहरते हैं, तो वो व्यवस्थाएं सारी उपलब्ध साधु कराते हैं।
The flame of faith in dharma burns so brightly that today nearly 70% of these ascetics are doctors, engineers, professors or highly educated individuals.
कुंभ क्या है कि भाई संस्कृति का ही तो उत्सव है ना ये, ठीक है ना। सारी भारतीय संस्कृतियाँ सारी यहाँ पे, ठीक है ना। तो उनके आधार पे अगर आप देखोगे तो जिसको जानना है आकर के देखो तो सही कि भाई महात्मा किसी एक व्यक्ति विशेष के या धर्म विशेष के नहीं है, महात्मा सभी के लिए हैं। अब मनुष्यता के लिए महात्माओं का जीवन है, ठीक है ना। अपने लिए होता ही नहीं है उनका। आप उनसे बैठ करके बात तो कीजिए, उनसे आप मिलिए तो सही। और यही काम जो है ना सरकार ने किया है कि लोगों के बीच में और महात्माओं के बीच में जो दूरी थी वो किसने कम की है? सरकार ने कम की है। इसमें मैं आपको कहूँ कि कोई ये कहे ना कि भाई महात्माओं को ये दे दिया वो दे दिया, वो नहीं। मैं उसमें कहूँगा कि दे दिया ना वो भी बेकार था, लेकिन जो सबसे सुंदर काम सरकार ने किया है कि पब्लिक का और महात्माओं का जो कनेक्शन था, जो दूरियां बनी हुई थी, उसको जो तोड़ा है वो किसने तोड़ा है? सरकार ने तोड़ा है।
Among these akhadas, Juna Akhada was formed in response to the betrayal of the Nizam of Junagadh. Its original name was Bhairav Akhada. The ascetics of this akhada once forced the Nizam of Junagadh to surrender. Their valor even defeated the Mughal army. The Nizam invited the ascetics for a treaty, but conspired to poison their food, killing many. Those who refused the poisoned food survived and later formed Shri Panchadashanam Juna Akhada. It is the first monastery of the Shaivite sect and the largest among the 7 Shaivite akhadas, with over 5 lakh Naga sadhus. The first monastery of this akhada, established in Karnaprayag, Uttarakhand, still stands as evidence. On Makar Sankranti, the Sangam's waters turn divine. The Mahakumbh begins with the ascetic's holy bath.
कि हम इस क्षण में इस भूमि पे अपने जीवन के इन विशेष पलों का आनंद ले रहे हैं। उस परमपिता परमात्मा की छत्र छाया में पूरे भारत देशवासियों के लिए मंगल कामना करने का और विशेष पूजन अनुष्ठान जो हमारी सनातन संस्कृति में रीति रिवाज बताए गए हैं, उनके अनुसार इस कुंभ मेले का आगाज कर रहे हैं। और इस कुंभ मेले का आनंद तो सबसे बड़ा यही है कि हम लोगों को काफ़ी समय हो जाता है आपस में मिले जुले, और कोई बंगाल से, कोई हरियाणा से, कोई पंजाब से, कोई दिल्ली से, कोई राजस्थान, कोई उत्तर प्रदेश के, मतलब पूरे भारत देश के कोने से साधु इकट्ठे होते हैं। और हम लोगों का तो मिलना ही एक हमारा कुंभ मेला होता है। और फिर सब इकट्ठे होकर के हम सामूहिक यज्ञ अनुष्ठान पूजन विधि परंपरा से करते हैं।
The ascetics of these akhadas have arrived in Prayagraj for the Grand Mahakumbh. Operating like a military regiment, their first holy dip will take place on the auspicious occasion of Makar Sankranti, a day believed to transform the confluence's waters into nectar.
मकर संक्रांति को ही
सभी नागा सन्यासी मिलकर के जो रोकने की कोशिश हुई थी, तो उस समय पे उनके उस प्रतिकार करने के बाद ये पुनः पर्व की स्थापना की और उसी की याद में ये मनाई जाती है कि हम पर्व तो करेंगे ही करेंगे। हमारा पर्व जो है ये अक्षुण्य है, इसे खंडित नहीं किया जा सकता है। हम चाहे मुगलों का शासन हो, चाहे कोई भी शासन हो, कुंभ के मेले हमेशा चलते रहे।
अखाड़े, उदासीन संप्रदाय और जितने भी संत समाज हैं, वैष्णव हैं, सन्यासी हैं, सब लोग संत हैं जो भगवान के भजन में अपना जीवन को अर्पण करके उस परमात्मा का भजन करते हैं, जिससे जगत का कल्याण हो, देश का कल्याण हो, नगर बस्ती का कल्याण हो। ऐसा उनका है जो अपने अंदर धारणा और संकल्प होता है, उसके अनुसार है ही हम परमात्मा का भजन करते हुए सारे कर्मों को करते हैं। उसमें हमारा पूजन भी है। पूजन का मतलब समर्पण भाव। जब तक हमें परमात्मा के समर्पण भाव नहीं होंगे, जब तक हमारी पूजा मान्य नहीं होगी। उस परमात्मा को हम समर्पित होकर के जो भी हमारी व्यथाएं हैं, कष्ट है, जब उनके हम समर्पित करते हैं तो हमारे कष्ट भी दूर होते हैं।
Over time, the traditions of these akhadas have grown richer, now including Kinnar or transgender and women's ascetic akhadas. The women's akhada is dedicated to promoting a non-discriminatory banner of humanity and emphasizing the worship of Shakti, the divine feminine power. The saying, Yatra naryastu pujyante Ramante tatra devataha, where women are worshipped, gods reside, reflects the spirit. This sentiment is evident in the Mahakumbh, where even a female Mahamandaleshwar or spiritual leader is chosen, popularly known as the Mai Bada. The women's akhada is part of the Dashanam Sannyasini tradition. Dalit women are initiated without discrimination. Remarkably, the Nirvani Akhada appointed 8 foreign women as Mahants during the last Kumbh Mela.
एक महीने तक निरंतर यहाँ पर साधनाएं के साथ साथ में यज्ञ, तप, हवन, प्रवचन, कथा, संत सेवा, गौ सेवा और भंडारा, जो साधु भिक्षा ले करके अपने जीवन को प्रारंभ करता है, वो ही इस समय कुंभ में ना कहां से जाकर के भिक्षा इकट्ठा करता और आकर के यहाँ पर उन गृहस्थियों को खिलाता है जिनसे वो लेता है।
The Kinnar Akhada, making its first appearance at the Mahakumbh, is a significant attraction. The Kinnar Akhada first joined the Ujjain Kumbh in 2016. The Akhada was established in October 2015 at Adhyatma Vatika, Hasampura, Ujjain. In 2019, the Kinnar Akhada entered Prayagraj alongside Juna Akhada. However, this will be the first time the Kinnar Akhada participates in the Mahakumbh. Postal stamps have even been issued for the Kinnar Akhada. Akhada's procession adds grandeur to Mahakumbh. Crowds gather for blessings from ascetics. All eyes are now on the grand Akhada processions in the Mahakumbh, where devotees gather to seek blessings from ascetics. For these ascetics to take a holy dip at the confluence is the most important thing for which they have waited for 12 years. This period is considered equivalent to an epoch in Sanatan tradition. Royal baths enhance spiritual energy of the confluence. 6 major royal baths in Mahakumbh. The royal bath is the centerpiece of the Kumbh Mela. Gaining even greater significance during the Mahakumbh. These processions involve saints, ascetics and their disciples heading towards the ghats with utmost devotion and faith. A royal bath is believed to amplify the sanctity of the confluence's waters, drawing pilgrims and ascetics to take their first dip in these sacred waters. This bath also enhances the spiritual energy of the Sangam. However, it is not just a spiritual celebration, but also a celebration of India's unity and integrity, which is made successful by the people of the Akhadas who have come from every corner of the country. It embodies India's rich traditions and devotion. The preparations for the Akhada's royal baths are now such that January 13th, Paush Purnima, Mahakumbh begins, marking the start of Kalpavas, intense spiritual meditation. January 14th, Makar Sankranti, a day symbolizing new transitions, considered highly auspicious for holy dips. January 29th, Mauni Amavasya, most significant bath day for spiritual purification and silent vows. 3rd February, Basant Panchami, celebrating the goodness of wisdom, Saraswati, with a dip symbolizing joy and new perspective. 12th of February, Maghi Purnima, 5th royal bath fulfilling spiritual aspirations. And 26th February, Mahashivaratri, the final royal bath, marking the conclusion of the Mahakumbh with prayers for transformation and divine energy.
मुख्य स्नान के दिन कोई भी प्रोटोकॉल नहीं होगा। पूज्य संतों के लिए, श्रद्धालुओं के लिए यहां पे स्नान की व्यवस्था के लिए सभी लोग लगेंगे। सभी स्नान पर संतों के स्वागत के लिए, श्रद्धालुओं के अभिनंदन के लिए सरकार के स्तर पर, मेला प्राधिकरण के स्तर पर पुष्प वर्षा की व्यवस्था भी रहेगी और उसके लिए हम लोग पूरी तैयारी कर रहे हैं, क्योंकि ये दुर्लभ संजोग है। उस दुर्लभ संजोग के साक्षी बनने के लिए देश और दुनिया से जो भी श्रद्धालु आएगा उसको उस प्रकार का अवसर मिलना चाहिए। प्रकृति और परमात्मा की कृपा से, भगवान प्रयागराज की कृपा से, द्वादश माधव की कृपा और मां गंगा और मां यमुना की कृपा से ये पूरे कार्यक्रम सकुशल संपन्न हो।
इंसान तो छोड़िए, देवता भी इस माघ के मेले में आते हैं स्नान करने के लिए, ऐसा कहा जाता है। तो ये बहुत ही हमारे लिए तो गर्व की बात है कि इस योगी और मोदी जी के व्यवस्था वाले कुंभ में हम लोग यहाँ पे स्नान वगैरह करेंगे, तो ये आनंद की बात है और बहुत ही भव्य दिव्य कुंभ होगा और तैयारियाँ बहुत चली रही हैं। अधिकारी यहाँ के पूछ रहे हैं, हमें अधिकारियों के पास नहीं जाना पड़ रहा है, अधिकारी हमारे पास आ रहे हैं। हालांकि 19 में बहुत अच्छी व्यवस्था बनाई हुई थी, हमारे जीवन का 19 से अच्छा कुंभ पहले कभी था नहीं और मुझे लगता है ये 19 से भी बहुत अच्छा कुंभ होगा।
Where millions of devotees will arrive, it will not be possible for everyone to bathe at once. Separate arrangements have been made for the akhadas. Royal ghats have been constructed that will be reserved for saints and akhadas during royal processions. General ghats will be open for the public throughout the Kumbh. Special devotee ghats have been constructed for the senior citizens and differently abled pilgrims. With a final holy dip on Mahashivaratri, this grand spiritual event will come to an end. Leaving the sacred waters of the confluence to keep the essence of Dharma alive for the next 12 years.
देश और दुनिया प्रयागराज कुंभ में आने के लिए उत्सुक है। उत्तर प्रदेश और देश के इस सबसे बड़े आध्यात्मिक और धार्मिक समागम को अपनी आंखों से देखना चाहता है। 144 वर्ष के बाद महाकुंभ का यह मुहूर्त आ रहा है और इस महा समागम का साक्षी देश और दुनिया बनना चाहता है।
तन मन धन सब
मैया, चरणों में अर्पित है श्रद्धा का भाव लिए, द्वारे पे आया हूँ जननी ये विनय मेरी, मैया ये विनय मेरी, तेरे द्वारे आया हूँ मैया ये विनय मेरी।
On my face. Chalo, chalo, chalo. How do you define a disruptor?
The idea was, why should we charge differently? We should probably charge the same.
What's the idea to change things around?
People would be scared to put 50,000 rupees with us, right? But today, we have customers who put 500 crores with us.
What was your biggest challenge?
Did not have enough money in the bank to even meet the payroll.
What are the lessons that you've learned from the mistakes that you saw being made?
Didn't want to dilute their stake and therefore, ran out of cash.
Think you know what success looks like? Vikas Khemani joins us now on Talking Point this morning. He's founder Carnelian Asset Management and Advisors. Vikas, very good morning to you and great to speak with you here on NDTV Profit. Are you feeling the 2025 vibe yet? Or is the 2025 vibe unfortunately not very positive at the get-go?
Morning, Tamanna. Wish you a happy new year. So I think, of course, we have to start the year, going forward. We have to look forward. So 2025 already started, and I'm sure, a lot to look forward to. Like every year, I am an optimist. I keep looking for things in a very optimist way. But just turn of the calendar doesn't change much. You have to do the same work. Keep looking at the businesses. Keep looking at the managements, and keep identifying companies. So work doesn't change. Just year changes.
No. So having said that, Vikas, curious to know what you've made of the business updates that have come in so far. And let me start with BFSI, HDFC Bank, and a whole list of financials which are coming in. I would say that the good thing is, perhaps, or what's working for them is that expectations are already low. But do you see this as a further negative, the initial updates that you've seen, especially in HDFC Bank, where you see a growth of 3% year on year?
So I think, in HDFC's case, we know that they have to go through this transition. There's no alternative to that. And I think we've been saying this for 4 or 5 years. And, this will still go through for some more time. But it is not industry specific. It's a company specific thing. And what they are doing is right for the company. But in general, specific, I think last year banking and financials were not as great, especially the banks. I think this year would be probably much better than last year. Most of the pains is behind. A lot of like you rightly said, expectations are low. But our largest holding, in banking space is ICICI Bank, which has done well throughout last year. We own Federal Bank, which has done very well last year. So out of top 3, performing banks, we own 2. So I think again within the same sector, you got to find companies which you like, and I'm sure there will be winners within this space as well. In 2025.
In terms of IT, and let me talk to you a bit about IT. TCS reports this week, Infosys next week. IT turned out to be one of the dark horses, I would say, in a sense, for 2024. If I look at it overall, you're looking at an interesting time next few weeks with Trump coming in, etc. Would you say that the turnaround that the street has been waiting for in IT is finally coming in, Vikas?
We've been quite positive on IT sector for many years, including last year. Like IT was one of the very well performing sector for us in our portfolios. It contributed to significant alpha. So I always believe that real money is made when you talk about beyond narratives. I think IT has a lot of legs to grow. I think people look at set of 3-4 companies and say IT is not doing well. But within IT spaces, there are many companies which are growing at 15-20%. I mean, last year we owned Cyient, eClerx, Negen. So I think a lot of companies have been kind of, which has done very well for us. So, and I think IT as a sector has long legs to go. Very clearly, three things. IT in India will continue to do well. There are three drivers: constant technology disruption, aging population in the global parts of the year, and our market leadership. If you see this, they are not changing, and they will continue to provide significant growth. And in my opinion, IT is a very sticky, nice, safe sector to grow. And as US environment changes, as the growth prospects with the new administrations get better, I think it can only get better from here, according to me.
IT can only get better from here, according to Vikas Khemani. But then would you go for the top line IT names, the big three or the big four, or would you look at more mid-cap kind of names?
Like I said, I think you look at individual business models where you can get conviction around growth of 15-20%, which probably large companies might be finding it hard to sort of deliver. So again, you pick you don't have to necessarily go after the large companies. Within that, last year what did well for us was HCL Tech Mahindra. They are large companies. So not necessarily, each companies go through its own transition. We've been focused where there could be, significant growth higher growth than the industry. And they tend to be a lot more in the tier 2 or slightly smaller companies. But again, not to say that large companies cannot grow. We keep studying every company, and whenever we see the growth is accelerating, we will buy them.
I'm wondering, Vikas, how are you looking at the big ideas in the markets this year? For anyone managing funds, I think this is a tougher time because you have to, first of all, I suppose, manage expectations. What are you telling your clients? What is the conversation and the questions that you're being asked right now? And what are the kind of returns that you're seeing possibly in 2025?
Tamanna, you raise a very, very pertinent question. In my opinion, right now, the biggest risk in the market is the risk of high expectations. I think given the fact in last 3-4 years we have done very well, investors' expectations have gone up significantly high. Investors have started believing that 20% return is very easy to come by, which is not the case, which is not a normal case. You might get in a pocket, but you can't get sustainably for a very long period of time. So I would again say that biggest risk is risk of high expectation. And given the fact that we are on a backdrop of a very large run-up and slightly challenging macro global environment, probably this year could be slightly muted.
On my face. Chalo. How do you define a disruptor?
The idea was, why should we charge differently? We should probably charge the same.
What's the idea to change things around?
People would be scared to put 50,000 rupees with us, right? Yeah. But today, we have customers who put 500 crores with us.
What was your biggest challenge?
Did not have enough money in the bank to even meet the payroll.
What are the lessons that you've learned from the mistakes that you saw being made?
Didn't want to dilute their stake and therefore, ran out of cash.
Think you know what success looks like? Think again. Meet the disruptors, those who dare, dream and defy.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first to buy
all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target.
Hi, I'm Tamanna Inamdar. Welcome to The Big Question, a new show on NDTV Profit where we discuss the most pertinent questions relevant to you. Questions that impact your life, your well-being, your wallet, and of course, our country. We aim to cut out the noise and get you well thought out views from the top experts in the field. We hope to explain what's actually going on instead of just throwing clickbait headlines at you. With that, let's begin our first show. 5 years after the world was left shaken by the COVID-19 pandemic, which claimed millions of lives and brought economies to a standstill, reports of another such airborne respiratory virus in China, the HMPV or the human metapneumovirus, has raised an alarm again. Now in India, concerns have further heightened today as we have confirmed the first 2 cases of the HMPV virus. 2 infants from Bengaluru have tested positive for the virus, a 3-month-old baby and another 8-month-old baby. Now, neither of these infants have had a history of international travel. According to the Ministry of Health and Family Welfare, both cases were identified through routine surveillance for multiple respiratory viral pathogens as part of ICMR's ongoing efforts to monitor respiratory illnesses across the country. As a precaution, surveillance has ramped up across several states. Delhi, Maharashtra, Telangana, other state governments have also issued guidelines to ensure preparedness for potential health challenges related to HMPV and other respiratory viruses. Meanwhile, China has tried to downplay the concerns regarding the virus and has called it a regular occurrence during winters. It has further dismissed concerns over travel to China, saying that the country is safe for foreign travel. The big question that we're asking today, one that I'm sure is on everyone's mind, is are we in for another global pandemic-like situation, and how worried should we be? To speak on this, I'm joined now by Dr. Rakesh Verma, Principal Consultant at the Ministry of Health. Dr. Verma, thank you so much for speaking with us today on The Big Question. Let me pose that directly to you. How worried should we be about this new virus? First of all, is this as easily spreadable? Is it as infectious as COVID-19? Is it as dangerous as COVID-19? And I'll just add one more. What we're reading is that this HMPV virus is not new, it's been around. So why are we talking about it right now?
See, there are 2 kinds of virus. This is an RNA virus, which mutates, which shape changes it like a cricket, like a spider. It keeps on changing its fabric and profile. So this is which mutates very fast. It changes itself very fast. It's like movie films, heroes, heroines, stars. They keep on changing their dresses very fast. You can't recognize them. There are certain movies, one hero plays 7 roles, 11 roles, 12 roles. So this is a virus which is A shape today, could be A plus shape tomorrow, could be C shape tomorrow, and could have the changing properties. So that is the most dangerous thing. Yes, you are correct. It also spreads with the oral cavity, with the respiration. So with every cough, with every sneezing, an infected person can inflict the same disease to several people within a spectrum of 6 meters. That's why they say that we have to follow the same precaution. Now, considering whether it is the same virulent or same dangerous, the news from China is still very much restricted and is very much censored. But whatever we presume, yes, this could be as lethal as COVID virus was, because both belong to the same family. Third, your query was whether this virus was available or prevalent. Yes, it was prevalent, but not in that, it did not have that many pangs. Just like we have so many snakes around us, but all snakes are not dangerous. There could be natural snakes. Only certain type of snakes could be more dangerous. So while the virus was present in the atmosphere, but the current mutation is seemingly very dangerous, could be causing lethal.
Okay, let me come to that part because you're explaining this very well. You're saying that the current mutation of this virus, which has been around, is giving a bit of concern. The concern, once again, like it was last time, I'm sorry to say, is because not enough information coming in from China, and the information that's coming in, honestly, we don't know if we can trust. So that is the concern.
Information from the origin country was kept secret for months and years together. Until today, we do not know what was the actual beginning of it, how it spread. And whether it came from a laboratory or from a fox market or from meat market, we do not know exactly. Whatever tailored information that we get, we were trying to work on that information. So even now, there is an epidemic in that country, and the information is very well restricted. As a doctors also, we got limited channels to know, but whatever we come to know, it's not encouraging knowledge. We are getting scared, and possibly government must be taking all steps to keep its hospitals, its medical facilities ready for any such exigencies.
Okay, so what is the treatment, and is there a vaccine?
See, as of now, the treatment is the treatment of the symptoms. There is no direct medicine for killing that virus. We are treating only as and when the patient will come. We will treat the patient's fever, patient's symptoms, sneezing, cold and things. But there is no vaccine as of now available because we do not know which virus is there. We do not know what is affecting, what mutant is affecting. But as and when our laboratories are ready, they are geared up already, they are already making preparations. As and when we get the samples, possibly the vaccine development process will immediately initiate and do something good for the country.
And what is the testing mechanism we have right now? Can you tell quickly enough?
We were testing the throat swab, nasal swabs, and there's something known as PCR, or multiplex PCR test, which will be required. Those tests are available in our country, but making them more specific for this virus is time will tell. We have to modify our tests according to those viruses.
Okay, so just last point, Dr. Verma, is now what do people do? We all know the basic precautions of staying away from someone who has a cold, etc.
Remember all the same thing, irrespective of virus, irrespective of this virus or any other virus, we must maintain a social distance. Do not go to a crowded place. Avoid markets. If somebody is coughing and sneezing, request him to be alone, go away, use mask or use big towel while sneezing or coughing. One should not hesitate. And when you're going in public, especially train travel, bus travel or aeroplane travel, please use a mask. Do not hesitate in using a mask and keep a mask as close as you're keeping a handkerchief in the pocket and never hesitate. And avoid going into public where it is avoidable. And when you're going to public, do not hesitate if the hands are dirty or shake a hand with somebody or use your door handle which other people are also using. Do not hesitate in cleaning your hands with a good soap. Do not require a sanitizer always. A good quality soap will always be enough for sanitizing you and keeping you free from all these viruses.
Okay. So what we can hope is that as a people, as a nation, as a medical system, we have learnt our lessons and definitely we'll be better prepared.
I can only assure you that we are fully geared up. The government is fully geared up, and government at the highest level always looking 4 steps forward. And last time also our Honorable Prime Minister was monitoring the COVID situation, and this time would not be any different. But we don't want an epidemic. We certainly don't want an epidemic. We want to nip in the bud.
Yeah.
And maybe that this is the only isolated case and doesn't convert into pandemic.
All right. So we have to hope for the best. Thank you so much, Dr. Verma, for speaking with us today. On the big question today, we're also focusing on a key exercise that the government undergoes every year, the union budget. Usually, the budget is seen largely as an accounting exercise. The revenues and expenditures of the government are listed out and their future policy vision laid out. But this time, the budget is crucial. The big question we're asking today, can Budget 2025 give the Indian economy the kickstart we need? First, the context. Concerns about India's economic slowdown are growing. With GDP growth hitting a 7-quarter low and forecast revised downwards, the outlook demands attention. Remember, the GDP growth in second quarter of financial year 2025 has dipped to 5.4%, the lowest ever in nearly 2 years. Adding to concerns, the Reserve Bank of India has lowered its GDP growth forecast for FY25 to 6.6%, down from the earlier estimate of 7.2%. The lower GDP numbers come amid an already growing concern about reducing private consumption, with the middle class tightening their pockets. Retailers have also pointed out towards signs of a struggling middle class, a group that forms the backbone of consumer spending. Particularly the FMCG industry has warned of muted volume growth this year owing to price hikes and inflation. FMCG majors Dabur, Godrej Consumer have already warned of a slowdown in consumer spending ahead of their third quarter earnings. But all is not bleak. While a slowdown is being witnessed in the urban areas, rural demand continues to grow. The gap between urban and rural demand is also closing, as was shown through Household Expenditure Survey, which was released last week. The difference in average monthly consumption expenditure between rural and urban households narrowed further to 69.7% in 2023-24 from 71.2% in 2022-23. Even when it comes to vehicle sales, there are indications of a small car revival, with Maruti Suzuki recording its first small car sales growth in 20 months, pointing perhaps to a rural recovery and more spends at the bottom of the pyramid. With all of this, the big question today is how much trouble is the Indian economy actually in? Is this a temporary blip, as the Finance Minister Nirmala Sitharaman has said? More importantly, what can the budget do to kickstart the economy? With that, let me introduce our speakers for today. Rahul Bajoria, Head of India and ASEAN Economic Research at BofA Securities, joins us on the show. I'm also speaking with market veteran Ajay Bakka. Welcome to both of you, and thank you so much for joining us on the first episode of The Big Question. Rahul, let me begin with you. And I spent some time setting up the context of where we are. I want first your assessment as you see the state of the Indian economy, and whether you think that last GDP numbers we saw, were there a blip? Are you worried?
Thank you, Tamanna, and very happy new year to you and to your viewers. So I think it's important to get the context right. So, we have come through over the last few years through a fairly turbulent period, and despite that, the recovery out of the pandemic has been reasonably strong, and it's kind of showing signs of a fairly broad-based nature of recovery. Now, in that context, in 23-24 fiscal year, growth rates were surprising significantly on the upside. And what we are effectively seeing is a reversal of some of that dynamic, with excess savings in the system, particularly in urban areas, kind of starting to fade out. Policy tightening both on fiscal and monetary side having a negative impact, and then income growth also normalizing. I mean, is there a need to panic? I don't think so, but is there a need to also worry? I would say a little bit yes, because what we really need to see is that in the next 2 to 3 years, with the balance sheets being reasonably clean on the private sector side, both for corporates and for the banking system, household debt levels, while rising, still remain very low from a historical context, especially when we look at our peer countries. And so India needs to prioritize growth, at this particular point in time. With that particular dynamic, I think the budget becomes a very important exercise in terms of at least improving the sentiment. Now, from a 5.4% growth print, is that a natural steady state? Absolutely not. Already, partly because of festive spending, but also because of some recovery in industrial indicators, we are seeing growth momentum, particularly in high frequency data, improving, but it is still not at a point where we would say that, we are close to our trend growth rates of close to around 7% as the RBI has been flagging. So I think there is a need to do something as far as policy is concerned, but there is also no need to be very, very despondent as far as the new year outlook is there.
Very well put, Rahul. So we need to do something. What is that something then becomes the question. And also you've balanced it well, that there's no need to be despondent. The fact is, though, there has been a a slower growth clip than was expected. Let me come first to Mr. Baga on the basic question. Is this a blip in your view?
5.4 was a blip, but we won't grow as fast as we have grown. I would agree with what Rahul just said. The problem is that the compounded inflation has made the food basket quite expensive. There is not that widespread and employment generation that is needed, which would put more wage earnings into the economy. And with the monetary tightening, which started 1.5 years back, and we have not had any cuts. In fact, liquidity also has tightened despite the CRR cuts. There has been an overall slowdown. But I would say it's still a blip. It can be addressed. But rapid measures will be needed both on the fiscal and monetary front.
So, just on that point of employment, and I'll come back to you, Mr. Baga, on that, because the latest EPFO payroll data is showing an improvement in those numbers. Now, this is always a tricky one. The employment bit is always a tricky one because there's government data, there's EPFO data, and then there's private data coming in. Are you seeing employment as a concern, wage growth as a concern, or the amount of savings and amount of discretionary spend as a concern?
No, I would say the amount of savings and the discretionary spending, aggregate demand is down, but then when you cut it down to the second order, why is that down? The capital owners have done very well in the K-shaped recovery from the COVID times. The owners of the factors of production have done well, the labor has not done well. So when you're not able to increase the absolute level of wages, then the good way out is to create labor-intensive works, be it public works, be it private capex, bring in things like that, which generates employment and puts more money out into the economy. So I would say aggregate demand is down. Second order is that much employment has not got generated, nor have wages gone up as much as the inflation would have warranted. The government has done a good job in terms of the safety net with free food and other safety nets in place. We are not seeing starvation. We are not seeing those kind of things. But if you look at the government reports also, the amount of migration has reduced from the rural areas. So clearly that employment generation in the urban India is not happening, and the urbanization that's required at the pace that is required is not happening. And because of the K-shaped, Tamanna, the top 15-20% of the economy is doing very well. And that has masked the rest of the economy. But I would suspect that there is a big portion, big tail of the economy, which is not doing so well.
So the K-shaped recovery is something that we hear very often. And Rahul, before I come to you to the question on what should the budget do, I want to understand your take for our viewers on what is this K-shaped. Because we've been hearing about this K. It was a W first during COVID, that now has turned into a K. And the sense is, the basic premise is that the rich are getting richer and spending more, the poor are spending less. So premium goods are moving faster than, say, basic soaps and shampoos and oils, etc. Are you seeing any clear evidence of this K-shaped in India? And what, in your view, is the K-shaped recovery in the Indian context?
Yeah, so Tamanna, I mean, this K-shaped recovery narrative was largely a function of the savings differential, that kind of built up during the pandemic between the haves and the have-nots. And, as Ajay rightly said, that the government played a very important role in kind of putting a floor on the degradation and the deprivation of livelihood, that kind of came through during pandemic or could have resulted in significant losses. But, what we are seeing now is that there is a convergence as far as income growth is concerned between the upper echelons of the employment generation scheme and also at the bottom of the pyramid, right? So you are seeing that convergence, but obviously it's a function of that, okay, you can have higher income growth at the lower levels, but that goes into more basic consumption of necessary goods. I think what we really see is that the discretionary spending items are where, you are starting to see either capacity issues or you are starting to see a lack of interest in consuming, because a lot of that consumption has been front loaded as well. I mean, what has also not helped is that in the last, say, 3-4 months, we have had a lot of equity markets, down performance, which is also having maybe some negative wealth effects within the system, which is not something that we have seen in the past cycles. So I think while, the K-shaped recovery has been converging back to each other, that convergence has sort of happened on income levels, growth rates, but the level of incomes are so widely different that it will not, result in complete offset of that downward momentum in urban consumption being completely offset by, the recovery in the rural consumption.